June jobs report, which reflects the U.S. labor market remains tight. All eyes now on the June inflation data due this week. Stocks in the Asia-Pacific trade mixed this morning, while the Gift Nifty is indicating a slightly lower start for the Indian market. Chinese consumer prices unchanged in June, while producer prices also come in weaker than expectations. Oil prices rise around 3% on Friday to hit a 9-week high. Brent settles at over $78 a barrel as supply concerns outweigh fears that rate hikes could slow down economic growth. And Reliance will reduce share capital in Reliance Retail and make the subsidiary fully promoter-owned by paying shareholders 1,362 rupees a share. Reliance has also fixed the 20th of July as the record date for the demerger of financial services arm Reliance Strategic Investments, which will be renamed as Jio Financial Services post the listing. Reliance shareholders will receive one RSIL share with a face value of 10 rupees for each share of Reliance Industries held by them. And torrential rain brings a large part of North India to its knees. Delhi and Noida shut schools while offices have been asked to work from home. The Beas River overflows due to heavy rainfall in Himachal Pradesh, washing away roads, bridges and cars in the district of Mandi, while at least 20 people have lost their lives. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we have for you this morning as we kick things off on a brand new trading week. There's a lot to track, especially in terms of data that has come through from the global markets as well as what we're tracking this week. But first up, let's take a look at the Asian markets. You know, a lot of them have recovered in the past 10-15 minutes or so, so it's largely positive across Asia. We have Nikkei, which is in the red, around 0.7% in the red, but the rest of the Asian markets are doing just fine. So gains this morning led by the Hong Kong market. So the Hang Seng Index is up 1.7%, over 300 points over there. You have the Taiwanese markets, which are trading with a gain of around 0.4%. So looking quite all right there as well. Kospi, not much going on, but around 0.25% in terms of a gain. Shanghai, similar. So, you know, largely positive start for the Asian markets, but it has seen quite a recovery in the past few minutes. The Gift Nifty will be up for you as well. That is indicating maybe a little bit of a subdued start. We're around 24 points in the red for the Gift Nifty right now. That's what's happening across Asia. But let's talk about the US and in fact the big cue from the US that we were mentioning, which is that non-farm payrolls, this is for the month of June, saw an increase of 209,000. So this is lower than the expectations that, you know, the street was working with of 240,000. So it was really the government hiring-led growth which we saw this time around, followed by healthcare, social assistance and construction. That's what came through in the June report. And the unemployment rate also has come in at 3.6%. However, wages grew by 4.4% on a year-over-year basis, which is slightly higher than what was expected this time around. We now have CNBC's Rick Santelli who's here to bring us up to speed with all of the highlights there.
209,000 on the non-farm payrolls for the month of June. 209,000. That is the lightest level, and I have to go on the way back quite a ways. That's the lightest level since December of 2020 when it was minus 268,000. If we look at manufacturing payrolls, they were up 7,000. The unemployment rate dropped from 3.7, and we all know that was the highest since Feb of 22. That was last month, to 3.6. So it moderated, but it's definitely still above the 3.4 that we had in April. And of course, we understand that the unemployment rate is something that the Fed's going to pay close attention to. Average hourly earnings up 0.4%, hotter than expected, matches April. You have to go all the way back to July to see it up more when it was up 0.5. That was July of last year. And if you look at average hourly earnings year over year, they were up a whopping 4.4%. This is the new metric against inflation for many. It's the wage component, up 4.4%. It equals April. You have to go to February of this year to see it higher at 4.7. So even though it's come down a bit, it was 5% in November of last year, it is still definitely above the last several months, which was 4.3, 4.4, and 4.3, as you see. So we're hovering at that zone. And if we look at hours worked, 34.4, a tenth hotter than both what we were looking for and what was in the rearview mirror.
All right, Rick, thanks a lot for getting us all of those numbers. In fact, let's also listen into what Chicago Fed President Austin Goolsbee, as well as former Fed Vice Chair Alan Blinder, made of the jobs print this time, as well as their expectations from the Fed's next move. Listen in.
What the Fed's overriding goal right now is to get inflation down. We are going to succeed at it. And to do that without a recession would be a triumph. And that's the golden path. And I feel like we're on that golden path. If you take a step back, it's clear the job market is still very strong, but is cooling. If you look at the ratios of vacancies to the number of unemployed workers, for example, it's definitely coming down. We're getting to a more sustainable pace, which is what we need to do for inflation.
You know, I think this is a very status quo, kind of boring report that you could take what you will out of it. The hawks will take that jobs are still over 200,000 and wage increases are not decelerating. They're kind of flatlining, and therefore the Fed needs to push interest rates higher. The Fed, fortunately, is not forgetting about them. They're mentioning them. And everyone should keep that in mind. We're not yet at the point where we should be seeing really major effects of monetary policy on inflation, given the usual lags.
All right, that is some important opinion coming in. But here's another important voice, and these are reactions that we're getting from market participants on the June jobs report. So listening to what Goldman Sachs' Jan Hatzius as well as KPMG's Diane Swong had to say as well.
I think it's slowing gradually as far as employment growth is concerned, slowed a little bit more than expected, but that's the trend. However, still with an unemployment rate that is very close to the sort of 3.5% level that we've seen for well over a year at this point. So this report to me seems very consistent with a soft landing in the labor market. Labor demand is also decelerating. So to me, this looks like it's still quite consistent with a gradual kind of stabilization in the unemployment rate somewhere below 4%, with signs of inflation decelerating. Admittedly, in this report, average hourly earnings growth was somewhat stronger, but I think if you look at all of the different indicators, we're still on track for a gradual inflation slowdown.
Well, we've seen a bit of a slowdown out there. The ADP report is not a good forecaster of what's going on in the national economy. And I do think it's important to look at what's going on in some of what had been the drivers of gains. One of the biggest drivers of gains have been professional services, which has slowed down quite markedly this year. That had over 1.5 million more than February 2020 levels, now significantly higher than that. That is one of those sectors that saw a huge hiring spree and has now cooled off. So we're seeing some of those larger firms, which was really in the ADP report, was smaller firms are picking up the slack, where larger firms are now laying off workers. We saw that in the ADP report, and I think that's what you're seeing come out in the numbers as well.
Right, that is a lot of important opinion coming in on the jobs report that we got on Friday. But in fact, reacting to that, we also saw Wall Street end a volatile session lower. So the Dow saw a slide of over 180 points. The S&P 500 was down around 12 points at the close. And the Nasdaq, like you can see, saw around an 18-point cut. If you look at it for the week as well, all three indices saw cuts this week. So the S&P 500 was down 1%. The Nasdaq lost around 0.9% as well. And for the Dow, we actually saw the worst weekly performance since March. So there was a near 2% cut on the Dow. This is for the week. The street will now look ahead to a whole raft of, inflation-related data, which is due this week. So we have the June CPI print, which is going to be out on Wednesday. And then on Thursday, we have the producer price index data as well. So there's all of that to watch in terms of cues from the U.S. markets. But with that, let's also move on to the final update from our global market wrap this morning. We are actually getting pretty mixed cues from Europe. So the French CAC index was up around 30 points. This is on Friday. The German DAX index gained 74 points, but the FTSE did see a little bit of a cut at the close, around 23 points in terms of a cut. If you look at the Stock 600, it was a pretty flat close on Friday, but for the week, we saw quite a significant cut. Over 3% is the kind of cut that we saw on the Stock 600. And this is actually the worst weekly showing that we've seen in almost 4 months. ECB President Christine Lagarde, also in comments to a French newspaper, said that the European Central Bank will not stand idly by if there is a simultaneous increase in profits and wages given persistently high inflation in the region. So that is important that, came out of the Eurozone region. That is everything that we're looking at globally. So there's clearly lots going on, and we are going to assess how all of this really impacts our own markets. But before that, we're going to get into a short break. Stay tuned. We'll be back in 2.
Giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes. On Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Hey guys, welcome back. You're still tuned into Power Breakfast. Now, like we were talking about the global setup, we did get a bit of a weak handover, right, from Wall Street. And on the back of that, you have the Asian markets which started lower, but a lot of them have recovered now. So the Hang Seng market is now up 1.3%. You have the Taiwanese index, which is, seeing a gain of 0.5% as well. Kospi is up 0.25%. Shanghai is up 0.25%. The only market which is really in the red for Asia is the Nikkei market. So that's what's happening in terms of the Asian market action. But let's bring in our research team now to help us with the trade setup and take us through all of the stocks that we should watch for in today's trading session. Nigel, Vivek, as well as Surbhi all join us now to prep us up for this trading session. Guys, a very good morning to you as we kickstart this brand new trading week. And Vivek, let me come to you first. Take us through all of the cues that, we should watch today. We were just going through the global setup, which does look a little bit negative.
Well, that's right. So talking about the handover, the USA markets actually ended with cuts in the week gone by, given the fact that most of the US markets have now started pricing in a rate hike, that will come in the coming FOMC meet. Now, talking about the European markets as well, European markets ended with gains on Friday, following cuts as far as the previous sessions were concerned. But, the Indian markets continue to be an outlier. The strength continues as far as the Indian markets are concerned. The markets did see a bit of a significant sell-off on Friday, pairing some of the gains that the market saw towards the first 4 trading sessions of the week. But despite that, despite the sell-off that we saw on Friday, Indian markets managed to end the week with gains of well over 1%. Now, what are the key cues to watch out for, especially today as well as the coming week? Number one, as you mentioned, Asian markets seeing a bit of recovery. The GIFT Nifty 2 is something that we've now started tracking. That too is indicating a slightly positive start. But today, there will be a new listing, Cyan DLM list today. It'll be interesting to see the kind of action that this particular name sees, given the kind of strong action that we saw in IdeaForge, the listing that we saw last week. Also remember, AMFI will be releasing the June mutual fund data for, today, and it's very important to track the kind of trends that we're seeing, especially as far as the SIP numbers are concerned. And lastly, earnings season will kick off in full swing. IT stocks will deliver their results, and that'll be something that markets, especially the technology sector, will be taking cues for, especially given the fact that TCS would be the first company the large cap company to come and deliver its results.
Okay, almost earnings season once again. Vivek, thanks a lot for bringing us all of those cues. But let's also bring Surbhi in. She's here to list out all of the stocks that we should really watch in today's trading session. Hi, Surbhi.
Hi, Pavitra. So the first one on my radar is Reliance Industries. The company has fixed July 20th as the record date for the Jio Financial demerger. The company will allot 1 share for every 1 share held in the Reliance Industries company. Next is Hindustan Aeronautics. They sign a 458 crore deal for 2 aircraft for the Indian Coast Guard. HDFC Bank, the bank is going to sell nearly 2% equity in the NSDL IPO via OFS. Samadhan Motherson, the company has entered into an agreement to acquire 100% stake in Rollon Hydraulics for an enterprise value of 77 crores. RVNL, the company emerges as the lowest bidder for an NHAI project worth 808 crores. And lastly, SpiceJet, the board is going to consider a fundraise on July 12th.
All right, Surbhi, thanks a lot for taking us through that entire list of stocks. In fact, speaking of stocks that we should watch in today's trading session, Z Entertainment is also an important one to, really focus on, because the Securities Appellate Tribunal is set to deliver an order on an appeal by promoter Subhash Chandra as well as Puneet Goenka against the SEBI's interim order. Remember, the securities regulator had restrained Chandra as well as Puneet Goenka from holding directorship or any key managerial positions in listed entities on account of alleged fund diversion at Z Entertainment. So this stock will definitely be important to watch in today's trading session as well. So that is all of the stock-specific action that we are looking at. But Nigel is also here to fill us in with all of the cues from the futures and options space. Good morning, Nigel.
Morning, Pavitra. Welcome back. In Friday's trading session, we had a bit of a breather and some sanity did prevail. Now, the FIs, we are pointing this out, that the net long positioning had moved to more than 1 lakh contracts on the long side. And that cooled off a little bit, and you saw some unwinding of longs and some addition of short positioning as well. I'll say that's healthy because this market was devoid of any kind of short positioning. So good to see some shorts getting into the system. On the option side, they bought more calls than puts. They bought close to around 5 lakh call contracts, which was in the ratio of close to around 2 calls for every 1 put. On the writing side, well, they wrote calls aggressively, and they wrote close to around 5 calls for every 1 put, telling you that at higher levels, we could be bracing for some kind of supply. Which brings us to the strikes, 19,400, 19,500 call. Both of them very, very active, added close to around 1.5 crore shares out there. So aggressive writing being seen out there, which brings us to the levels. Given that we saw such aggressive writing at around that 19,400 as well as 19,500 call, we're expecting resistance at around 19,500, 19,520, which is the recent high. On the downside, till that 19,000 level, 18,950 odd level to around 19,000 holds out, you'll say the long trend is still intact. For today, you'd want that 19,250 odd level to hold out. On the Nifty Bank, 44,700 becomes a crucial part on the short, on the support levels, because we have seen some bit of writing at around the 45,000 put. If that breaks, then you're looking at the 20 DMA. The Gift Nifty suggesting some green to kickstart trade. I think we'll get a bit of an intraday dip as well. Actually, now it's moved into the red. It's indicating a pullback of close to around 25 points. So let's see how this goes. Maybe at lower levels, buy on dips could work out, but good to see a bit of a healthy correction on Friday. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues from the futures and options space as well. With that, it is time for a short break on the show. But up next, torrential rain brings large parts of North India to its knees. We're going to bring you all of the updates on the other side.
HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems. In the middle of the trade, the promoter entity, which is Barings Private Equity, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader.
Hey guys, welcome back. You're still tuned into Power Breakfast, and let's now bring you some important global updates that we are tracking. U.S. Treasury Secretary Janet Yellen wrapped up her 4-day visit to China. This is the second by a member of President Joe Biden's cabinet, and she called the visit constructive and said that the U.S. and Chinese officials had a very substantive series of meetings on a wide range of issues. So we have CNBC's Sam Varas who's here to bring us all of the details. Sam.
So Janet Yellen had about 10 hours of meetings over in Beijing with these Chinese officials. They were described as direct and productive, as usual. No major breakthroughs or any sort of major deliverables, as widely expected, of course. There was a fairly low bar for these meetings, given what we've seen in terms of the tit-for-tat retaliatory measures last week. But at least what was successful for her was re-establishing this contact and strengthening this communication to try to avoid misunderstanding, miscommunication, which could veer into conflict. So Janet Yellen met with a number of high-profile Chinese officials, seniors, Premier Li Qiang, of course, meeting the new economic team, but also Peng Gongsheng, who's over at the PBOC, recently given that party chief role. She raised the issue of unfair trade practices, of course, a big concern over in Washington, also with regards to these new export controls that we've seen on these key metals which go into chip making. But she also reiterated once again that the US is not looking to decouple. She did say again that this would be disastrous, and she said that they do seek healthy economic cooperation. So China does appreciate this rhetoric in some way, and this goes to show that, she is, striking a pretty it is a balancing act for Janet Yellen, but also for, of course, the Chinese. Li Qiang urged the US to work with China. They said that they can see rainbows after the wind and the rain. He said that they hope that the US can meet China halfway. But she also, of course, after these meetings, did meet with US companies doing business in China as well. There have been many concerns around the treatment of some of these firms over there. There are worries about these amendments to some of these espionage laws and also exit bans. The two sides very much acknowledge that they don't see eye to eye on a number of issues, like trade, of course, and also with regards to technology. Right now, the Chinese side did raise their concerns about this potential executive order on investment curbs that could be coming in, but Yellen seemed to reassure them that this would be narrow in scope and transparent.
All right, Sam, thanks a lot for bringing us all of those important details. With that, let's also bring you some updates on the weather situation in the north. Torrential rains have wreaked havoc across North India over the weekend, so at least 20 people have lost their lives across North India as rains caused landslides in Himachal Pradesh, while Delhi too was brought to its knees as it received its highest single-day rainfall in over 40 years. Now, in the region, we've seen schools which have been shut, and work from home has also been advised for a lot of the offices in the region. This is across Delhi and Gurugram, and the IMD has now flashed a yellow alert. This is for the next 3 days. In the Himachal Pradesh region, 5 people were killed in landslides, while large-scale damage of property and vehicles was also reported as River Beas overflowed in the Mandi district of the state. The state government has also directed all schools and colleges to remain closed for the next 2 days. And in Uttarakhand as well, we saw 3 lives which were lost after a jeep which was carrying 11 pilgrims from Kedarnath fell into the Ganga amid a landslide near the Golar on the Rishikesh-Badrinath National Highway. So that is the situation that we are seeing in Himachal Pradesh and in Uttarakhand. Meanwhile, we also saw heavy rains in several parts of Punjab, which have led to massive waterlogging and flooding in low-lying areas as well. So that is really an update on everything that's going on across the north, the North Indian part of the country in terms of the weather situation. A lot of the advisories have been, put out. So please do follow that and do try to stay in. That is everything that we're tracking on Power Breakfast this morning. And with that, we are going to wind down on this edition with the news that most Asian markets are doing quite all right, but the Gift Nifty is indicating a bit of a cut at the start, 25 points lower. Thank you for tuning in. We have Bazaar Morning Call up until.
David to Goliath. From the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers. Today's newsmakers. And tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes. On Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. With the tech world normalizing, autonomous solutions and intelligent algorithms are transforming our society one service at a time. As the computing era reaches a tipping point, find out what it takes to succeed in an AI world. CNBC-TV18's Young Turks travel to Silicon Valley to bring you definitive insights from the most influential leaders and investors. Young Turks at 21. Voices from the Valley. Only on CNBC-TV18 and CNBC-TV18.com. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equities is about 5 to 10%, which is not beating inflation. So investing aggressively, you can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
Who said the markets can't be exciting? Who? Get the lowdown.
Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We're coming to you live from the Motilal Oswal CNBC-TV18 studio. I'm Nigel D'Souza. Joining me today is Sonia Shana, who's coming back after a holiday, and Rima Tendulkar as well. Morning, girls.
Hi, good morning, Nigel. Good morning, Rima.
Good to see you, Sonia. It's been a while.
It's been a while, yeah.
How was your holiday?
It was great, thank you. And so much has changed, right, in the last 2 weeks. I mean, there's now GIFT Nifty instead of SGX Nifty. Their markets hit record highs. There's threads and...
You missed the battle in the biking industry.
Bajaj has launched the phone. And I was just thinking about it, all this in just 2 weeks.
2 weeks,
it just
yeah.
goes to show that the markets change so much in a matter of time, and then, I mean, things are all still good
I think
by and large.
I think the last time we had you on the show, Sonia, we were wondering about 19,000 odd. You were away. We went to around 19,500. Now you're back. Hopefully, you're the good luck charm. You take us to 20,000.
But Nigel, I was just thinking every time I go and leave, the market surge. So maybe I should take longer leave.
That's so cute. I didn't want to be so blunt. I was trying to turn it around, but you said...
But it's the truth, right? It's a fact.
It is what it is.
And now, I mean, the market, I think only on Friday is when the market was slightly under a bit of pressure, but largely the setup looked very good. So let's kickstart with just a couple of data points before we, of course, get into the details. The big data point this morning is global Qs, right? I mean, they've been a little bit subdued on Friday, so there was a sell-off that we saw. The Dow was under a bit of pressure, almost 200 points gone. And give and take everything, the non-farm payroll data was extremely strong. So the expectation is that on the next Fed meeting, which is on the 26th of July, is when you will have the Fed might hike rates. So in that context, there's a little bit of fear that crept into the US markets, and that's what caused the trepidation on Friday. For our own markets as well, after 8 straight days of gains, Friday was a bit of a weak spot, but no problems there. In any case, you had strong buying that continues to come in from FIIs and from DII. So foreign investors, in fact, in less than a week in July, have bought over 9,000 crores. Now, if you look at, the setup, it's going to be an earnings-heavy month, and we kickstart this week with TCS and HCL Tech on the 12th. You have Wipro on Thursday, and then you have Infosys on the 20th of July. And as Rima has been telling us, ad nauseum, it's going to be a weak quarter for the IT sector because of a cut in discretionary spending. So I think the market is, just prepared for weakness in this space. In the US as well, you have BlackRock, JP Morgan Chase, Wells Fargo, Citi, all will be reporting their Q2 numbers this week. So lots to track. And I think your work is going to go up in the next fortnight. Are you prepared for that?
Yes, I'm prepared. I've already done my previews for, HCL Tech, TCS and Wipro. But just a quick word, the Dow was up 114 points before it slipped to close down 190 points. So there was a reversal. So initially, the markets cheered the June jobs data, because it was markedly lower than what the street was anticipating. But then when the internals came out and the street took note of the wage growth at 4.4% on a year-on-year basis, it's still at uncomfortable levels, perhaps for the Federal Reserve, and that resulted in the market slipping in the second half of the trading session. So the Dow reversed nearly 300 points from the top. That said, Asia is still on a pretty strong footing this morning. Hang Seng is currently up 1.3%. The Taiwanese markets are up nearly 0.5%. One more point about the internals. The FI inflows in the markets have been slowing down. On Friday, they bought 790 crore. Yes, it was a down day for our markets, but look at the flows number. On Friday, 790 crore. But over the past week or so, we've been averaging inflows of nearly 2,000 crore. And the DII selling has also picked up on Friday, inching towards 3,000 crore. So as a result of this, the net institutional flows turned decisively lower. And on Friday, we're looking at that down, a net sell figure of more than 2,000 crore rupees. And, talking about earnings, while the heavy lifting will be done by IT, you still have some other mid-caps reporting numbers. You've got a Federal Bank, Bandhan Bank, a D-Mart on Saturday. So keep your eye out on these mid-cap companies reporting numbers this week, even as technology will dominate the action and the sentiment. Nigel.
All right. In Friday's trading session, actually, it was some sanity that prevailed, right? We had a pullback after a few trading sessions, and that wasn't too bad. Also, a couple of other data points. The PCR, well, it was running away to around 1.5. When we're making this point, it's trading at the upper end of the range. The PCR cooled down to around 0.89. The FI as well, they were showing us the big money. They were adding longs as well. And I was making this point on Friday morning as well. It was getting too comfortable for comfort, maybe a little bit too cute. So we saw them adding some short positions and they wrote calls as well. So as trades is set up today, the IT stocks, well, they are likely to see more or less a consolidated phase or maybe, in fact, a bit of a downtick as well getting into earnings. So don't expect much from the IT space for the bulls. The Reliance Industries, that's the one that could support for the next 9 to around 10 trading sessions because you have the demerge of the Reliance Jio Financial Services, which will move out of there. So in the run-up to the record date, you could see some pre-buying on that one, and the bulls will be banking on that one. Now, till the Nifty holds at 19,000 odd mark, you'll have to say that this uptrend is pretty much intact. Let's get to a couple of data points then. The net institutional figure, well, it was a negative number for the first time since the 26th of June 2023. That's the FI and the DI number put it together. So the first sell number, that was to the tune of closer on 2,000 crores. What did the FIs do in the F&O market? Well, they added short positions. They added closer on 6,000 shorts. And the long positions, they unwound closer on 5,000 long contracts. Now, on Friday morning, we made this point that when the net long positions moved to around 1,01.02 odd, as they did at the end of November, we normally see the market getting a little bit too overheated. And that's why that's pulled back a little bit. Now, the net long positioning, it's still very, very high, but it's come down to around 92,000 odd level. I think you should keep that trigger. Once it moves to around 1.02 lakh contracts, net long positions, that's a sign of caution. On the index option side, well, they bought calls. They bought closer on 5 lakh call contracts. That was in the ratio of closer on 2 calls for every 1 put. The problem for the bulls is they're writing calls aggressively now. And they wrote closer around 5 calls for every 1 put. More than 3.4 lakh call contracts is what they wrote. And there were 2 strikes that were very active. 19,400 call, 19,500 call. Between them, they added close to 1.5 crore shares odd. So aggressive writing being seen out there, which brings us to the levels. Now, since you're seeing writing at around 19,400, 19,500 call, that 19,500, 19,520 level, that becomes a key resistance zone on the upside. That was the recent high as well. On the downside, till that 18,930, 18,000, around 19,000 odd, that holds out, you'll see this uptrend is intact. For today, I'm looking at the support level at around 19,233 to around 19,285. I say this because there was some bit of writing that was seen at around the 19,400 and 19,300 put. The Nifty Bank, that's going to be in the important one out here. Remember, it pulled back in Friday's trading session. You have the near-term support at around 44,700. And that's because the highest open interest on the put side is at 45,000 put. So keep an eye out on that. If that breaks, then you're looking at a deeper correction towards the 20 DMA. The GIFT Nifty is suggesting some bit of green to kickstart trade. I think you get a bit of a pullback intraday. Keep a stop loss in place. And given the kind of correction that we saw on Friday's trading session, maybe we could look at buying it. But buy on the dip, don't chase the opening.
By the way, crude prices have also inched up.
Yes.
Yeah, Brent crude is currently at $78 plus. Last week, crude prices went up by nearly 4%, making it the second consecutive week of gains. There you have it. Brent crude at 78.2. Last week, we were hovering around $75.5 per barrel.
Also, another thing, which is of course positive for our markets is that the monsoon situation, right? I mean, it's turned to surplus now. It was in 10% deficit. And in just 8 days, the monsoon situation has gone to surplus, which I guess, of course, there are a lot of issues in North India, etc., in terms of excess monsoons. But overall, surplus monsoon is good for the markets as well.
Indeed, we'll discuss all these cues on the show. Let me tell you what's lined up first in the next 30 minutes on the show. So first up, we'll get updates from the markets across the globe with Fook Heen Yap of Standard Chartered Bank. He will join in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 a.m., we will do a fundamental stock analysis with Prakash Tiba.
All right, let's get you some money market views. First up then, on the rupee, Kunal Sudhani of Shinhan Bank says the unimpressive US jobs report triggered a massive sell-off in the dollar index and the US Treasury bond yields across the curve as data dampened expectations of further rate hikes after July. The Chinese yuan cooled off versus the dollar while Brent crude prices edged higher. For the dollar, INR 82.45 acts as a support and 82.80 acts as a resistance.
On the bonds, Ajay Magnolia of JM Financial says the 10-year yield has been steadily rising, mirroring the rise in US yields. Nevertheless, demand in Friday's auction resulted in a better-than-expected cutoff. Stability in oil prices has been trying to play an anchor, while CPI data this week may turn the direction in either side. He expects the benchmark 10-year yield to trade in a range of 7.13 to 7.18% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Reliance Industries, IOC, Mahindra & Mahindra, Hindustan Zinc, Auto Pharma, Prism Johnson, Ramco Cements, IRB Infra, and Max Ventures. All of them on the back of positive news flow. While on the flip side, you have Vedanta that could be reacting to negative news flow over the weekend.
Okay, let's get chatting then about the global markets. Fook Heen Yap, Senior Investment Strategist at Standard Chartered Bank, is now with us on the show. Thank you very much for joining in. You know, if you told anyone 12 or 18 months back that U.S. markets would see 500 basis points of rate hikes, and yet the U.S. GDP would grow at 2%, the jobs data would grow for 2.5 straight years in a row. You know, most economists, even the prominent ones, would have said that this is highly improbable. What have you made of the strength of the U.S. macro, and what does it mean for the 10-year yields going ahead and rate hikes?
Yeah, thanks very much for the question. You are right. I think coming to the end of last year, a lot of people are looking at the yield curve inversions. We're already talking about the recessionary pressures. But we've seen the economic surprises have been positive, and in fact, surprised positively since the start of the year in the U.S. So ourselves as well, we used to think that a U.S. recession would be happening this year, towards the end of this year, but we've now pushed out our view into early, starting in Q1 of 2024. And I think a primary driver for that has been the U.S. consumers because of the pent-up savings from the pandemic. By some estimates, it went from 2 trillion down to about 1 trillion now. So they still have some excess savings that can use, and that's been keeping the economy stronger than expected. And I think by the same token, the U.S. market has been doing well in terms of how the data has been supporting it. And so that's really something that's been holding up the U.S. economy, and a surprise, as you say, because many in the street, ourselves included, thought a recession would happen this year. So the effect of that, we think, is that, it's still going to be keeping equities in the U.S. supported, at least for the next 6 to 12 months in our view. We have more of a neutral view. We see it as a core holding for us. But look, we've got a lot of key data points, right? We've got the CPI data this week. That's going to be very live. The market is already expecting the Fed will be hiking 25 basis points later this month. But the CPI data is going to be quite key. It's a big driver, we think. And we've seen the expectations can change very rapidly. It's been a very volatile rates market. So that's something we're watching. Secondly, as well, is the earnings data, which is going to be coming out, and the expectations and how that will impact the corporate earnings outlook for 2023 and 2024. But look, to your question, I mean, it's pushing now at about 4% on the U.S. 10-year Treasury yields. We think your next kind of a resistance level is 4.08 and then 4.2%. Whether we get there, we think we will be dependent on the data. But we very much like the view of buying a long duration and long 10-year and equivalent high-grade government bond yield, because we think that we are coming towards the end of the Fed hiking cycle. And therefore, as yields drop, as we expect in 6 to 12 months, that's an opportunity because you get the capital gain on your high-grade government bond.
Got it. So, Fook, you're saying you've pushed out your U.S. recession expectations to Q1 of CY24, but you've not ruled it out completely, given how strong the U.S. economy is, correct? Got that. What about a market like India? We've been hitting new highs as well in the Indian market. Are you as sanguine about it? And do you think there's lots more to go towards the second half of the calendar year?
Well, we do like India. We think regionally, we think the whole Asia region, in fact, can outperform global equities. So within our equity allocation, we are asking investors and clients to rotate towards Asia. That's our preferred. Although, I mean, we are advocating to allocate broadly across China, India, even Korea and Taiwan and Japan as well. India has been amazing. We think the growth there has been great, especially in the small and mid caps. The revisions has been extremely strong since the start of the year. So the revisions in the earnings data for the small and mid cap has been good. So that's something we do favor. But overall, for the India market, it is pricey, but growth is very strong. We think it reflects that. But we do like the Asia region and India relative to global equities. And it's really in terms of the point of the cycle where we see growth still picking up in China and in India, whereas in the US and the Europe, we see policies there trying to slow down growth because of the worries about inflation.
Hi, Fook. Good morning. Nigel on this side. Fook, I think the last time you joined us, you told us on global equities, you were neutral. Do you hold on to that view as well? And within the Asian markets, your pecking order, I think, was India, China, and Japan. Has that changed?
Yeah, we are still neutral on global equities. So our preference within the whole asset allocation space is really towards long duration, high grade government bonds. So within equities, we are neutral globally. In terms of the pecking order, though, we are advocating to allocate broadly. So at this point of time, there's no specific pecking order. We are talking about allocating broadly across India, China, Japan.
That. You have a great week, folks. Thanks a lot for speaking to CNBC TV18. I always appreciate your thoughts. Keep it coming. Let's slip into a quick break on that note. On the other side of the break, plenty of stocks to start the week with. So don't go anywhere. We'll be back in a bit.
And Maze. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
With the tech world normalizing, autonomous solutions and intelligent algorithms are transforming our society, one service at a time. As the computing era reaches a tipping point, find out what it takes to succeed in an AI world. CNBC-TV18's Young Turks travel to Silicon Valley to bring you definitive insights from the most influential leaders and investors. Young Turks at 21. Voices from the Valley. Only on CNBC TV18 and CNBC-TV18.com. A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending.
Welcome back to Bazaar Morning Call. Plenty of stocks to talk about, so without wasting any time, let's get straight to it. The first stock on our radar this morning is Reliance Industries, and we're going with green on that because the board of Reliance Retail has now approved a reduction in the equity share capital of Reliance Retail, and the consideration has come in at 1,362 rupees a share, which is positive for Reliance. And of course, we're going with green on the stock. Most brokerages, as per Bloomberg's estimates, had a level ascribed a value of anywhere between 900 to 1,000 rupees a share in their SOTP, and the list will come up for you on your screen. So this is of course positive. Now UBS put out a report where they said that this sets a floor price to future value unlocking for the business. It should bring a lot of confidence to the retail business value in the SOTP. A consideration of 1,362 rupees a share is a 54 to 60% premium to the valuations obtained from two independent registered valuers. So this is of course a big positive. Apart from RRL, RRVL, which is Reliance Retail Ventures, also owns other businesses like Reliance Brands, Just Dial, Reliance Consumers, implying an even higher value for RRVL. Now this values RRVL at $110 billion, and Reliance's 85% stake in RRVL is valued at $93 billion. So in essence, this is positive for Reliance and gives more value unlocking, especially for the retail business.
Okay, all right. So we'll keep an eye on Reliance Industries. Sonal joins us to tell us about IOC. Morning, Sonal.
Good morning, Nigel. Well, IOCL will be in focus because the board has approved fundraise via rights issue up to 22,000 crore rupees, and they did indicate earlier that it will again be for energy transition. However, analysts are of the view that no need for fresh fundraise is required as the company has enough cash flows and has a strong balance sheet as well. But the company has made other announcements as well. They have approved formation of JV for battery swapping business in India. It is a 50-50 joint venture with Sun Mobility Singapore, and this is where the company will be investing around 1,800 crore rupees till financial year 2026-2027. Additionally, the company has also approved investment of 640 crore rupees in IOCL Singapore, and this is for acquisition of preference shares and warrants of Sun Mobility. So, of course, this money could be used in this way in energy transition, and of course we'll be watching out for any fund infusion coming in from the government as well.
Thank you very much for that. Sonia, M&M?
I'm going with green on M&M. Of course, all of these auto stocks have been doing very well, but reports suggest that the company is in talks to raise up to 5,000 crores for its electric vehicle unit, and this is from British International. And if this deal goes through, then it will be the second investment that British International makes in the M&M EV business. Now, the deal valuation is likely to be about 10 to 15% more than the previous round of funding that they got. And the previous round of funding had valued the EV subsidiary at 70,000 crores, which is about $9.1 billion. So if this comes through, of course, it is a big positive for M&M. Now, M&M put out a clarification on the exchanges where they said that they have not appointed a banker just yet to commence fundraising, but the EV business continues to attract a lot of attention from investors. So maybe something is brewing. Time will tell, but for now we're going with green. The company continues their discussions with a select set of marquee investors, but the amount that has been indicated in news reports is purely speculative. But, there's no smoke without fire, as they say. So I'm going with green over there.
Okay, all right. So that's what Mahindra and Mahindra. I'm tracking the Vedanta Group stocks. Hindustan Zinc first. They had a meeting for interim dividend over the weekend, and they declared a dividend of close to around 7 rupees. The total payout would be 2,950 crore rupees, and the record date has been fixed as July 15th. Now, how much does each entity get? Well, Vedanta Limited, since Hindustan Zinc is declaring the dividend, they'll get bulk of that, 1,920 crores odd, which in turn they normally do pass it through to its shareholders. So we'll be waiting for a dividend announcement from Vedanta Limited as well. The government of India, they'll get close to 874 crores odd. Remember, the stock has already run up close to 10% post the announcement that they're going to be considering a dividend. So how much of the good news is already in the price? We're going with the light green out here. The shareholding pattern between the government of India, between Vedanta Limited as well as LIC, close to around 97-98% is between these three entities. So very limited float in the market, but light green out there. Next up, we go to Vedanta Limited itself. Now, they have added the semiconductors as well as the display glass ventures to its portfolio. Remember, in the past, they've said that it will not be in the listed entities portfolio, but now they've got it. Both these two entities, they are held by the promoter entity, that's Twin Star Technologies Limited. And in 2022, the management had clarified that no, we're not going to be bringing this under the listed entity. But now they've done a bit of a U-turn on that front. The reason that they've given is this tremendous growth potential for both these two industries, semiconductor as well as display panel. And India, as of now, we import almost the entire requirement in both these two categories. They've said by the second quarter of FY24, they're expecting this to get done. Now, the total investment that they've indicated in the past is close to 1.5 lakh crore rupees. So it's a large investment in that JV that they have with Foxconn, and Vedanta had close to 60% stake. So the reason that we're going with red out here is because it's a related party transaction, point number one. Second factor, it could demand very, very high capex because it's a capex intensive industry. And finally, it could impact the dividend payout, which has been the juiciest part for Vedanta Limited shareholders. That's about the Vedanta Group stocks. Going to Ekta though to tell us about Oro Pharma. Ekta?
Thanks for that. Well, I expect Aurobindo though to probably be in the green today. That's because Curatech Biologics, which is an arm of the company, has entered into an exclusive licensing agreement with a US company, Biofactura. So this is to basically commercialize a proposed biosimilar, which is Stelara or Ustekinumab. Now, this biosimilar is used for multiple things such as Crohn's disease, ulcerative colitis, plaque psoriasis, arthritis. Global sales are expected to be $9.7 billion, so it's a huge market size for this particular biosimilar. Curatech, which is Aurobindo's arm, will be commercializing the biosimilar on an exclusive license right basis. This is in various countries such as US, EU, UK, Canada, other semi-regulated markets as well as emerging markets. They have given details of their share also in the press release. So Biofactura will be receiving a licensing fee not exceeding $33.5 million. There will be a profit share depending on the market that they're operating in as well. And CuraTeQ will also have global manufacturing rights. So overall, it seems as though Aurobindo is making its foray into the biosimilar space. This particular biosimilar, if it does commercialize and reach the market, then it could be a big opportunity for CuraTeQ. And overall for Aurobindo, as they are looking at more high margin lucrative products. So I expect the stock to be in the green.
Okay, all right, Ekta, thanks a lot for that. Well, I'm tracking two stocks, that's Prism as well as Ramco. Now, Prism Johnson, they have approved the sale and the transfer of a couple of assets to Ramco Cements. One is the sale of a land parcel, which is around 1,420 acres. And the second one is the mining lease, which amounts to around 663 hectares. Both these two assets will be transferred to Ramco Cement, and they're saying that it would be transferred by July 31st, 2023. It's a win-win for both entities, though we don't know the quantum that they're going to be getting from Ramco Cements. For Prism, well, they could reduce their net debt, which was last at around 1,150 crore rupees as of March 2023. They could also use that for their expansion plans, if any. So that's positive for Prism. And for Ramco, well, they're getting limestone reserves as well as land. If they want to expand out there, then they're moving in the right direction. So going with green for both of them.
Okay, so lots in the cement space as well that we're tracking this morning. But there are plenty of other stocks that Vivek has on his list. Vivek, hi, good morning. What are you looking at today?
Well, good morning. A couple of stocks on my radar. First, keep an eye out for the IRB twins. IRB Infra has gone ahead and given its operational toll update both for the month of June and for Q1. And it's a very good, steady set of numbers. So Joule tone revenues is up almost 16.5%, coming in over 380 crore. And when you talk about the Q1 toll revenues, it's very good, around 18% higher on a year-on-year basis, coming in over 1,180 crore. Now, what the company is saying is that, and this is something that's quite positive, they're expecting a similar momentum for the rest of FY24 as well. Now, coming to another company, Max Ventures. Now, some corporate action happening over here, largely along expected lines. So the company says that the Chandigarh bench has approved the merger of Max Ventures into Max Estates, which is the real estate arm of the group. Now, Max Estates will fully focus solely as far as the real estate business is concerned, largely along expected lines. The company had indicated in an interview to us as well that towards the end of June as well as July, this particular corporate action will be done. Along with that, Max Estates has also gone ahead and given its Q1 quarterly update. So 1,800 crore of pre-sales is what the company has done in its luxury project. And again, some positive news as far as Max Ventures is concerned.
Okay, well, thanks a lot for that, Vivek. Here's a quick recap then of our top stocks that we're looking at. Stocks with positive news flow today. There's Reliance Industries, IOC, M&M, Hindustan Zinc, Aurobindo Pharma, Prism Johnson, Ramco Cements, IRB Infra and Max Ventures, while the only stock with negative news flow today is Vedanta. But in case you're wondering about all the brokerages that that have come out with their reports and what they're saying, Rima has put the focus on that. Rima, over to you.
Let me start with Tata Motors. So Tata Motors on Friday, just about 30 minutes before they closed for trade, announced that in the month of June, JLR posted a 30% jump in the wholesale volumes and that they're on track to generate a free cash flow of 400 million euros. The street liked the development, and as you can see, the stock in the last 30 minutes surged to close with a gain of about 3%. CLSA has written on this development. They believe the path to the company's higher volume, margins and FCF remains clear. FCF is free cash flow, which is why they have a buy rating and a target price of 690. Morgan Stanley has downgraded Titan. They've downgraded it to an equal weight. They've set the target price at 3,207. They believe the risk reward is balanced, and following the strong performance that we have seen, there are no wedding dates in Q4 due to Adhik Maas. There are fewer wedding dates in Q3, so that makes them a bit cautious. So their target price is at just about a 50 rupee premium to where the stock currently is, equal weight rating. On the other hand, Kalyan also reported their quarterly update last week, and it was very solid, about a 30-35% jump in their overall sales. According to Citi, the growth journey for Kalyan has just begun. On margins, the company has said that the gross margin at the showroom level has improved on a year-on-year basis. The reason it's declined on an absolute basis, on a year-on-year basis, is because of a higher contribution from the franchisee store. The store expansion momentum continues to remain intact. They added about 12 new Kalyan showrooms in Q1, and the management expects 20 more showrooms to be added across non-South before Diwali. And finally, United Spirits Limited. If you remember on Friday, Karnataka state government in the budget announced that the taxation, the excise duty on beer would go up, and even on IMFL. So Macquarie has written on that. They have an underperformed rating on USL. They believe the Karnataka tax hike will weigh on growth. Brands will look to revisit the pricing on their brand to offset the hit at the consumer level, and therefore they are a bit circumspect on United Spirits. Target price is all the way down to 700 rupees, and the stock on Friday had closed at 914. So that sums up the brokerage action for the day. We'll get into a break. On the other side, we'll invite Prakash Diwan to discuss some fundamental stock analysis. We'll also be joined by Vivek Parthiban, COO at Kaplan Point, to discuss the business outlook and the US FDA note for an injection they recently received.
Unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and nays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only...
Welcome back. Hope you're having a good morning. Well, for starters, the GIFT Nifty suggesting a start in the green. Let's see where do we go from there. Well, let's move on then. Kaplan Sterlite's a subsidiary of Kaplan Point. Well, they received a couple of approvals. We have with us Mr. Vivek, the COO at Kaplan Point, who joins us on the show. Hi, Vivek. Good morning. Thanks so much for joining in. Well, has there been a slowdown in any kind of approvals you're getting for your US arm? That's Kaplan Sterlites. Could you tell us? Could you give us further details?
We actually have a good record of approvals this year. We've had about 4 or 5 approvals in the last 12 months, I believe. Now, the incentive is to make sure that we launch these products on time and establish a strong enough portfolio for ourselves with fairly decent market share. So no slowdown in approvals.
Okay, no slowdown in approvals. That's good to hear. The US FDA, Vivek, hi, good morning. Thanks for being with us on the channel. The US FDA completed inspection of some of your facilities, and there were 4 observations that were issued. Can you tell us, what is the nature of these observations, and what is the way forward now for these facilities?
Yeah, so we had one FDA inspection in May, and we were quite satisfied with the outcome of the inspection. They were largely procedural in nature. None of them were related to data integrity or repeat observations or anything like that. Like I said, mostly procedural. We've already responded to them. Now we are anticipating the EIR to come through in the next couple of months.
Okay, so in the next couple of months, you will get the EIR report from the US FDA for the Gumidu Pundi facility. I think as of Q4, Vivek, your order book was about 230 to 240 crore rupees. What does it currently stand at right now?
So as described before, we are targeting close to 300 crore as the revenue for Kaplan Steriles this year. We're well on our way. Obviously, as usual, as typically what happens is the first 2 quarters, it's a bit slower than the third and fourth quarter. You will start to see that once we publish the results in the coming few weeks and stuff. But we remain fairly confident to make sure that we get to this target. We also have a new production line that is getting up by about October of this year, and another one by December of this year as well. So that should help augment our targets this year.
All right, and that's on Kaplan Steriles, right? 300 crores is what you're guiding for. And as you mentioned last time, you'll have broken even as well out there. So what's the margin band you're looking at on that base of close to around 300 crores? And how do you see the trajectory moving ahead?
Yeah, so our target is to make sure that our Kaplan Steriles is, gross margins and everything are very similar to our parent companies, which is somewhere around, when I talk about EBITDA and all of that, you're talking about 30% plus. Obviously, what happens is we charge off as expenses all of the R&D spend and filing fees and facility fees and all that, which are quite heavy when it comes to the US, especially in the initial stages. But if you net off all of that and then compare it with the parent company, we're fairly similar. Going forward, I think once our revenue catches up a little bit more and then the R&D spend starts to become a smaller percentage of revenue, I think you will start to see the EBITDA margins of Kaplan Steriles to be quite similar to Kaplan Point.
Okay, all right. So the EBITDA margins of Kaplan Steriles will be similar to Kaplan Point. Got that? You have a significant amount of cash on your books, over 700 crores, almost 800 crores actually. Do you plan to use that for anything, any acquisitions that you're looking at, anything that you've identified that could perhaps fructify in the next 12 months?
Obviously, we want to be living within our means. We have taken on a large capex. Kaplan Steriles, we're going for expansion in phase 2 and phase 3. We have our oncology plant coming up. We acquired a small unit for API in Vizag. We're also coming up with a new oral solids facility close to Kaplan Steriles as well. So we have a lot of capex going on to the tune of about another 400 crore, I think, within this year and next year. We want to add another 250 crore minimum to our reserves within this financial year. And don't forget that there's going to be some OPEX and some more R&D coming up for some of these new facilities and stuff. But when it comes to something inorganic, we're not against it. Our eyes are open. But the one thing that we want to always try and avoid as a principle for the company is to not go to the banks for any borrowers, So as long as we stay away from that, we sort of sleep peacefully, I would say.
Mm-hmm. Vivek, while 86% of your revenues comes in from Africa, you are looking to grow the balance. 14% of your revenues comes in from the US. How many products are currently under review with the US FDA? How many approvals are we likely to see this year?
Yeah, so around 82% are from Latin America, actually, around 3-4% from Africa and the rest from the US. Today, we have 18 approvals of our own and another 5 approvals with partners. And then we have actively 7 products under review with the FDA. So we hope that that should start to come through in the next 12 months. We have a pipeline of close to 25-30 more products. So eventually, we're looking at a basket well over 50 plus products in the injectable and ophthalmic space. When oncology and OSD starts coming up, we will be targeting the semi-regulated markets like Latin America, the ones that we are operating in today before we move into US and EU and stuff.
Okay, got that. One final question then, Vivek, from my end. There was a lot of pricing pressure, I understand, in the complex generic space, but now there are some reports that that has stabilized a bit. Would you want to tell us how the situation is as far as pricing is concerned?
Yeah, so there's 2 parts to this, right? So for a small to mid-sized company like ours, especially a newer entrant into the US, we feel the pricing pressure a lot less compared to some of the larger established players with probably bigger overheads. So pricing, while it is under pressure, I wouldn't say that there is no pricing pressure at all. But companies like us sort of feel it a little lesser, I would assume, compared to the larger companies. Having said that, there is a fair amount of stabilization that is happening in the US right now. Continuity of supply without any breaks is going to be obviously weighted a lot more than someone with just cheap prices, you know. So I think as long as we remain compliant, we have the the goal of excellence in sight rather than just pricing advantage. I think we would be one of the last people standing.
Got it. All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. That's Kaplan Point, but let's move on. We have plenty of stocks to discuss. Prakash Diwan is joining in now to give us his view. Prakash, hi, good morning, and thanks for joining in. First, I wanted your thoughts on all that's been happening with Reliance. Of course, many news pieces here. The record date for the demerger of Jio Finance has been fixed, but also, this approval of reduction in the equity share capital of Reliance Retail. The larger picture is value unlocking for Reliance Retail shareholders. There's a succession plan that's being put into place as well. And of course, the eventual listing too. On Reliance Industries share price, do you expect a lot more upside from here?
Good morning, Sonia. So I think this has been, a long time coming in that sense that people were anticipating some sort of moves by the company to set a roadmap for especially defined timelines and the process for a value unlocking. And this is, from that perspective, at least, the time correction, if I were to use that term, to define what Reliance is going through, is probably coming to an end. See, the price has always been much lower than what intrinsic value it carries, given the fact that it's firing on all cylinders, whether it's the O2C vertical, whether it's retail, whether it's telecom. I mean, things are shaping up so brilliantly in all of these. What this move does is it starts kind of defining some sort of a timeline for the retail venture to also start getting monetized at some point in time, because this would have been necessary to start the process, right? And the other thing on the Jio Financial Services is that I think it's very timely. They're coming into a market where they've kind of prepped themselves very ideally for the kind of data that they have of usage, the kind of merchant establishment that are part of the network. So it's going to be a fairly quick start for them. I don't think they're going to be labored in reaching some milestones once they start off. So if July is 20th is the date, you could start seeing action thereafter immediately. So yes, the stock will probably smarten up. But again, I'm saying this is more of a timeline definition rather than a quantum definition of all of that. So value has been, we've been able to assign value to the RRV and the retail venture business as well. But it'll take some time for the market to digest that. And I think all eyes will be on the financial services rollout. And then possibly the AGM will cement all of that, all of these moves into some sort of a very concrete plan going ahead.
So would you say the rough valuation which has been ascribed to Reliance Retail is in line with what you would have anticipated? You're only, okay.
Yeah.
So the development here is more on the timing of it rather than on the valuation from a market.
That's right, Rima. Absolutely. Yeah.
Okay. And it signals, a benchmark and perhaps a floor as well on the valuation front. Prakash, hi, morning. We're going to be getting a signed DLM listing today. This is an electronic manufacturing company which caters to medical technology, defense, aerospace. So pretty good subscription as well. I think close to about 70 odd times. The grey market is suggesting a pop of nearly 50% at open. Would you still be looking at buying signed DLM if someone's not got the allotment in the IPO?
Good morning, Rima. So, I am not a big fan of IPOs, in the IPO time, but what it does is it kind of gives you the opportunity to participate in areas which hitherto probably were not so easily accessible in the listed space. So, and I think the grey market is probably got a bit more excited given the Idea Forge listing on Friday, and there is anticipation that there is enough demand given the kind of FI flows, the anchor investor participation for some of these good businesses. But let me also remind you that the valuation that the market starts ascribing post-IPO at times can get unreal. And that's exactly where you may not be able to get value immediately or find great value. But it will probably be a momentum play at this point in time. So let it, cool down. But, for example, the EMS or the electronic manufacturing solution business in India is still way short of what global standards are. I mean, we are close to about 14 billion. Even Vietnam and South Korea are way ahead of us. Forget China. China is right at top at 900 plus, but even these two markets are pretty active and big. So there's a long runway in that sense. So there is growth. I mean, the optimistic view is there is growth, but well, you know, everything's good at a price. Some of these stocks could probably become expensive for some time till there is some sanity that comes into this thing, or better options that come into the space.
All right. Hi, Prakash. Good morning. Hope you had a good weekend, Prakash. Well, in Friday's trading session, the markets ended virtually at the low point of the day, but the stock that ended at the high point of the day was Tata Motors. You know, in the final hour of trade, you got news that the JLR sales were up by close to 30% on a year-on-year basis. And also they're guiding for free cash flows to the tune of around £400 million for the quarter gone by. Do you expect some follow-through buying? Now it's not a 400-500 rupees stock. It's more than 600 rupees. But the news flow indeed was positive.
Good morning, Nigel. Yes, thanks. I did have a lovely weekend in spite of the 500 points loss on the Sensex on Friday. But, you know, the Tata Motors play is getting to become now a twofold, you know, two-vector move. One is that their debt deleveraging story is seeming much more finite, much more feasible and very effective. So there will be that impact what you had on the balance sheet when Tata Steel did that deleveraging globally and started becoming so nimble. Of course, you know, there were two different sectors, but automobiles seem to be in a very sweet spot of sorts, especially, you know, if there is some sort of a demand revival globally, Tata Motors will find some new legs to this rally. It's already done about 60-70% this year. So there, you know, the move may not be very rapid, but what it does is it sets a floor for Tata Motors to now be in this range. I mean, I was one of those believers that Tata Motors would not be able to scale these heights a couple of years back so quickly, but they've done smartly, they've done the right things. And interestingly, the EV business is where the competition is hotting up. I mean, you have M&M wanting to get into that space. You have Maruti launching only hybrid vehicles. So there is going to be a lot of competitive forces, intensity that will start impacting the market, the stock. But I think this deleveraging story is very big. It is something which is significantly going to move Tata Motors into a new orbit once that happens with this balance sheet. And don't be surprised if they actually end up getting into newer businesses or newer verticals within the auto space, especially the commercial vehicle side, which is languishing a bit. So, yeah, to answer your question specifically at 600, 18, 20, does the stock kind of have more legs? Marginally, yes, but it'll probably consolidate now and set the floor for around 570, 580, and then kind of have the new move when the next level of move when the balance sheet deleveraging starts fructifying it.
Oh, absolutely. And you know, this is very important, right? The fact that the management now expects free cash flow generation in excess of £400 million. Axis Capital, in fact, released a note this morning where they said that the expectation was about 300 to 350 million pounds. So in that context, the free cash flow generation that the management has put out is higher than analyst expectations, which I think should get factored in perhaps in today's move as well. There could be a move higher this morning. Prakash, thanks for that. We'll, of course, discuss a lot more with you. Let's take a short break. On the other side of the break, let me tell you what's lined up in the next half hour of the show. We have Anuj Singhal joining in for a quick trade setup. And post that, we'll bring you the top stock picks for the day from our technical and F&O experts. We'll also decode the stock rally in our Momentumizer segment. And before the market opens, in CNBC-TV18 Stocks Board, we'll highlight the top stocks in the news to focus on for the day. Stay with us.
TV18 and CNBC-TV18.com. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems in the middle of the...
Welcome back. On Friday, the Indian market saw profit booking after 8 days of an up move and 5 or 6 record sessions for our market. So there was a bit of a reversal. What's the setup looking like this morning? We've got Anuj with us. Anuj, hi.
Hi, Rima, Nigel, Sonia, morning. Good to have you back. The thing I'm focusing on today is the big FII number, especially in the futures and options market. Now, there's been selling of 975 crore rupees in index futures, stock futures 2370 crore. But this number, just look at this eye-popping number, 32,500 crores is the number in index options. Now, where did this buying really come from? Looked at the numbers further. Within that, what is really interesting is, and I think this is the number, and kudos to NSE for giving us separate data now, there's a buying of 35,385 crores in Nifty options, and there's selling of 4,300 crores in Nifty bank options. Now, that is okay, but this is a number to focus on. On a Friday, why would you buy 35,000 crores of Nifty options? I think that was really very interesting. And within that, what you found was that in calls, there was buying of 5 lakh options and writing of 3.4. So net about 1.6 lakh. So what my Baniya Buddhi tells me is that this is basically call spread. You buy calls of 19,400 and you sell 19,600, 700 thereabout. In terms of index puts, 2.2 lakh buying and 0.65 lakh writing. And that, my sense, is mainly in Bank Nifty. So the sense I get is there's been buying at 19,400 call on the Nifty and selling and buying of 44,700 put in Nifty Bank. A bit of a pair trade perhaps has been taken on the market. Now that's of course an assumption based on the numbers that we have. In terms of what to watch out for Nifty, the first support is a 10-day exponential moving average, which is placed at 19,200. And the bigger support is at 20-day exponential moving average, which is placed at 19,000. So the texture is still buy on dip, still these two levels are holding. And on the upside, the first resistance will come at Friday's high, which was 19,523.
Anuj, we were just discussing with Nigel as to 2 weeks back, the last time I was tracking the markets, we were discussing whether 18,000 is something that would hold or not. And lo and behold, here we are after 2 weeks, right? Debating at 19,500.
In a few days, we were talking about 20,000, Sonia. My view has been very clear that 18,000 to 19,000 took 21 months. 19,000 to 20,000 is going to take 21 days. And I think I'm still standing by with that.
Okay, I remember you said once that you're sticking your neck out, and luckily your neck is still intact, right? The views have come through. Thanks a lot, Anuj, for that. Well, let's take this view forward with Mitesh Thakkar and Shrikant Chauhan and ask them whether they continue to be bullish on the market or not. Both of them join in this morning. Mitesh, hi, good morning. Good to see you in. How are you feeling about the market now? Do you think some consolidation is likely, or is it just a bit of a pause, taking some time off before the next leg up?
Good morning. So, on Thursday and Wednesday, I was warning about the overbought indicator situation on the intraday chart, suggesting that we could possibly test 19,350. And if we start breaking below that, the correction could be slightly, or the profit booking decline or a pullback could be slightly stronger, and we might head towards 19,200. My sense is that next few days could be, yes, consolidated. But as long as we don't break 19,200, the trend will be on the upside. And declines closer to that would be opportunities for me to take and add on to long positions. So 19,200 remains a very important level for me on the charts and on the upside. Therefore, given the fact that we are still overbought despite the fall on Friday, my belief is that we might not be able to cross the recent highs very easily. So it could be a 19,200, 19,500 kind of a range. And then I think we should again continue our journey up after a few days of sideways activity.
Okay, all right. Mitesh, thanks a lot for that. Morning, Shrikant. Welcome to the conversation as well. How would you trade the index? You know, we had a bit of a pullback. One would say it's healthy. You don't want to see us break that 19,000 odd mark though. If you get an intraday pullback, will you look to buy into the Nifty or will you buy it at the start itself?
Yeah, good morning, Nigel. Yeah, I think if there is any pullback during the day, close to, let's say, 19,400 or 450, we should look for reducing some long positions, or in fact, we should look for creating some short positions with a stop loss at 19,530. We are not expecting market to cross the level of 19,530 so easily. It is going to spend time. So for the day specifically, if there is any pullback, we should look for reducing some positions or creating short positions. But in case if there is any quick correction close to 19,200 levels, then there we should be a contra buyer with a stop loss at 19,150. For the Bank Nifty, there also 44,700 is going to act as very good support, and if we see any drop close to those levels, we should be buying that.
Okay, all right. Thanks for that, Shrikant. Why don't you go ahead and tell us some of your stock picks as well for today?
Yeah, I think, see, from the bank space, specifically from the BFSI space, stocks which are undervalued or which are very close to their important support areas, but there is like clearly upside. I think in those stocks we are seeing buying, and all these PSU stocks are doing really well, but most of them are now from far away from their recent lows. So we like Axis Bank, which is not a PSU bank, but which is very close to its important support areas, and fundamentally also there is upside. So close to 975, 978, it's a buy with a stop loss around 960. We are expecting this stock to cross the level of 1,000 this time. So Axis is a buy at current levels. The other stock which we like is PVR, which was very close to its important long-term support area of 1350, 1370, and from there we saw good amount of recovery. So at current levels, I think the stock has formed double bottom. It is heading for the levels of 1500 or maybe 1530. It's a buy at current levels with a stop loss around 1380.
All right, and Mitesh, how about you?
So I have a mix of buy and sell calls, and PVR features on my list as well. I would suggest taking long positions here, and the stop loss which I would suggest is slightly aggressive, about 1410, target of 1490 to about 1500 on the upside is what I recommend. Also buy on IOC with a stop at 96 for targets of 105. And on the sell side is Dalmia Bharat Cement, looks slightly weakish on the intraday chart, so could give a pullback. Sell here with a stop at 2185 for targets of 2070. And UPL is a sell with a stop at 673 for targets of 640.
Okay, that's a big move in Dalmia Bharat, by the way. It's almost a 50% or 60% move that I saw on the screen in the last 12 months. So a lot of these spaces have done pretty well outside the index as well. Okay, let's do one thing. Let's take a short break. On the other side, we'll have the pre-opening rates kicking in. We'll also have Amit Purohit of Elara Capital to discuss the outlook on the FMCG sector. We'll also discuss the recent business updates for Q1 that were released by companies and all the action that's been happening with Reliance and its retail business. More on that coming up. Stay tuned.
Which is Barings Private Equity. They are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader. From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos?
Acha. Thanks a lot for staying with us on Bazaar Morning Call. We're just about heading into the pre-opening rates in a bit. The GIFT Nifty suggesting that the start will be mildly in the green, but let's get Chandan Taparia, derivatives and technical analyst at Motilal Oswal, to speak more about that. Chandan, hi, good morning. Good seeing you. Well, for the market itself, it's been such a strong run, barring one day on Friday. Do you think we're going to resume our uptrend? And if yes, what are the stocks to look at?
Good morning, Sonia. Thanks for having me. So really, we have seen good rally in the market in last couple of weeks, but last 2-3 days were some sort of consolidative. Even on Friday, it made high near to 19,525, but in second half, we witnessed some decline. So major trend is positive, but short-term trend is turning into the overbought territory. And because of that, market is finding some pause. And I believe this consolidation would over in next 1-2 days to commence the next leg of rally. So any declines towards 19,250 would be the opportunity to buy with major support of 19,100. And we are expecting this rally to extend to us, not only 19,525, but looking for a new high to us, 19,750. So utilize this decline with major support of 19,100 for the positional target of 19,750 and beyond in the Nifty index. If I look at the data setup, put call ratio fell down. But yesterday, like on Friday, when market was down, your VIX was also down, which is indicating that again decline could be bought in the market. Now looking at the Bank Nifty index that is making lower highs from last 3 days, has multiple support near to 44,444, and that support could act as a major role reversal level to extend the move towards 45,500 kind of level. Now looking at the stock wise, recommending to buy on Tata Motors. We have positive on most of the auto name, and all the auto stocks are in the 5th gear, and Tata Motors is one of the strongest counter, which has given an 8 years low consolidation breakout by surpassing the previous hurdle of 606. We have seen open interest addition of around 6 to 10% in the last 2 days. And fresh put writing is also indicating momentum in the counter. So recommending to buy with support of 606. The stock has potential to rally to our 650 level. Second trading idea, that is buy on Glenmark from the pharma space. We have seen 72 months long consolidation breakout here and holding well above previous hurdle of 680. Even positive price action indicating momentum to extend to a 720. One can buy with a stop loss of 675 in the Glenmark. Last trading idea, that is buy on Apollo Tyre. In last few days, we have seen good run up in most of the tire stock, including JK Tyre, C8, Balkrishna, and in F&O space, we like Apollo Tyre. The stock is continuously making higher top, higher bottom on the weekly scale. Recently, we have seen good recovery from 395 to 420. Short covering is also visible. So one can buy Apollo Tyre with support of 406, and stock has potential to rally to us 435 level.
Okay, Chandan, thank you very much for that. Let's find out where the momentum is. Manglam joins in with today's Momentumizer stock. Manglam.
Well, good morning. So I'm looking at Castrol because on Friday, where all the other stocks were declining, Castrol was the only one which is up around 2.5% and with good volumes as well, nearly 3 times what we've seen in the last 2 weeks itself. But, you know, I was looking at the long-term performance of the stock, and it's been a bit of an underperformer. In fact, in the month of June, it's up 6%, and in 2023 itself, it's up around 4%. So up until the start of the June, the stock was actually lower for the year itself. In the last 12 months too, it's rallied just about 19%. And from its 52-week high, it's still down about 6.5%. But from the lows, it has seen some pickup. It's recovered about 20% from its 52-week low. And lately, we've seen a big surge in a lot of these autos, auto ancillary and tire stocks as well. So that could perhaps be a bit of a trigger for names like Castrol as well, because it is related to the auto sector. But apart from that, crude prices have been stable. The volumes for the company and margins are something that we'll be watching out for. And finally, keep an eye out on any sort of market share improvement coming in for them. The auto stocks doing well. Their raw material price has stabilized. So let's see whether there is more momentum in Castrol or not.
Okay, all right. Manglam, thanks a lot for that. Castrol India, that's a stock that Manglam has picked up on our Momentumizers list. Well, let's move on then. Amit Purohit, VP at Elara Capital, joins us on the show to discuss about all the trends in the retail and the FMCG space. Hi, Amit. Good morning. Thanks so much for joining in. Well, before we get to all the quarterly updates that we have got, on Friday late evening, we got Reliance Retail. They'll be paying around 1,362 rupees per share towards capital reduction plan. What price did you ascribe to Reliance's retail business? And could you tell us, with this, do you expect the demerger to be in the works and value unlocking on the retail segment for Reliance Industries?
Yeah, good morning. Sorry, I would not be able to comment much on this space as I don't cover the retail side. Won't.
Sure. Okay, that's fine, Amit. Well, let's move on to what all you do cover from the updates that have come so far in the FMCG space, whether it's HUL, Britannia, Nestle, Tata Consumer. Tell us what's been a hit and what's been a miss for you this time.
So, I mean, clearly the hit has been Dower. So, Dower talked about some signs of rural recovery, which came in as a positive surprise, and that was kind of an encouraging. While we were expecting that FY24 would see some bit of volume improvement in the rural segment, just largely driven by base effects itself, given the fact that the base has been lower last year. 3 to 4% volume growth is kind of expected. As far as the misses were concerned, miss was to some extent on the Marico side, but this was more to do with a sharp decline in edible oil prices, which had pulled down the value growth for Marico. As edible oil prices are down by almost like 30% at the MRP level, and that impacted their value growth. These were the two kind of positive surprise and a miss during the quarter, while GCPL was encouraging commentary coming in largely on the home and insecticide segment, which saw double-digit growth.
Amit, just for the near term, is there a risk to the margins of the FMCG companies? Tomato prices have gone up. These unseasonal in the month of June, there was no rain. Now in July, there's surplus rain, harsh rain. Is this playing havoc in terms of the commodity prices? Can you give us the near-term trend of commodities and how it's impacting the stocks under your coverage?
Sure. So from a commodity angle, I think we are building in a kind of margin improvements while you highlighted tomato prices and all. From a FMCG consumer staples perspective, it has a little impact as I mean, it doesn't feature much on the commodity prices, and I believe that will be transient in nature. Having said that, in the near term, broadly, the margin outlook remains very strong for consumer staples, largely on two accounts: palm oil prices and crude. These two have corrected, and companies are likely to witness a strong growth. Q1, we are building a 20% plus growth in EBITDA, with clear outperformance coming from food companies as of now, which are benefiting from the lower vegetable oil prices. And then going forward, we believe that the non-food companies like Hindustan Unilever will also start witnessing margin improvement going forward.
All right, Amit, I hope you're tracking this one. I wanted your thoughts on ITC. We here at CNBC-TV18 learned that the company has set the ball rolling with regard to the hotel demerger. How much value would you ascribe for it? I was looking at a rough analysis in terms of revenues as well as on the profitability front. It contributes 3 to around 4% oil. The problem is on the capex, the hotels business consumes more than 20%. So how much value would you ascribe if it had to happen?
So, I mean, we are actually already, when we do our SOTP analysis, the hotel business, we already account for around 7 rupees per share. And that is already there in the numbers. Even if you remove the capex side of it, capital employed, there will be a marginal improvement in the ROEs by 1 to 2%. So that should be the case. But from an analyst perspective, we are kind of building in our numbers the hotel business separately. And while this strategy is a step in the right direction, as probably it will be able to focus more on the core businesses and remove the capex heavy business like hotels.
So what does this mean for the stock? Because there's been a 60% rise that we've seen, right, in ITC over the last 12 months. At this 470 rupee price, is the risk reward still favorable for long-term investors?
So, I mean, we'll have to look at ITC's cigarette volume growth, right? So that story has been very strong over the last 1 year, and which has helped the stock also to do well. This quarter as well, we are building in a double-digit kind of a growth. We expect low teens kind of volume growth with the base effects coming off in the ensuing quarter. So we have an accumulate rating and remain positive on ITC from a longer-term perspective. Having said that, the growth trends that we have seen in the last 1 year or so in the volume growth unlikely to get repeated in terms of a double-digit volume growth because the base effects now kicks in. But we remain constructive on it.
Okay, thank you very much for that. Amit, look forward to chatting you when the actual numbers come out for Q1. Prakash Diwan is still with us on the show. Prakash, anything in the FMCG or in the consumer basket, which houses, of course, jewelry to QSRs to the footwear companies, anything that you like right now and you would recommend a buy ahead of the earnings season?
So I think one of the key beneficiaries of this rationalization of unit prices and RM costs is going to be Britannia. It's a stock that probably is slipped off a lot of people's radar just because FMCG as a space has not been the hottest sector to be in. But going forward, post this monsoon, and while it's unfortunate that we have a lot of floods in parts of India, but the kind of water levels that we've already attained in reservoirs tells you that at least the irrigated agriculture side is going to be fairly positive going ahead. And if globally things are kind of, commodity prices are softening and even food commodity, elements are easing out, I don't see any reason why, given their premiumization that's so successful, Britannia won't benefit. So I'm quite positive on that. It hasn't really run up also too much. So there is headroom in terms of a catch-up. And the other stock within this space is ITC, though, we do feel it's run up so sharply, 60% or whatever in the last 1 year to this level. It's actually a catch-up. I mean, ITC should have been about $400 last year itself. It's just that, it kind of came into the party late. So my sense is it will continue to grow its FMCG business while all that capex that you just discussed on the hospitality side will also start throwing up cash at some point in time, given the huge traffic that they have. I mean, the Ahmedabad property, for example, given this World Cup between India and Pakistan, it's been sold out in the first couple of hours of that announcement. I mean, these kind of moves which happen will tell you that properties that they've built are actually sweating out the assets much faster, much better than what they've done traditionally in the past. So it's a whole new game for them as well on that sector. So I'm very positive. Matter of disclosure, I do have exposure to this name, but I think FMCG as a pack overall would probably start looking up from the next quarter, the next couple of quarters, very, very strong.
All right, Prakash, thank you for joining in. Have a great day and a good week as well. We'll come back to you later. For now, the market opening is upon us. Looks like it's going to be a decent opening. Mitesh is joining in with some views. Mitesh, what's the big call at 9:10?
So I'll go with the buy call on PVR, keeping the stop at 1410 for targets of 1490.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's do a quick revision of the stocks that we're looking at. Vedanta Limited, well, in pre-open, it's more or less flattish with actually a bit of a positive bias. On Friday, they have announced that they're adding the semiconductors and the display glass ventures to its portfolio. So both those two entities. Now, both entities, they are owned by the parent. That's by Twin Star Technologies Limited. And in 2022, the management actually had said that the business will be done by the parent itself. That's Vedanta Resources. But now we know that, Vedanta Limited, that has all the cash flow. So it seems that they're a bit of a change of stance and now they bring it into the listed entity. The reason for this move, they believe that there's huge growth potential in both these two segments. It's also good for India because as of now, we're importing almost entire of our requirements. The reason that the stock could have reacted negatively, which it hasn't, it's because it's a related party transaction. It could demand huge capex, given that the initial investment that they were talking about is 1.5 lakh crore rupees. And also, will it impact the dividend payout, which has been the juiciest part? So let's see how that stock reacts for the time being, mildly higher. But Sonia, what about Reliance?
Oh, it is the biggest gainer, right? In pre-opening as well. So looks like that's going to be really batting for the bulls this morning, Reliance Industries. Now, if you missed out on the data, here it is. The board of Reliance Retail has now approved a reduction in the equity share capital of Reliance Retail. The consideration is at 1362 rupees a share, which is much higher than what a lot of brokerages had estimated. brokerages by and large had ascribed a value of 900 to 1,000 rupees a share in their SOTP. Now, this exercise is eventually a part of a larger succession plan in Reliance Retail as well as listing of the consumer business. JP Morgan, in fact, put out a note. They're overweight. They have a price target of 2,960, which is much above the current market price of Reliance Industries. They say there are two key positives here. One is that the implied diluted valuation and the independent valuation are all higher than what was expected and higher than the equity value at which the stakes were sold in RRVL way back in 2020. So all of this ascribed valuation is at $90 billion, which is much higher than when the stakes were sold earlier. And the second is that the buyback of the small number of non-promoter shares is a cleanup of the shareholding before any eventual IPO of the retail business. So that's the big stock in focus. Let's in fact take a look at how Reliance Industries is doing this morning. The first tick on the opening bar is about 2% higher, and making sure that the Nifty stays above the 19,370 mark. In fact, decent opening for the market. You have a 30-point opening on the index. The Sensex is up about 98 odd points, and the mid-cap index is also trending in the green right now. The Bank Nifty is sulking a tad bit, but nothing alarming really. Reliance is your top gainer, followed by Tata Motors. As we were telling you, that stock as well has been gaining quite a bit of ground and good wholesale numbers, 30% higher than what they did last year. Apart from that, Bajaj Auto, HDFC Life, Britannia are topping the charts as well. So looking pretty good actually for the market now, building onto its gains. Almost 60 points higher for the Nifty, inching towards that 19,400 mark. Sounds so strange, to say 19,400. I was saying 18,000 for the longest time, and suddenly you're like 1,000 points higher over there. But, well, that's the market for you. A lot of auto stocks, right? Tata Motors, Hero, Eicher Motors, all in the green. Maruti Suzuki, many of them at new highs as well. So what is dragging the market? HCL Tech. And, Rima's been telling us that the numbers are not expected to be that good. So the stock market is sort of pricing that in. TCS ahead of its numbers is in the red. Tech Mahindra is also in the red. Infosys in the red. So, well, IT is having a bad start to trade. Divi's Labs is also down about 1.5%, followed by Bharti Airtel, Bajaj Finance and Cipla that are not looking that good. But give and take everything, you'd have to say that, the market opening is solid and not bad. I was fearing that, there would be a bigger fall further after what we saw on Friday. But I think the market just took a bit of a breather and now are back on the running wicket.
All right. Sonia, Bajaj Auto, that stock is doing well. It's seeing a follow-through after last week's big move. So that's up close to around 1.5% or thereabouts. Eicher Motors, remember, it got slammed last week. It lost more than 10 lakh crore in terms of market capitalization. The stock was trading at around 25 times. It's come down to around 21 times its forward earnings. How much of the bad news is in the price? Time will tell. But that stock at least is stabilizing as we speak. From the broader markets, one stock that's flying away is Electra Green Tech. They won a massive order, a couple of sessions ago. And that stock is up close to around 10%. Volumes as well, absolutely huge. For the month itself, the stock is up close to around 38%. A few other notable movers. Max Ventures, there was some positive news flow that came in earlier. The stock is up close to around 5% as we speak. So that one's moved to the high point of the day. And from the frontline F&O names, JSW Energy, what a big re-rating actually that stock has had. It's up close to around 2.5% odd. They're adding capacity and they're doing it, also in the renewable space. So the street likes that. Stock is up 2.5%. GNFC is up close to around 1.5%. IOC is up close to around 1.5%. So good going out there. Balkrishna Industries on the flip side, that's down close to around 2%. And Vedanta for starters, well, it's as flat as can be. So no big reaction being seen on that stock. They're going to be getting both the semiconductor business as well as the glass business into the listed entity. But for the time being, that's as flat as can be. Hindustan Zinc, the stock ran up 10%, nearly around 9 to 10%. When they made their announcement, they're going to be considering an interim dividend. It seems the street wanted more. They declared a dividend of close to around 7 rupees. Remember, in terms of a float, there's only around 2% in the market. The remainder is locked between the promoter, the Government of India, as well as LIC. Stock down close to around 4%, giving back some of those gains that it put on in the past week. Rima, what else?
Well, the flyer in, the stock which is flying in the mid-cap space is Keystone Real Estate Developers. The stock is up 6.5% in trade. It's popularly known as Rustam J when it develops land parcels and builds buildings out here, at least in the Mumbai region. And the stock has gained 5.5% in trade. The company gave an update on their Q1 quarter, and the sales have doubled on a year-on-year basis at more than 500 crore rupees, which compares with 240 crore rupees. So that's a stock which is gaining in trade. Max Ventures, is also higher by nearly 4%. Here, the company has announced that its real estate arms, Max Estate, had launched its first luxury project in Noida. It was called Project 128 or some Estate 128, and it's seen pre-sales of 1,800 crore rupees. And I was just reading the pricing of this project was one of the most costliest ones in Noida. They were selling it at 18,000 rupees per square feet, the most expensive in Noida, and still it's garnered pre-sales of more than 1,800 crore rupees. IRB Infra is also higher in trade after the June quarter. Toll updates suggest a growth of 18%, and the management has indicated that they expect a similar momentum for the rest of the year. You've got Suzlon, which is also higher in trade after the board on Friday approved a fundraise of nearly 20,000 crore rupees. By the way, the mid-cap index has dipped into the red.
Just one more point. Reliance, their financial services arm is going to be de-merged. Will Bajaj Finance's valuations come under threat? For the time being, Reliance is up close to around 2%. But Bajaj Finance is down close to around 1% odd. Remember, it had a big run post its update that was declared close to around a week or so ago. But as we speak, that's moved to the low point of the day. So are those elevated valuations under threat? Because now you have another entity that maybe, in fact, could give them a bit of a run for its money.
And in other businesses, they've sort of monopolized the market, right?
Yeah.
In several businesses in just a span of 1 to 2 years. So the threat is that perhaps in this business, they could do the same. Absolutely. I just want to make one point on Olectra Green Tech. In March, when I spoke to the management, they had said to me that they're putting up a new plant in Hyderabad to manufacture e-trucks and buses. And they've acquired already 150 acres of land in Hyderabad. And this will be the biggest electric manufacturing facility in India. So, of course, since March, the stock has really rallied, perhaps anticipating all of this fresh demand that has come through and the new plant that's the company is going to be putting in as well. Just look at that spike up in just the last couple of months. But Kenneth Andrade, the founder and CEO at Old Bridge Capital Management, is joining us now to talk about the markets and how he's feeling about the big push that we've seen lately. Kenneth, hi, good morning. Thanks for joining in. It's been such a spectacular market, right? I mean, new highs and earnings have been picking up substantially. But what from here? Do you think this pace of growth is something that the market can sustain? And how are you approaching it now?
Okay. So we've come into a place that investors just had to remain invested, and you would have gotten a lot of capital gains on your books. Big question that Sonia you asked was what from here? Look, if you look at market cap to GDP, we are trending towards the higher end of the entire buffer zone, which is 1.1 time market cap to GDP. So we've been here before, but the follow-up of that hasn't been extremely good in terms of how markets have evolved over the next couple of years. So valuations are fair, but some part of the market has gotten reasonably expensive. So you've got to tread with a little bit of, I wouldn't say caution, but a large part of the valuation is already on the table. Incrementally, you'll have to be very narrow in terms of how you want to participate with the marketplace. And that cuts down to how financials have also played out. Now, when I talk about financials, I say corporate financials. It's difficult to find a company that makes a loss. Of course, there's a couple of them that are there, but in the NSE 500, about 15 companies make operating losses. Okay, and that also as a percentage is extremely low to where we've been historically. So we're going through a period, or rather India is going through a period where you're seeing the best of everything that is on the table. Margins are there at all-time high. Companies are doing extremely well in terms of cash flow. There is no debt on balance sheet, and valuations are representing all of it. Okay. So that's where we are. Incrementally, I'm not too sure that you'll maintain the pace of growth that the market has displayed till now, and you'll have to be a lot more selective in how you participate in the marketplace.
Kenneth, morning. Have you booked profits in any of your holding stocks? And if yes, could you give us an indication where you believe things have gotten a bit overheated?
So from a plain process point of view, just look at businesses that are all-time high in terms of margins, okay, and are trading significantly expensive to where they have historically been. I think that's a space that we are incrementally taking money off the table, right? So we haven't churned our portfolio for like the last 3 years, and a lot of those businesses have done reasonably well to extremely well. But anything that is trending over that 30-time multiple and also is gotten all-time high in terms of operating budgets, I think we are a little circumspect of those businesses, and we are taking money off the table in some of that. But the challenge here is, and while that's one part of the answer, but the challenge here is the reinvestment risk that we are facing, because we will end up chasing something else. So we're not in a hurry to take money off the table. We'll just probably ride through this entire cycle into the next couple of years. Our portfolio churn should be about maximum about 15 to 20% this year. I don't think it's going to be incrementally more.
All right. Hi, good morning, Kenneth. Thanks so much for joining in. Kenneth, I wanted to ask you about how you position on the IT space, because that's going to be the big theme that will play out, particularly for the next week or a couple of weeks at least. Are you looking to buy into it? Is it a contra trade for you? Or do you believe plenty of hurdles ahead, so you'd rather stay away and you'd rather be negative?
So the best way to capture, to build a portfolio is actually to try and capture it on the downside. Because what happens is you've got all the negative news. All of that is also reflecting in valuations. And because of the combination of two, okay, your downsides are limited. Now, look, most of these companies are extremely mature. They're facing a global economy, and all the negativism that is sitting out there in the global economy is representing in where the valuations trade. Now, none of these companies are doing lower business in terms of volumes, right? So always looking at over the next 6, 8, probably the next 1 year is how and where do we participate in this segment of the marketplace. Now, this is very representative of how investments in how the process works. Probably, if I step back about a year or 2 years back, where we articulated our portfolios articulated the same on pharmaceuticals, and now you're seeing all the pricing power coming back, or some part of the pricing power coming back. Right? I think IT is going through the same format right now, and remember, this is a global business. This is not an Indian facing business. Only India part of it is lower employee cost compared to the West. So I think that's essentially the positioning that we would want to take going into the remainder part of this year.
So you would be a contra buyer into IT?
It's not contra really. You're just buying into bad news.
Buying into bad news. Got it. No, I meant contra because most of the street is a little bit skeptical on it, and you are looking at it a little positively. So you're looking to buy into the bad news. Got that, Kenneth.
Okay, well, that's always a good thing, right? I mean, buying into bad news and perhaps taking advantage of the fear in the market and going out there and being a bit greedy. That's always worked in the past. By the way, I wanted to mention that the Nifty Auto Index has once again hit a record high. And so many auto stocks are at fresh record highs this morning, whether it's Tata Motors, Bajaj Auto and the whole lot. Of course, it's been a norm for a while, but these are fresh records. And something like a Bajaj Auto is up about 1.5%. But Kenneth, I wanted your thoughts on what's happening with Reliance and the Jio Financial demerger. Now we have the date out as well. You may not want to comment on the individual stock, but you know what's going to happen with Jio Financial Services is they are going to disrupt a lot of these spaces, right? Whether it's lending, wealth management, insurance, the payment finance, banking space as well. Do you think for companies like Bajaj Finance, now that a supposedly large competitor is going to come in, this could perhaps derail growth plans there? And what about the industry as a whole? How are you looking at it?
I'm not too sure it will derail any other participant because the marketplace itself is significantly large. And if you go on to address the bottom end of the population, I think that's a very broad the bottom pyramid of the population. That's a very broad and large category of borrowers to address. So no one's going to run out of the market. Now, it all is now left to execution. Now you've seen Bajaj Finance execute, or you've seen one company actually execute. You've got a number of other companies in the NBFC space who are also executing. But probably in terms of scale, in terms of growth, there's one company that leads the pack. The challenge in all of this is to find another participant that will grow. And if I had to relate it to anything else in the past, in history, given the fact that the marketplace is so large, okay, one private sector bank got established, the second private sector bank also got established, and then there was number 3 also that was there, and the number of companies that came through in private sector banking only expanded. I think the same thing is happening in every other industry that you will see, including NBFCs or financial services. So one company leads the pack, the second company will establish itself. I think over the next couple of years, you will see one dominate the other, or probably both of them split the market between themselves. So it's all about execution. It's too premature to talk about who's going to execute better and is someone going to lose market share, but I think the opportunity is reasonably large and scalable for everyone who's out there.
Kenneth, PSU banks have started seeing a lot of buying interest with names like, Bank of Baroda. The growth rates are also benefiting on account of the low base. But would you be positive on PSU banks at these levels?
So, Rima, if I just step back again, if you want a valuation trade, you'll always find one in the marketplace. Okay, and some part of the public sector businesses fall in that place. Some part of the IT businesses fall in that place. Are they the best businesses around? I think it's left to individual investors to decipher that as to how to play this entire category. Sure, there is a bank or two out there in the public sector space that offers a lot of value with reasonably good execution. But will they form a core part of our portfolio? I think we sidestep this entire space completely, and I don't think we're going to go down that path again. So it offers value. Some execution is great out there, and it will obviously make reasonable amount of money for over the next couple of years. But always remember, this is this sector of the economy, anything which is government-led or which is public sector enterprise, right, is always reflects the state of the economy. If the government's balance sheet is cleaned up, or if the government balance sheet does well, public sector enterprises do well. Okay, and it works the reverse way also. So you're essentially playing a structure of improving financials on the government in the government, and the offshoot is these companies tend to do reasonably well in that format.
All right, Kenneth, final question before we let you go. If your markets are moving in your favor, you like to celebrate and open maybe a bottle of champagne and celebrate it. And if it's not going in your favor, maybe you drown your sorrows as well. I think you all had some exposure to the alcohol space, right? Global Spirits, if I'm not mistaken, and a couple of other names as well. How are you all positioned? Radico as well, if I remember correctly. How are you all positioned on that space? A lot of the good news is in, or do you continue to hold on to those positions?
So again, Nigel, it's been a phenomenal year or two for this industry. I think we've seen volume that we've never seen before again. And if I'm not mistaken, from all the statistics that have come out, India is the largest consumer of alcohol in the world. Right? I don't know if that's a good thing or a bad thing to talk about. But if you're at this position at this point in time, I think the marketplace is an opportunity to tear up in terms of pricing, which is what the market is all talking about, premiumization. So you've got the consumer, you've got to make sure that they pay more for the same product. And if these companies execute well, I think the profitability could be very staggering over the next decade.
Okay, and you all have exposure in both these two names, Global Spirits as well as Radico? Just to confirm.
Yes, we're both.
Okay.
All right, Kenneth, you heard Nigel say it, right? Whether you want to drown your sorrows or you want to celebrate the markets, the antidote is the same. All right.
Good or bad thing, we don't know, but it's reflecting well in the stock prices.
It's reflecting well. Okay, people are celebrating. Thanks a lot, Kenneth, for joining in. The market is celebrating as well, looking pretty good. Not giving up on any of its gains just yet. The only problem is in the mid-cap index, actually. The mid-cap index is now down almost about 100 points, but no great shakes, just sort of consolidating after what was a terrific run in the last many days. But let's move on. Let's get you some excerpts from an exclusive conversation. Earlier, Prashant caught up with the top leaders from the Shriram Group on the business growth opportunities for different entities going forward, and also discussed their overall vision for the coming year. Let's listen in to what they had to say.
The next big opportunity, or maybe the gap which is available, credit gap. See, ultimately, as an intermediary of financial product distribution, you look at where is the gap, credit gap, and go. Here the credit gap I see in MSME lending.
Okay.
As per the IFC report 2 years back, around 32 lakh crore is the credit gap in the MSME lending. We are not getting into all MSME. We are getting into small businesses, maybe around 5 to 10 lakh ticket size, and merchant classes. We believe that's the big opportunity for us to get in. And we do have that product, but it was mostly focused in the south. We would like to take it to all India, because today with the merger, we have all India network with us. So with 3,000 branches, our ability to reach out and offer this product is much better. Recently, we also tied up with Paytm, so that the infrastructure built by them on digital is also being accessible to us. Because all these merchants who come into Paytm, onboarded into Paytm, they have a credit history there for 6 months, 1 year and all. Once there is a credit history, then we can have a rule engine, credit rule engine, and then we can offer credit to them. That is something which we would like to do.
Talking about the insurance business, Mr. Gujral, on the general insurance side, the business is largely motor, right? 95% odd is motor.
Correct.
What's the plan? Do you plan to diversify into non-motor in a big way as well?
Starting the current year, it looks like that we will be hitting at around say 10%, which was around 5% over the last years. And in the next 3 years' time, the plan is that we should be taking it to around say 20%. And the 20% also will be more in terms of a larger GWP base. So it's 20% will be a worthwhile proposition. And the only reason we did not grow was a deliberate cause, because we thought that the pricing at which the industry was operating for the premium in the non-motor segment was not a viable premium. So now we have taken a conscious call. We have expanded the teams. We have brought in engineers to look at the risks very closely.
All the changes we are seeing from the regulator, we've got a very super active IRDA over the last 1.5, 2 years or so. I mean, does it mean a lot more competition in the space? Or do you think, it helps in accelerating the growth for companies?
Current chairman has actually been going very aggressive, very bullish in terms of expansion and the penetration piece. In fact, he is talking about the insurance companies growing at around say 40% and all. So I think there's a vision from his side. SGI on a standalone basis, the last quarter has been growing at around 40%. We were growing very fast earlier on also. I think one major important feature that we would like to highlight here is that when Ravi was talking about the capital requirement, we are currently at around 4.91, which is the highest in the solvency in the country as a whole.
Is there a listing coming soon?
Should it, because KKR has made investment. They made an investment of around 9.99 and valued the enterprise at around 18,000 crores. So logically it should be on the card, but not in the very near future, but should take place in 3 to 5 years' time.
3 to 5, 3 or?
They would love to have it in 3.
Mr. Durvasan, on the chit side, sir, what's the plan? I mean, we were discussing earlier that is the, in a way, the fountainhead from where a lot of the other customer pool really comes from. Talk to us about that.
Shriram is making profit from day one. You take Shriram City in Finance. So you have started doing very well in the Shriram City in Finance also. We did a two-wheeler business and SME loans and personal loans, gold loans, all these things we did. You converted the children business to the finance business almost.
Other businesses.
Yeah.
Like where we're seeing with other businesses, external talent being brought in, etc. I mean, what's the thinking internally about leadership? I mean, getting the next set of leaders on board.
See, ours is a unique organization where the leadership actually comprises of the promoter at the trust level, because the ownership of Shriram Capital for the promoters is with Shriram Ownership Trust, and many of the key management are members of the trust, and that is how it has evolved, the structure. So when we are looking at the leadership which is required, obviously if we look at the numbers what we are indicating, we need a wide range of leadership across skill sets. And it is essential that we will need to look at both external and also see how we get the internal talent in place to reach that level. So we have a very structured methodology where both at the operating company level, we have mechanisms to attract good talent and provide adequate stock options, etc., for them to evolve as good leaders. And also at the ownership trust level, it is a perpetual trust. So there will be a set of existing leaders, and we also continuously evaluate and induct leaders who can actually manage the future. And that is how it has evolved till now, and it is going to evolve in the future. So whatever we look at, we don't look at for the short term, but we need to have a structure in place which actually looks at the next 50, 100 years. And this trust mechanism where primarily the entire key management comprised of the members of the trust has been very effective.
So at operational levels, you get people from outside, but at the very top, I mean, it's usually the idea is to group people internally, identify people internally?
Not necessarily. Because both the members of the trust actually comprise of both those who look at strategy across entities and also look at leadership at the operating entities level also.
Right.
So it is always a combination. And there is always a scheme where the people at the operating company level can also move at to the trust level as part of the owner set. Right. And because it needs a constant change as we move along as time progresses, and so the structure takes care of that.
Interesting conversation there with the top management of the Shriram Group. We'll keep getting you more updates and excerpts through the day. But let's talk about the weather. Torrential rains have wreaked havoc across North India over the weekend. Delhi on Sunday saw its highest rainfall in a single day in July since 1982. Schools have been given a holiday and the Met is predicting more showers today. Chandigarh's Municipal Commissioner IAS Anandita Mitra joins us for more. Ma'am, thank you very much for joining in. How are you all handling the situation there in North India? It's getting drenched in rain. Schools have been given a holiday. Are you sensing a lot of impact on the factories and industrial production too?
Thank you for having me. Yes, we've been facing unprecedented and torrential rains, more than 300 mm of rain in 24 hours. Next 5 days to see continuous and unprecedented rain. We are hanging in there. Chandigarh has also never seen an overflow of the Sukna Lake. But then the Chandigarh administration and the municipal corporation has come together and set up quick response teams. We are constantly addressing water supply, waterlogging issues, but not just waterlogging. We have huge issues of fallen trees because Chandigarh is also the city of trees. And in this kind of inclement weather, it's proving to be pretty difficult. But yes, we are hanging on.
Okay, do stay safe, Ms. Mitra. Thanks for giving us the updates. It's very unfortunate, especially to see those images of floods wreaking havoc across the state, and we hear that the casualties are up to 18 so far across the North India district. What's the latest you're hearing on that in terms of casualties? And also just coming back to what my colleague was asking you, in terms of business, corporates, etc., getting impacted, what do you see as the situation so far, and how long will schools have to be shut as well?
Business, yes, because for obvious reasons, we have requested people not to venture out of their homes until and unless absolutely necessary. So definitely the retail business is being impacted. As far as the production units are concerned, Chandigarh doesn't have too many of them, and on the industrial or the production units.
Okay, all right. We'll leave it at that. Thanks a lot for giving us an update, and hope the situation improves across the northern belt. Thanks, Ms. Mitra. Well, for the market, it's still holding on, actually, looking pretty good. So it's a 67 point gain that we're seeing on the index, not given up on any of its gains so far. We'll take a quick break. On the other side, Deven Choksi of KR Choksi Securities and Gurmeet Chadda, the partner and CIO at Complete Circle Consultants, will be joining in. There are lots of developments that have taken place within Reliance Industries, so we'll put the focus on that. And we'll also be joined by Probal Sen of ICICI Securities to discuss expectations from the oil and gas sector in Q1 in our special segment, Quarter Se Quarter Tak.
Welcome back. Well, the markets are holding at around 19,400 odd, but that's only courtesy Reliance Industries. Actually, stripped of that, the markets would have been in the red. Reliance Industries is up close to around 3.5% or thereabouts, and that's the reason why the Nifty is in the green. If not for that, we could probably be in the red. Just one more stock. Idea Forge, it saw a blockbuster listing. It doubled your money here, doubled your money on listing itself. Well, today it's pulling back a little bit. Idea Forge is down close to around 6%. As we speak, mainly valuations got a little bit stretched out, maybe too much euphoria into the stock, so it's pulling back a little bit this morning. Well, Deven Choksi of KR Choksi as well as Gurmeet Chadda, Managing Partner and CIO at Complete Circle joins us to discuss about the entity that will be demerged from Reliance Industries. It's a financial services company, and also what kind of impact it could have on other NBFCs. Good morning, gentlemen. Thanks so much for joining in. Well, Deven, you go first. Tell us what kind of a value are you ascribing to it? It's going to have a lot of capital, so it will have the ammunition to grow from here on as well. What valuations would you give it?
Hey, good morning, Nigel. Well, I think on the first place, I think this particular company, Geo Financial Services, assumes, I think, the capital of around somewhere around 1,50,000 crores, out of which I think about 1,10,000 crore would be the shares of Reliance Industry which they hold, and balance would be in form of their cash net worth that they have been having in the books. So typically, when you look at it in this kind of proposition, I think when you compare with the other largest peers in the industry, they are probably, I think, if not more, 2.5 times, 3 times more, I think, or more than 3 times rather, in my viewpoint. I think from Bajaj Finance could have about 45,000 crore worth of net worth, as against which I think here you are having net worth, actual net worth in excess of around 1,50,000 crores. But even if I had to take the haircut of the shares, it is around 3 times. So from that perspective, I think you're likely to see the sharp jump into the business going forward because of the net worth that they have. On the other side, the business proposition is that you have the merchant lending business on one side and the retail lending on the other side. As far as retail lending business goes, I think the electronics segment of the business could be, I think, the prime driver of the higher amount of credit offtake is concerned on subvention pricing, which this company could take an advantage of in form of getting higher amount of NIM. On the other side, the merchant lending, because of the presence with the Kirana stores, they would probably have this ready to consume credits as far as the market is concerned for them, which could also drive the business for them for the retail business. So in my viewpoint, I think as far as Geo Financial Services is concerned, this is going to be, I think, accretive for the shareholders of Reliance Industries from the day one, because in a 1:1 ratio, the shares are being allotted. And that is where probably I think you are likely to see higher amount of growth into the stock price. I haven't calculated, I think, per share impact immediately as far as I think what exactly would be the impact. But we believe that I think 3 years from now, the business of Geo Financial Services could have assumed the book size of around 10 lakh crores. So that is where we believe that I think the higher valuation would ultimately be available to shareholders of Reliance from Geo Financial Services eventually.
Okay, so 10 lakh crores is what the book of Geo Financial Services could be. You're saying 3 years from now, the total business and how much it's valued, right? In fact, I wanted to get Gurmeet into this discussion as well. Gurmeet, when we were chatting earlier, you said to me that, Geo Financial Services, once it comes through, once the listing happens, is going to disrupt a lot of spaces in a big way, whether it's lending, wealth management, insurance, payments bank, etc. How much of all of that you think is already in the price of Reliance Industries?
Not much, Sonia. I think it just moved up 3-4% today, and it's been in a range, that 2,200 to 2,700 range now for almost a couple of years. So I think I agree with Devin sir that if you see at 6.1% stake at today's market cap is about 1.1 lakh crores roughly, and you add the other, if you add the combined net worth and divide it by the number of shares, the book value would be close to 200 odd. Huge excess. So, you have Geo at 44 crore subscribers. They clearly have a sense of how much is postpaid, prepaid, what is the pattern. Then you have, Reliance Retail at 18,000 stores, and they're leader in a lot of categories, including groceries, lifestyle, electronics, as Devin said. Also, RIL or entire vendor system, they exactly know, it's a huge vendor ecosystem RIL has across various businesses. And the best part would be that they will get a AAA rating, courtesy the AAA rating of RAL. So the cost of borrowing would be in lines with some amongst the best. In fact, would be lower even than Bajaj Finance, etc. So if you have a cost of borrowing lower and you have a huge network client base, good data analytics other than your traditional credit-based, bureau underwriting, I think this could be, and they've made a mention of that they want to list the consumer businesses eventually. So I think a lot of future value unlocking is in store. What you're just seeing right now is probably a beginning.
Yes, Reliance can leverage the entire network effect of Reliance Jio as well as Reliance Retail, and one should also watch out for attrition at the other NBFC or payment companies, because as Reliance Jio looks to build this company into a behemoth, it will be looking for talent, and the talent could come in from the existing players. Deven, I know it's very early days and a lot depends on Jio Financial's execution, but would you be cautious on any of the lending franchisees in the NBFC space, the likes of, say, a Chola or a Bajaj Finance? Is it time to, just, take a step back from investing in these companies to see how this entire battle plays out and competition heats up?
Well, actually speaking, I'm not too much concerned about how exactly it is going to play out for the competitors for a season. Because on one side, the credit growth is systematically growing for all the players. It's not that I think for only few players it is growing. On the other side, every other player has a book size, which is, I think, limited to whatever they can lend. So from a perspective of looking at higher amount of ability to lend, and if Reliance Jio Financial Services entering into this particular market, somewhere they are also going to convert the unorganized market, I think, into an organized market through a systematic use of the platform-based disbursals of the credits. And that's where probably I believe that they will have a larger opportunity at the same time. Say, for example, today Kirana stores, as known, I think they also resort to a significant amount of unorganized sector of lending. Now, if these Kirana stores are linked to the entire Jio platform solution, then the credits goes naturally to these Kirana stores, and that market is absolutely untapped at this point of time by most of the players, which could possibly, I think, become a real market for them. Similarly, on the other side, I think likes of Bajaj Finance has successfully created a model wherein I think they produce zero EMI based customers in different verticals. Now, given the size of Bajaj Finance, I think if you have larger amount of balance sheet available elsewhere, then probably I think the customer is on the other side who is consuming more, and that could create another set of market. And that is where again I believe that Jio Financial Services could play a role. Yes, I think the threat remains to those players who are unable to process loans in time at the instance itself. If they cannot process it by use of the technology, certainly I think they would be relatively at disadvantage. But I think that fraction of people are relatively small, and the size of their balance sheet is also small. Like for Bajaj Finance, I believe that I think they are very well and adequately placed, even with the technology that they are having at the front end. I would not be unduly perturbed about the entry of Jio Financial at this point of time. And as I said, 3 years are required for any financial company to build the model minimum. And that's where I think the Reliance Jio Financial will have to, demonstrate in next 3 years how exactly they'll successfully make inroads into different markets.
Okay, all right, Deven, taken note of that point. Gurmeet, what about you? Bajaj Finance, you have been fairly positive on the stock and it's worked very, very well. On a price to book basis, well, it's at, it's one of the most expensive stocks, but maybe for good reason. Given that the stock is under pressure, would you look to get into it? Or do you believe now with the entry of a big formidable player, there's a risk to that price to book multiple itself?
Nigel, I agree, not immediately, but there will be eventually a risk because Jio, if you see disrupted mobility, so some margin pressure could come in as they disrupt, and Reliance is known for scale. So it will not happen immediately, as even Deven said, it will take time, and NBFCs take time to really build scale. But at Reliance level, the scale will be built much higher. And I think a lot of these new age businesses, you need to now value on basis they're earning multiple more along with the price book, because they're basically a play on consumer spending in India picking up, more largely discretionary. Second, credit creation. The 40-50 crore customers now coming in the formal credit did not have access. So there is space for everyone. There's a space for Credit Access Grameen, Equitas also. There's a space for the digital lenders, including Bajaj Finance or even Paytm right now. And there is space for large. We probably need more Bajaj Finance and Jio Financials and SDFC as we embark on that journey, right? Because the overall market is large. But I think the big story to me is the value unlocking in RIL. I think if you value even retail, if you take both the developments together, RRVL now is valued at almost $100 billion with just 13% contribution to EBIT. Jio Financial Services will get demerged. Eventually, Jio also will get. So technically, at current valuation, oil to chemical business is virtually free if you just evaluate, just the valuation. So I think now it's a beginning of, as they've made points that consumer business is getting listed separately over next 12 to 24 months and a lot of value unlocking happening.
Okay, I guess the comparison with Bajaj Finance and GFS is valid, right? I mean, if you look at just the numbers, Bajaj Finance's consolidated net worth stands at what, $7 billion right now. And GFS, after it's infused with 6% of Reliance Industries treasury shares, implies a net worth of $13 billion. So straight off the back, it starts off as being the largest NBFC in India in terms of net worth. So I guess that's why Nigel's question to you on Bajaj Finance and the comparison then, whether it's a big threat. But thanks, gentlemen, for joining in. Appreciate your thoughts. We'll, of course, continue this discussion, this evaluation on all the latest takeaways from Reliance Industries through the course of the day. So stay tuned. But let's get to our special segment now, Quarter Se Quarter Tak. Sonal is here today to take us through what you can expect from the oil and gas sector in this quarter. Sonal, over to you.
Thanks for that, guys. Well, oil and gas stocks, they have been very excited ahead of numbers, and it is expected to be a decent quarter, at least for some of the segments here as well. First, the macros. Brent crude prices continue to be lower, 31% down on a YY basis, 3% on a sequential basis. This is at $78 a barrel. Even Singapore GRMs, they were lower. Big decline here, down 51% on a sequential basis. This is due to decline in cracks across most of the products. And that's why we'll see a decline in refining EBITDA for Reliance Industries, and that will impact numbers this time. Overall, Reliance's EBITDA is expected to decline 2% on a sequential basis and 1% on a YOY basis. However, the weakness in refining will be offset by strength in Jio and retail. For upstream companies now, like ONGC and Oil India, EBITDA will decline on a quarter-on-quarter basis by 8% on a sequential basis. It is on an average driven by lower gas prices because government had capped domestic gas prices at $6.50 per barrel versus 8.7 earlier. And also, as I said earlier, lower crude oil realizations will impact earnings. But star performers this quarter will be the oil marketing companies. Strength will be driven by their marketing segment, where over recoveries will be reported by all these companies. Weakness in refining segment will be seen, but that will be offset by marketing, where petrol and diesel margins are anywhere between 8 to 9 rupees per litre. GRMs are expected between $7 to $9.9 per barrel, which is a sequential decline overall. However, EBITDA and PAT is expected to improve for all OMCs, both on a YOY and on a quarter-on-quarter basis. Now, for CGDs as well, like IGL, MGL, it will be a good quarter due to lower domestic gas costs, and for Gujarat Gas due to lower spot LNG prices. Margins and volumes are expected to recover, and 19% EBITDA and 25% profit jump is expected here. On to gas utilities, because they will also see good quarter on a quarter-on-quarter basis. For GAIL, Q4 was very weak due to one-offs, and hence quarter-on-quarter EBITDA is expected to go up by 10 times. For Petronet LNG, high Dahej utilization and high Kochi tariffs will also aid earnings, and lower spot LNG prices will improve earnings for the gas utility space, which includes GSPL as well. Now on to valuations. Reliance trades at 23.6 times and the PSUs continue to trade at lower valuations. ONGC at 5 times. You have IOC, BPCL and HPCL anywhere between 3 to 4 times. City gas companies between 12 to 22 times, where MGL is the cheapest in the space.
Okay, thank you very much for that. Probal Sen, the energy analyst at ICICI Securities, is now with us on the show. Probal, morning. Thank you very much for joining in. Let me start with the oil marketing companies. That's where the most recent bullishness is. They are expected to report very strong GRMs, as Sonal was telling us. And in the comparable quarter of last year, the GRMs were negative. So oil marketing companies are going to have some elevated earnings this time. Would you be bullish on the stocks at these levels? Or has the street priced in all the good news?
No, I think, we have been bullish and we have been fairly positive on the OMC space for the last month and a half or so, from the time that the marketing margins really started to ramp up and FY24 prospects became a little bit clearer. Our sense really is that there's as Sonal was mentioning, there's a very big swing I think if you look at operating profits, almost a 50,000 crore swing from a loss of around 15,000 odd crore last quarter to more than 30,000 crore in aggregate of EBITDA from the OMCs this quarter. And this is despite the fact that there has been a $4 decline QOQ in GRMs. If we look at Singapore, not all of that flows through to Indian players because the product slate is different and we have some Russian crude benefit and all of that. But as a trend, GRMs are down. But the marketing margin benefit continues to be very, very strong. Our sense is that FY24 is likely to be an extremely strong quarter as far as earnings is concerned for the OMCs as a pack. Even if one assumes that at a certain point of time this year, some pass-through of this marketing margin benefit may happen for petrol and diesel. Despite that, I think the street estimates are bound to be upgraded, I think, by about 15 to 18%. That would be my sense. And to that extent, even if valuation multiples don't see a huge upgrade, just the earnings upgrades will actually ensure that there's very, very strong returns from the OMCs in FY24.
Okay, by the way, we just need to pause a little bit. That's a fabulous listing that we're seeing from Cyan DLM. And, Rima was mentioning that earlier as well. It's listed at 403 rupees a share. That's more than a 50% premium to its issue price, which was 265. So that's a very smiling, happy team as well at the listing venue. We just saw images of that. But Prabal, very quickly on Reliance Industries, what do you think the SOTP value could be now? There's lots of developments that have taken place, especially on GFS. The demerger date has been announced. Also on what's happening with Reliance Retail. Overall, what's your sense? Do you see more upsides here?
I think that frankly, we'll have to sort of, get a little bit more understanding of the valuation of the financial services space. Retail, I think, given the valuations that have come out, are broadly, there or thereabouts in terms of where the street was valuing the retail business. Obviously, as and when, a listing announcement happens in due course, we'll have to understand how that happens. But as far as financial services is concerned, right now, to actually put a value base, particularly for me, I would leave it to our financial services team to sort of give an opinion on the business as and when we gain more understanding of what all will be housed in this segment. On an overall basis, frankly, we have had a fair value of somewhere around 2,700 to 2,750 for the stock. I don't think that we will be changing that materially at this point of time.
This just, you said 2,750 to 3,000 is the target price on Reliance, right?
No, I said my fair value is around 2,700. I think the street is in that range.
2,700.
Between 2,600 and, yeah.
Okay, and in that, what is the value that you've ascribed to retail and financial? I missed those numbers.
To retail, I think we have around somewhere around 700 to 800 rupees a share. Financial, we're not valuing it too much at this point in time.
All right, Prabal, what about the city gas distribution companies? How do you approach them from year on? Gas prices have cooled off, volumes could pick up as well. And now they're coming back into flavor after, those duties that have been introduced on propane. So your view on the stocks?
Well, I think firstly, as far as the cost environment is concerned, definitely the $2 reduction in domestic prices as well as the kind of softness we're seeing in spot LNG prices is something that will continue, to sort of make, drive margins higher over the next year or so. More importantly, the price competitiveness with petrol and diesel, which now stands at 50%, I think is a major driver for, volume growth that we would expect over the next 12 to 18 months. As far as propane's duty is concerned, I think it probably provides a slight short-term benefit, for maybe a month and a half to Gujarat Gas. But if you really look at the way that propane prices are actually behaving, one suspects that Gujarat Gas will probably need to cut prices even more to sort of remain competitive. Because the propane price reduction from $450 to $400 means that even with the duties built in, the comparable price for propane in Morbi is likely to be around 33, 34 rupees, whereas Gujarat Gas's retail price is still at about 38.5. So I would say that there's a little bit of pain still ahead in the near term for Gujarat Gas. But for IGL and MGL, I think the metrics look substantially better. And even if you were to build in a price decrease in petrol and diesel, as I mentioned earlier, by the second half of the year, even then the differential for CNG versus alternate fuels remains well above 35-36%, which historically has been a comfortable level to drive, strong volume growth for both companies. So we'll be very, very bullish on both names at these levels.
Okay, and on Gujarat Gas, you're seeing a little pain. Actually, the street is also pricing it in. I mean, if you pull up the Gujarat Gas chart, it hasn't performed as well as the market has in the last 6 months. It's been sort of, lackluster, perhaps factoring in that pain that you were talking about. I also wanted your thoughts on gas utility companies, whether it is GAIL, GSPL. You do mention that there are two factors which are aiding them, right? Stronger gas demand, and now a lot of the supply side issues have eased as well. Does this portend higher, bigger upsides for some of these names?
Well, I think there are, frankly, clubbing them together is a bit tricky. I think separate factors are playing out for each of the names. For GAIL, I think the critical monitorable will be when does the impact of that 9 MMSCMD of Gazprom's disrupted volumes can, completely fade away. Our understanding was that after the formation of a new entity, which Gazprom had done in Singapore, and transferred the rights of the contract to that new entity, the gas supplies have resumed to a certain extent. So if that gas supply is actually resumed completely, then that is a big change from what really hurt them in FY23, specifically in the petrochemical and LPG segment, where they had to sort of obviously allocate different sources of gas, so the costs went up quite a bit. Secondly, as far as trading business is concerned, what kind of profitability trends are seen, and as you rightly mentioned, demand for gas at these low prices should rightly go up. Petronet LNG should definitely benefit from the kind of softness we're seeing in short-term and spot LNG prices. Their third-party regasification volumes have really been very muted over FY23, so one would expect some pickup there. Having said that, I think the prospects of the petrochemical expansion are something that we are not very sure about in terms of, that's 4 years of operating cash flows that will be spent on the petrochemical expansion. So we have to understand the economics of that project a bit better. Otherwise, at least in profitability terms, the business should do better. GSPL, I think, is going to be a function of the tariff order and, how the sort of gas demand shapes up. Plus, it also has to contend with Gujarat Gas's valuation, which always is a big component of its overall value. So, as and when we see Gujarat Gas's prospects improving, that would be the next trigger, particularly at these price levels for the company.
Probal, we'll leave the discussion here today. Thank you very much for joining in. Need to get into a very short break with the news. The Nifty just shy of the 19,400 mark, holding up in the green with a gain of about 0.3%. IT is dragging its feet. The Nifty IT index is down 1.2%, with heavyweights like HCL Tech lower by 2.5%. Mid-cap IT is selling off Birla Soft, LTI Mindtree, L&T Technology Service, First Source. These are all stocks down 1.5% to 2% this morning. On the other side of the break, Mitesh Thakkar will be with us for a few technical trades. Stay tuned.
On the line. How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Who? Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Welcome back. 19,400 on the Nifty, 68 points higher, and all of that is courtesy Reliance Industries, and it's 10.5% weightage on the Nifty. Pull up the contribution plate and you would see Reliance Industries is currently contributing 78 points to the Nifty up move. Stripped of that, the Nifty would have been mildly lower. Mitesh Thakkar is with us on the show now. Mitesh, any 10 a.m. trades, and what have you made of the day so far, the morning?
So, good morning. No trades on the Nifty per se, but you rightly said, Reliance is the key contributor. I would want to buy that in case I get it slightly lower, let's say about 20 odd points lower. But for the timing, I have one buy and one sell. You can look at the charts of Hindalco. I think that's picking out very nicely. So, Hindalco is a buy with a stop at 425 for a target of 442. And mid-cap IT, I think, was being highlighted as a sector which is seeing some pressure. So, I have a sell there on Coforge with a stop just above 47005. I would look to sell this for targets of around 45.60.
All right, thanks a lot for that. So a lot of the IT stocks are under a bit of pressure just in the run-up to the IT earnings. But let's track some more stocks now. ICICI Pru Life is a stock on our radar. Surbhi is joining in to give us the latest on that. Surbhi, over to you.
Thanks for that. So ICICI Pru has come out with their June 2023 APE numbers as well as the Q1 FY24 update. For individual APE for month of June, they saw a growth of 12% and the total APE grew by 11%. The ICICI Bank channel APE declined by 14% on a year-on-year basis, but it was still lower than the last 2 months decline. The other channels APE saw a growth of 17%. For Q1 FY24, both total APE and individual APE was down 4% on a year-on-year basis, but the new business sum assured was up 9%. Now that indicates that the overall protection business could have done well, but we'll have to wait for the data from the Life Insurance Council for retail protection, and that will put some more perspective on the numbers.
Okay, thank you very much for that. Get into a break then. On the other side is our special segment. It's the economy, where Lata will get chatting with Sunil Kaul, Asia Pacific equity strategist at Goldman Sachs, about their India strategy.
HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS.
Welcome back. Goldman Sachs has put out an equity note saying that they see the Nifty at 20,700 over the next 12 months. Now, this may disappoint some who see 20,000, much earlier, going by the pace of the move since the Nifty conquered 19,000 on June 28. We managed 400 points since then in just about 7 trading sessions. But Goldman says India is the best growth story in town. Then why are they somewhat modest about their Nifty expectations? To answer that, joining me now is the author of the latest equity report, Sunil Kaul, Equity Portfolio Strategist, Asia Pacific for Goldman Sachs. Sunil, good morning. Thank you very much indeed for joining us. You know, the pace, again, with which the Nifty has moved in this quarter, April, May, June quarter, gives the sense that, 20,000 can come pretty quickly. You don't share that kind of enthusiasm?
Lata, thanks for the invitation first. I mean, as you said, we do have a target of 20,700 on Nifty on a 12-month basis. So we do like India structurally. But I think given, as you said, the last 3-4 months, the pace of recovery, not just in the Nifty stocks, but also within the broader market in mid or small caps, it does feel like both in terms of valuations with the market trading at 22 times, but also in terms of some of the risk appetite indicators we are tracking, we do think that markets may need to kind of consolidate here in the near term for the next sort of 3 months or so. I think as you get closer to the fourth quarter, heading into the festive season, with the third quarter earnings coming through at that point, maybe the market kind of regains a bit of momentum. But for now, we think for this quarter at least, we're probably looking for markets to consolidate from current levels.
Okay, fair enough. Yes, markets have run hard. But, you have a very interesting table in your page 13 of your report, where you point out that every time the market has been over 19 times, in the next 6 months and 1 year, the returns have been 2%, 4%, and that's the average. But you also give us another table where you show the excessive returns it has given. I mean, it has run hard and continued to run hard as well on certain occasions. You don't think this could be one of them, considering the excitement about the India story?
Look, I mean, as I said, we are pretty excited about the structural prospects for India. I mean, we do think there's a lot of stock picking to do in terms of alpha. I mean, we actually had a report out a month or so back where we actually showed that India has been the most fertile ground for picking stocks in terms of alpha picking. And we actually compared 10 different markets, 7,000 odd stocks, and India has the highest proportion of multi-baggers, meaning the stocks that have given you more than 10x returns over a 5-year period in the last two decades. So I think there is a lot of bottom stock picking opportunities there. I think having said that, as I said, earnings are still growing at 15% plus compound. So we are expecting earnings to grow 17% this year, another 15% next year. So with that kind of mid-teen earnings growth story, we do think markets go higher. But I think at these levels, as you also noted, valuations at 22 times is expensive. Historically, as you said, from current levels, return tend to be moderate, which is why we have 7-8% upside in local currency terms, 10% in round numbers in dollar terms, total returns for the market, which we think is kind of fair. I think we also have to keep in mind where the macros are. So with the global growth generally kind of slowing, rates probably higher for longer, we do think 19 times is probably fair for India at these levels. So we do bake in a bit of multiple compression in our numbers. So the way we sort of get our return forecast is that you have a 15% earnings slope, and then you get a bit of sort of 5% plus multiple compression, which is how we get to that return. I would also point out in terms of valuations that the starting level of valuations right now for the market is the highest it has been in a pre-election year. Going back for the last 20 years or so. So you also have to keep that in mind. So again, as I said, I think we like India longer term story, but at current levels, we think the returns are more likely to be moderate.
Oh, yeah. No, the pre-election thing is important. I take your point on that. After the Karnataka elections, that seemed a worry. After the Maharashtra happenings, it seems like it is pretty much in the bag, and election is hardly a threat, but perhaps a positive. But that discussion closer to time, not now. Sunil, before I get into your specific sector preferences, I wanted to ask you about the global scenario. Last week we had like huge data on private payrolls. I mean, almost 450,000 jobs when the expectations were about half that. Of course, it was cooled by the payrolls, the jobs data, which was a tad lower. But there again, the hourly wages, all that is still very strong. are you all worried that we could see more tightening than the world is prepared for, and that can be a headwind in 24 or late 23?
Yeah, that's a great question, actually, Lata. Look, I think if you look at the macro, if you step back a little bit, there have been sort of shifts on the growth side. There have been shifts on the rate side, as you mentioned. So on the growth front, it does feel like, when you look globally, it does feel like obviously China growth has faltered a little bit. And on the contrary, US growth is holding up pretty strong. And as you probably know, we have an above consensus, or have had an above consensus view on US growth. We still don't have recession in our forecast. We only have a 25% probability of US recession, whereas the street is at 60%. So we have been sort of optimistic on US economy, and it seems like that story has gone a little bit even better. Which means, I think, when you look at India, the fact that for the region overall, you've got China growth, which is slowing, but US sort of holding up pretty well. So the markets in the region, which are kind of more China sensitive, probably have more downside risk to earnings, whereas I think the markets which are more sort of sensitive to US growth probably have some upside risk. So I think India, therefore, is in the right zone, wherein we're not as worried on the growth outlook, because domestic growth looks still strong, but on the other side, I think US growth, which India is kind of exposed to through its equity markets, is helping India. But I would say, I think there is some more on the tightening side, as you said. So we do think there is one more rate hike in terms of Fed. So in July, later this month, and then Fed is on hold. But given the hawkish commentary from the Fed recently, as well as the dot plots, it does feel like there's a risk that they may actually go for another hike later in November, although that's not our base case. I think RBI, on a similar note, has been sort of sounding hawkish as well. So I would say on the margin, it does feel like you could have renewed sort of tightening risk. And if you look at the markets last 2-3 months, I think the sectors that have been more sort of benefiting from lower rates have done well. And so to the extent that if the market starts to price out any rate cuts next year, but also kind of the rates higher for longer, I think that is a headwind for equity markets. We also have to keep in mind, I think, as the market kind of prices out any rate cuts, you will also see dollar continuing to be somewhat stronger, at least relative to the Asian peers, and that typically isn't a great environment for flow. So you put all of that together, it does feel like globally it could be kind of a bit of headwinds, as you put it, for the global equities in general.
Okay. Yeah, though you do point out that while the dollar strength may have some impact on capital flows, it's not a current account deficit problem, since their things are way more benign for India. Now let me ask you to talk sectors, because that's what our viewers want. Once again, more of banks is what your list is saying. Any preferences within the banks? I mean, would you go for public sector banks now? A few of them have shown remarkable growth.
Yeah, look, I mean, if you look at the last 2-3 months, actually, the sectors that have done very well is real estate, autos, some of the NBFCs. All of those actually benefit from potentially lower rates, as I said. I think banks actually have actually lagged in the last 3 months or so. Okay. So you're looking at a sector where they are still trading at sort of mid-cycle valuations, or valuations are not expensive. There is a decent kind of visibility on growth, sort of high teens earnings growth at decent valuations. They are still gaining market share from the NBFCs. In fact, if you look at the banks versus NBFCs trade, I think the fact that NBFCs have rallied in the last 3 months pretty hard, and the valuation gap has reduced between NBFCs and banks, that on the margin continues to for us to favor banks over NBFCs. So we think that's an area people will continue to prefer, especially given the fact that I think in this environment, if the market kind of consolidates, you probably want areas which have significant or decent visibility on growth. I think banks kind of check that box. As I said, I think within banks, we would prefer banks over non-banks or NBFCs. We would like private banks as well as some of the largest PSU bank also in there. I think it's the private banks and the largest PSUs which we like. Okay. Given the stability of earnings, which is an important criteria, we would kind of stick to that list in the near term.
Okay, you very clearly point out that in NBFCs you like commercial, those lending to B2B, so to speak, and not the consumer-oriented ones. Any reason why, and therefore you don't look at consumer NBFCs now?
We have been underweight that space for a while. I think we are a bit concerned about the fact that in consumer lending, the growth has been somewhat too strong, and obviously there is a lot of competition going on. So, I mean, it's not at a stage where we think there are any near-term asset quality risk, but I think it's an area which we need to be watchful for, and valuations aren't particularly cheap in that area. So in general, as I said, banks or NBFCs, and within NBFCs, if there are higher quality NBFCs which are more into kind of B2B or kind of industrial segment, we like them more as compared to ones which are more in consumer-oriented sectors.
Well, I spoke about NBFCs also because today we have this announcement of Reliance taking one more step, perhaps, to list their retail venture. And that set the market thinking, which means the finance venture also will not be far behind. Will that mean more trouble for consumer NBFCs? Is that something that went into your thinking at all?
Not really. I think within the banking sector, I think the way we're sort of thinking about it, I think when you speak to clients, I think people are in the camp wherein they are saying, look, I mean, you can obviously get a little bit more upside in some of these names, but you have better comfort in terms of earnings visibility with banks, and they are not expensive. And so if you have that comfort, why sort of get into a segment which is somewhat more riskier and trading at higher valuations? So I think from a relative risk reward, therefore, we like banks over the NBFCs. That's what sort of was the main thought. And as I said, within the NBFCs, if you are more into sort of credit, consumer credit cards, sort of personal loans, sort of housing finance, we sort of are a little bit more cautious on that space. So which is what keeps us underweight on the broader consumer NBFCs.
Well, okay, actually, it's an extremely rich report where Sunil is pointing out to laggards who have not done so well, like, the HDFC Bank, the Kotaks, even Reliance Industries. And then there is a list called, stable growth guys, like, again, HDFC Bank, Kotak, Larsen. So it's an extremely rich report. But just one final question. I'm out of time. Sunil, what about the newbies? The Nykas, Zomatos, are they also something you would chase now?
Look, I think the risk reward on some of those names is improved. We're sort of more market weight that space. I think valuations have come down. The focus on profitability is there. I think with some concern about renewed sort of rate risks, we are somewhat still more measured in there.
Okay.
And again, I think there is a little bit difference in terms of different subsectors. But in general, I would say the places where we see the most upside right now would be banks, as I mentioned. But also, I think the broader rural recovery is a theme which we didn't sort of speak about, but that's something we have been sort of also flagging, because that's an area which has been lagging in the last 2-3 years. We think there you could get more upside. So we're not sort of underweight or cautious on the new economy stocks, but we think risk reward still is better in some of the other pockets of the market. So we are kind of more market weight that area.
Okay. Out of time, but it's an extremely interesting report, Sunil. Thank you very much indeed for joining us and giving us a peep into the important takeaways from that report. 20,712 months. A couple of risks that Sunil points out to, El Nino and elections. Both seem now strengths, actually. The monsoon deficit is wiped out and elections don't seem the scare they seemed a couple of months back. So probably with some luck, Nifty will do much better than the 20,700. But that's a good number anyways. Wrap up on Bazaar. Chartbusters up next.
In the middle of the trade, the promoter entity, which is Barings Private Equity, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader. David to Goliath. From the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers. Today's newsmakers. And tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes. On Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against...
Big boy, Reliance is the top Nifty gainer as it approves the buyback of the non-promoter shareholding at Reliance Retail for a price of 1362 rupees per share, much higher than anticipated estimate from the street. JP Morgan issues an overweight rating. The company also has set 20th July as the record date for Jio Financial Services demerger, setting the demerger in motion.
The Nifty IT index loses the percent with stocks such as HCL Tech and TCS among the top losers as the street remains cautious ahead of this week's big earnings.
HDFC Bank gains surges as Citi resumes its buy coverage and a target price of 2,200 rupees on the stock, saying that they do see post-merger synergies. The advances growth could be nearly 18% from FY23 to FY26.
Keystone Realtors rallies after posting a strong Q1 update. Sales double on a year-on-year basis, while it has recorded its highest ever first quarter pre-sales.
We have the new kid on the block, electronic manufacturing services and solutions provider Signed DLM making a strong debut, listing at over a 50% premium to its issue price. The management will be joining us shortly to discuss the company's listing, post-listing plans.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and with me is Mangalam Malu. Well, for starters, Mangalam, it's a good start to the week. The Nifty is in the green, but thanks to big boy Reliance Industries. If it wasn't for Reliance Industries, we'll probably be more or less flattish or maybe a mild positive bias. So good start at least to the week after the selling that we saw on Friday.
Absolutely. It's a good start and good to see that, heavyweights are batting for the Bulls right now. Though one would like to see some outperformance coming in from the Nifty Bank and at the same time, the mid-cap index, which is currently underperforming. So at an index level, the mid-cap index is down about 1/3%. Advanced declines slightly towards the decline side. 1,500 stocks declining for about 1,300 stocks which are advancing. But the stock of the moment definitely has to be Signed DLM, a strong listing that we've seen on the bourses, listing at an over 50% premium to its issue price. Signed DLM is the new listing on the block. We have 144 rupees over and above the issue price that the company was seeking. We have Krishna Bodanapu, who is the chairman of the company, joining us now to discuss in detail about the company's post-listing plans. Mr. Bodanapu, thank you so much for joining in. You are no stranger to the listed space itself, but Signed DLM, with the strong listing that we've seen, could you give us a sense of what the future of the company looks like? I mean, your current capacity utilization at close to about 1/3. At peak capacity, what could your revenues be? And going forward, what is the expected growth in your revenues, presuming the industry is likely to grow at 30% as per your earlier guidance?
So good morning, and thank you very much for giving me this this opportunity. So obviously, we're very confident about where the business stands, and for a multitude of reasons, including the capabilities that we've built and the opportunity that has presented itself because of what is happening in the macro, and also with India becoming such a focused destination now for manufacturing. So taking all these into account, we're very confident where we stand. We've also built a very specialized business that's focused on low volume, highly specialized, highly complicated reliability and safety critical electronics. So our focus in these 4 or 5 areas, which is aerospace, defense, industrial and medical, along with our design capability in the parent Cyient, gives us a very, very unique positioning in the market. And therefore, we're very confident of where things stand and how we will grow going forward. Like I said previously, the market is expected to grow at 30%. We're quite confident that we'll beat that number. And that's coming from the fact that we have a great backlog, we have a great set of customers, we have a great pipeline. And also the other thing that you mentioned, where utilization is only 1/3, which means that we also, on the other side, while I spoke about the demand side, on the supply side also, we're very well positioned to execute to the demand. And the last thing I'll say is we've also put in a lot of effort on supply chain management and putting together a world-class supply chain, which is another input that goes onto the supply side of the equation. So all said and done, I think we're very confident where the business stands today.
All right, Krishna, first of all, congratulations. This is Nigel on this side. I recall a few months ago, I was quizzing you about when this IPO comes about. What is the timing? What are you looking at? Well, all those who got allotted, they'll be very, very happy because the stock is listed with a gain of more than 50%. So good on that. Now, you're sounding very, very optimistic in your tone. And you're saying you'll outgrow the market as well. Given that 30% is the growth that you're estimating, for the coming year, should we assume closer on 1,100 crores in terms of revenues? Just want to clarify on that point number one. And point number two is, since you're operating at a third, and you did closer on 800 crores in the past year, at optimal levels, can you do closer on 2,400 crores? Just wanted some clarification on both these two numbers.
Thank you, and thanks for that question. Obviously, I can't comment on the immediate term and how the next year will look like. I'll just say that, look, we're very confident of beating the industry growth rates in the next few years. So I will leave it at that. Also, from a capacity perspective, absolutely. I mean, logically, with 1/3 utilization, we should go to about 3x revenue. Of course, there will be a bit of incremental capex to support that, but much of the capacity is already in place for us to deliver to at least those numbers in the next few years.
You know what's interesting, Krishna, is that your order book, as of the last reported numbers, is already 3x your current revenue. So that should suffice for you to actually go ahead and get that sort of revenue as well. What we want to know is, what's the kind of order backlog that you have in this year so far? What can we expect in the remainder of FY24?
So the order backlog that we talked about of 2,500 crores is for about the next 18 to 24 months. The order backlog, again, is enough for us to deliver a good year. Again, it wouldn't be fair to talk about the specific backlog given where we are in the quarter also. But I'll just say that the backlog is quite robust for us to support the numbers that we're confident that we will deliver going forward. Because what I want to reiterate is that where we are in the business, both from the demand side in terms of what the market wants, and also from the supply side in terms of the capabilities and competencies that we've built, we're very confident that we're very, very well positioned.
No, I understand that. And the reason why I ask you about the order book itself is that because between FY22 and FY23, we saw near doubling of your orders from 1,200 crores to 2,400 odd crores. Can we expect that momentum in FY24? What's the kind of inflow that we should be looking at?
So we are seeing a very strong inflow. I think it'll be a little bit premature to comment exactly how much the order book will build up for the year. But I'll say that we're quite confident that the pipeline, which is essentially what stands behind the order book, is very strong. The other thing I'll say is that the order book is only confirmed orders. There's also another total contract value that comes in, which is at least twice the order book. So we're quite confident that what's in the total contract value will translate into the order book, and the pipeline will flow into the total contract value, which is how the flow of how orders work. So taking all this into account, we're quite confident of having another good year from a order intake perspective, which will help the backlog, because as we're growing at these rates, it will also be important that we're growing our backlog at an accelerated pace. Otherwise, we can't sustain the growth rate. So we're quite confident looking at the whole flow from the pipeline to the total contract value to the order book or to the order backlog of how things are panning out.
Sounding confident on order inflows. We are doing the math with regard to the 30% growth. We are estimating at close to 1,100 crores. We'll wait for clarity on that, but we're just plugging in the numbers. And obviously at peak levels, you could do around 2,400 crores with minimum capex, as you told us. Let's focus then on the operating leverage that is likely to play out, because you're going to be growing at a fast clip. Margins could improve, right, from here. As of last year, you did close to 10.5%, but you had told us that around 12% is what you're looking at. What kind of a near-term and mid-term margin should we be looking at, Krishna?
Absolutely. I think there's a lot of levers for margin growth, because even last year we had a good improvement on the gross margin. Obviously, we've invested quite a bit for this growth. There is three elements that we've invested in. The first is the leadership, both on the sales side, but also on the supply chain and the management side. The second is on the technology, which is essentially the systems and processes that we've put together, which enable us to have a more robust supply chain, a more robust forecasting mechanism, etc. And the third is, of course, the capacity that we talked about, where we do have a fair amount of spare capacity right now. So taking these three things into account, the fact that we've invested quite aggressively gives us a lot of runway on the on holding our SG&A, our sales, general and other expenses constant, because we're quite confident that the growth in SG&A will be minimal going forward, just because we have a robust framework already in place, people in place, technology in place. So taking all this into account, we're quite confident about that 12 to 13% margin trajectory in the next 12 to 24 months. And again, from a longer term perspective, I would be a little bit cautious on that commentary, because there's a few other things that have to happen, especially along the design, IP, etc. So I would say, the 12, 13% in the next 12 to 24 months is a trajectory that we're looking at.
12 to 13% over the next 12 to 24 months. Krishna, finally, before we let you go, you had raised some funds for inorganic opportunities as well. So just wanted to understand, what are the areas that you're looking at? Will it be companies that are new, or will it be companies that are in the same space? By when do we hear on any of these opportunities? And your revenue mix itself, I mean, aerospace was 14% a couple of years ago. Now it's 20%, whereas defense, which was 46%, has come down to about 37%. Going forward, say at an optimal level, what is the kind of revenue mix that one should expect?
I think, firstly, on the revenue mix, I'd say that's a function of the market and what it wants. I would say we're very cautious in terms of the kind of products that we make and the price point at which we make, to make sure that we both are bringing out our value proposition of low volume, high complex manufacturing, and that we're protecting our margins. So beyond that, I wouldn't worry too much about which sectors, etc., because I think we're really more focused on the quality of revenue, because again, the fundamental thread is this is very high complexity manufacturing for very safety critical components, and therefore, there's certain elements that we bring to the table that not many companies in the world can. In terms of acquisitions, our idea is, again, to build on our competence and capability. Like we talked about, capacity is not a huge issue, but capability and competence, especially in terms of a globalized manufacturing footprint, is something that our clients want. They want some of the final manufacturing, for example, to be closer to them. They want some of the box build, etc., to be closer to them. So we are looking at those areas. I would sort of err on the side of caution in terms of timelines, because as you know, with acquisitions, things take time, and that's something that we've built a lot of competence even in the parent, and we've done some really good deals there. So we're on it. I think it'd be not very prudent to have an absolute timeline on it at this moment.
Good chat with you, Krishna. Thanks so much for joining in, and congratulations on this blockbuster listing. Next time we chat, hopefully we get some few more numbers out of you. For the time being, celebrate the good moment, but we'll be waiting by post-year numbers as well. Well, time to slip into a short break. Up next, we'll be joined by Shivangi Sarda to get a technical check on the markets. Don't go anywhere.
So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems. In the middle of the trade, the promoter entity, which is Barings Private Equity, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader.
Almost 100 points on the Nifty. The mid-cap index has ameliorated some of its losses, so now sitting with a cut of just about 0.2 odd percent. So we're seeing some improvement out there. Sula Vineyards is one of the stocks which is surging this morning, up almost 6 odd percent. So how should you position yourself for the markets here? Shivangi Sarda joins in for a quick technical check. Shivangi, thanks to Reliance, we've put in a good first hour of trade. Where do we go from here on? Any resistance levels that you're looking at on the way up?
Good morning, Manglam. Good morning, Nigel. Thank you for having me. So we've seen that, after a small hiccup on the Friday session, kickstart today and a good recovery can be seen. It clearly shows that any small declines are being converted into buying opportunities. So my take on the index would be buy on decline. Although Bank Nifty is showing some signs of, softness. So nevertheless, the next levels that we're looking at Bank Nifty would be its lifetime, in the Nifty would be its lifetime high, 19,525 levels, with a support near 19,250 zones. Now, talking about Bank Nifty, we've seen that, many PSU banks have been supporting the index, but then again, it is trading in a sort of a consolidation mode today. Here, the levels would be around 45,400 on the upside and 44,750 acting as a crucial support. Now, good part is that it hasn't breached its previous day's low, and weekly setup is still quite strong. So both the indices, we could go for buy on decline strategy.
Okay. All right. Hi, Shivangi. Both the indices buy on decline strategy. Got that. Shivangi, give us your stocks as well that you're tracking, and also if any view on Reliance Industries, because that's the big heavyweight that's driving the indices higher today.
Absolutely. So talking about Reliance, we've seen that, this stock has participated in the entire rally, and looking quite positive even from here. Of course, we've seen that the kind of contribution it is having on the index is quite remarkable, cheering it nearing the lifetime high levels. So very positive. We could look at 2,800 levels in no time right now. Now, talking about my picks on my radar would be from the auto space. Now, first pick would be Tata Motors. This stock is continuously performing from the last 4 months with over 15% long built up in the series so far. Entire auto space is speeding up quite well and trading in its fifth gear. Tata Motors specifically is seeing follow-up buying at every levels, and with the put call ratio gradually increasing, it suggests that there has been a very strong base of the put writers, which could take it upside to around 650 odd levels with a stop near 620 zones. Now, second pick on my radar is from the auto ancillary space as well. This is Apollo Tires, which I'm talking about. This stock has also been the performer of in fact, it has been the performer of the year. We've seen bulls intact on a month-on-month basis, and it's continuously trading in an upward sloping channel. The stock has made a good base at 395 levels and holding well above its previous resistance zones. So this could act as a good base over here and take the stock higher to 445 odd levels with a stop near 418 levels.
All right, Shivangi, thank you so much for joining in and giving us your views on individual stocks as well as the indices itself. We spoke about Sula just before, speaking to Shivangi. Just keep an eye out on United Spirits as well. That's the other one which is now moved off lows and spiked to the high point of trade. So looks like a fairly liquor-heavy Monday so far, especially speaking from a stock price standpoint.
Kenneth and Radhik joined us earlier today. He said India is one of the top consuming alcohol in terms of alcohol. Not sure whether it's a good or bad thing. He also made that disclosure. But for the time being, it seems the stocks are reacting positively. He said investment-wise, he's made good money as well. So
all right, so let's see how that happens. But speaking about making money and making profit, let's shift focus to our Ideas for Profit segment coming in from Money Control Pro. Today we have Madhu Chanda Day.
With economic recovery gathering momentum and interest rates hitting a near-term peak, the time is right to ride on stocks that stands to benefit from higher economic activity. Control Print, the only homegrown player in the oligopolistic coding and marking business, is a decent choice for investors. The key user industries like pipes, foods, FMCG, dairy are exhibiting good growth and higher capacity utilization that should improve the product mix in favor of high-margin consumables. Control Print has an established base of over 17,000 printers, thereby providing a steady stream of annuity revenue from consumables. The pandemic has led to increased formalization and hence higher usage of packaged products across industries. Regulatory requirement to print more on level is also a tailwind. There's a high entry barrier in the business as relationships are sticky and a new player would typically require a lot of time to establish a pan-India brand. Finally, with a strong balance sheet, the company is pursuing multiple acquisitions to explore adjacent newer areas of business.
thanks a lot for that, Madhu. Well, for the time being, though, we'll have to slip into a short break. You come back, we'll continue our focus on markets and stock-specific action.
From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. With the tech world normalizing, autonomous solutions and intelligent algorithms are transforming our society one service at a time. As the computing era reaches a tipping point, find out what it takes to succeed in an AI world. CNBC-TV18's Young Turks travel to Silicon Valley to bring you definitive insights from the most influential leaders and investors. Young Turks at 21. Voices from the Valley. Only on CNBC-TV18 and CNBC-TV18.com. The Last Hour. anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform?
Welcome back. Let's focus on a couple of stocks as promised. Balkrishna Industries, the stock is under some pressure today after Nomura has reduced the target price. Sonia joins us to fill us in with more details. Sonia?
Well, thanks a lot for that. As you rightly pointed out, a lot of brokerages have written on Balkrishna Industries after the plant visit that the company had with many of the analysts. Nomura maintains a reduce and they have a target price of 2100 on the stock. Now, they expect a much weaker first half of FY24. They say that volumes are likely to decline because of channel destocking. Also, the global crop yields have been under quite a bit of pressure, and that will impact Balkrishna Industries because the global agri market is a large percentage of their overall market. And they expect, the recovery earlier was expected from the second half of the fiscal, but that will get delayed a bit more. They also speak about how the stock is quite expensive. At current levels, the stock trades at 16 times FY25 EV to EBITDA. And given the risks to recovery, they feel that this is slightly on the expensive line. Now, the company expects the industry to grow just 3 to 5% over the medium term. However, it does maintain its ambition of achieving a 10% global market share over the next 3 to 4 years. Very quickly, on ICICI Securities, they maintain an ad with a target price of 25.77. This implies a 26 times FY25 EPS. So, risk of expensive valuations and a slowdown in the global agri business is something that can continue to hit Balkrishna Industries, and hence the stock is under pressure.
Point, Sonia. Thank you so much for that. So that's about Balkrishna Industries, down about 3% in today's trading session. With that, we're out of time on this edition of Chartbusters. Thank you for watching. Trading Hour comes up next.
It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
Who? Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
With the tech world normalizing, autonomous solutions and intelligent algorithms are transforming our society, one service at a time. As the computing era reaches a tipping point, find out what it takes to succeed in an AI world. CNBC-TV18's Young Turks travel to Silicon Valley. to bring you definitive insights from the most influential leaders and investors. Young Turks at 21. Voices from the Valley. Only on CNBC-TV18 and CNBC-TV18.com. A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively, you can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them.
Good morning, hello, and welcome to Trading Hour. I'm Surabhi Upadhyay, and with me are Rima Tendulkar as well as Pavitra Parekh, who's back. So it's a full house. Good morning, ladies. And Pavitra, tell us,
good to see you back.
How was it?
It's good to be back. I feel like I was gone for just 1 week, but so much has happened, right, in just 1 week.
Well, so much has happened and so much is yet to happen because the earnings season is upon us. Yeah. And I think the week has started with a bang with this big move on Reliance, right? So, okay, quickly, let's just bring our viewers up to speed on what's been happening in the market. It is a positive start to the week, and what we're seeing is the Nifty take steps towards the intraday high of the previous week, which was just above the 19,500 mark, about 19,523 to be more precise. The leadership has been coming from Reliance, and you'll hear a lot more about that stock as we go along. Up 4.5%. It's moving in style, and the excitement and the exuberance is really around the proposition of value unlocking in both the businesses, in financial services as well as in Reliance Retail. As I said, more on this coming up. The interesting aspect is if we can actually pull up, show you divergence between Reliance today and Bajaj Finance. It's just market positioning. Bajaj Finance, of course, has had a fantastic dream run. Today, the stock is cooling off. It's down about 2% after what was a phenomenal ride last week. And Reliance is the one that's moving higher as the market, the chatter on Reliance financial services, geo-financial services also picks up. Apart from Reliance, metals is a very hot area of the market. And you can look at China for that because the cues coming in are actually negative from an inflation point of view. Inflation has come in below forecast in China. Producer prices are down about 5.5% in that country. But what that's done is that it's given a further sort of impetus to hopes that there'll be more stimulus in China. So in general, metals are higher. The Chinese markets are also higher on the back of that weak inflation print. So metals are hot. And this is a buy on dips market. If Friday was any confusion because of the sell-off, well, that confusion has been put to rest, at least as of now. you're seeing buying in stocks that were running hard earlier as well, and autos would be a case in point. And I guess, Reema, the only sector where there is a bit of trepidation, uncertainty, hesitation is actually IT. And of course, you would know exactly why.
So Nifty ID index was down close to about 1.2% at one point of time, but it's attempting a bit of a recovery. The Nifty ID index is now down about 0.8%. So some buying has emerged in IT as well at the lower levels, but still, it's, it's still down actually 1.1. On my screen is showing as a cut of about 0.8%. So IT is still struggling in trade. A couple of the other losers. Titan is your top Nifty loser after Morgan Stanley today downgraded the stock to an equal weight, and they're saying the risk reward is favorable at current levels, and Q2 is going to be not the best season in terms of wedding dates, etc. So demand could slow down a bit. So Titan is under pressure. Metals are doing well, as Surbhi pointed out, and autos across the board, right? Whether it's your Bajaj, whether it's your Aisha, autos is seeing buying, and even Tata Motors. On Friday, it was up 3%. Yeah. It's added on another 2.5%.
Oh, absolutely. And a lot of the auto ancillary companies as well. So a few of those will be up on your screen, the likes of Electra, Talbros. I'm just naming a few, but there are many more. Lumax is up as well. So all of these stocks holding up very well in trade today. A lot of the tire makers as well. Actually, pretty much all of them. Take a look at CI, JK Tire, Apollo Tires, all of these doing well. So that part of the market definitely looks quite strong. Insurance is another space that's doing well. So you have ICICI Pru, which is gaining well. You also have HDFC Life, which is doing well in trade today. So that's another pack that I would watch. And on the downside, like we were mentioning, tech is definitely the one seeing some cuts. But even outside of the index, names like L&T Tech Services, Nucleus Software, Persistent, all of these coming in with some cuts right now. There's a new listing on the street, Cyan DLM, which is listed very well, 55% premium over there. So that one is looking very good. And one more stock that I would watch for is, of course, Z Entertainment, because the hearing is on right now. The Z Promoters versus SEBI case is on, and the SAT is going to deliver their decision on that today. Very soon, actually, could be expected in the next, half an hour or so. Just to alert our viewers, SEBI had barred Puneet Goenka as well as Subhash Chandra from holding any key managerial positions in listed entities. So that is what is up for hearing. And we'll, of course, keep bringing you the details as and when we do get them. But with that, let's move on and talk about the big story of the day. Clearly, it is Reliance. It is the top gainer on the Nifty, 4% higher as it approves a buyback of the non-promoter shareholding of Reliance Retail at a price of $13.62 per piece. Sonia is here with the details on this one. Sonia, 4% higher here.
Oh, absolutely. Thanks a lot for that. So first, let me tell you about the news, right, in case you missed it. The board of Reliance Retail has approved a reduction in the equity share capital of Reliance Retail, and the consideration is much higher than what the brokerages had estimated, coming in at 1362 rupees a share. The other piece of news is July 20th has been fixed as the record date for the demerger of Jio Financial Services, which will eventually be listed. Now, let me tell you about the implications of both. First, we start off with Reliance Retail. Their decision to reduce the non-promoter shareholding is positive for the company itself and for shareholders. A lot of brokerages had ascribed a value of 900 to 1,000 rupees a share, while the actual consideration is 1362 rupees a share. So hence, it is much better than what the street was expecting. The Reliance Retail buyback is also expected to be a precursor to the IPO and is the part of a larger succession plan and monetizing of shareholder benefits. Hence, it is a positive for the stock. Now, brokerages are quite bullish. JP Morgan has an overweight with a price target of 29.60. They talk about how the independent valuations and the implied diluted valuations are all in excess of $90 billion and sharply higher than when the stakes were sold in RRVL way back in 2020. The buyback of the small number of non-promoter shares is also a cleanup of the shareholding before any eventual IPO of the retail business. Now, apart from that, the Jio Finance demerger, right? Let's talk a little bit about that. That is expected to be announced on the 20th of July. The CLSA put out a note where they say that not only is the business going to be a big disruptor in the space of lending, of payments, etc., but even the people that they have appointed, Hitesh Sethia has been appointed as the MD and CEO of GFS. Sethia has over 2 decades of experience in the financial services space, and a large part of it was with ICICI Bank. GFS will be infused with 6% of Reliance Industries treasury shares, and once those treasury shares come in, the implied valuation of GFS will be $13 billion. Now, if you compare it with Bajaj Finance is somewhere at around $7 billion. So there is a big gap once the treasury shares come in. This means that GFS will become the largest NBFC in India in terms of net worth. So a lot of positives coming through, and hence the stock is the big mover today.
Okay, all right, Sonia, got that. Thanks very much. Indeed, explains the excitement around Reliance. In fact, we discussed this with a couple of market experts as well. We caught up with Devin Choksi as well as Gurmeet Chadha to get their reactions on all of this anticipation of value unlocking in Reliance Industries. Take a look.
Geo Financial Services assumes, I think, the capital of around somewhere around 1,50,000 crores, out of which I think about 1,10,000 crore would be the shares of Reliance Industry which they hold, and balance would be in form of their cash net worth that they have been having in the books. So typically, when you look at it in this kind of proposition, I think when you compare with the other largest peers in the industry, they are probably, I think, if not more, 2.5 times, 3 times more, I think, or more than 3 times rather, in my viewpoint, I think, from Bajaj Finance. But even if I had to take the haircut of the shares, it is around 3 times. So from that perspective, I think you're likely to see the sharp jump into the business going forward because of the network that they have.
Huge vendor ecosystem RIL has across various businesses. And the best part would be that they will get a AAA rating, courtesy the AAA rating of RIL. So the cost of borrowing would be in lines with some amongst the best. In fact, would be lower even than Bajaj Finance, etc. So if you have a cost of borrowing lower and you have a huge network client base, good data analytics other than your traditional credit-based, bureau underwriting. So I think a lot of future value unlocking is in store. What you're just seeing right now is probably a beginning.
Okay, all right, there you go. A couple of views coming in on this anticipation and excitement about value unlocking. In fact, we're going to be discussing this on Who Moved the Market as well. Our digital special show. Remember, we go live on YouTube as well as on Twitter at 2 p.m. So all of the details with respect to Reliance Retail, the retail business, as well as the excitement around Jio Financial Services discussed in great detail on Who Moved the Market at 2 p.m. We'll take a break and come right back.
How the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems. In the middle of the trade, the promoter entity.
Welcome back. Where are we headed from here? After the record-breaking rally over the last few days and last week, the Nifty went to levels of 19,500. Since then, on Friday, it took a bit of a breather, and today again, it started climbing higher, but seeing some profit booking at levels around 19,400 plus. Jyoti Vardhan Jaipuria, founder, managing director at Valentis Advisors, is with us on the show now. Jyoti, morning. I remember towards the end of last year, you were bullish on the markets. But since then, in the last 4 months, there has been a phenomenal rally in the market, 20% on the key indices and so much more on individual stocks. At current levels, how do you feel about the market? Is it time to book profits? If yes, where? And if you had to buy, which would be the pockets that would interest you?
Yeah, Rima, so you're right. Like we were bullish last year because, or a few months ago, because of three things. One is our view was interest rates have peaked. Second is earnings were still holding up, and third, valuation had become reasonable. So valuation now are no longer reasonable. They've gone back to what I would call expensive territory. So from here we will get a correction. I think it will be largely a time correction, but we'll also get a price correction. So my view would be, don't put all your money at this stage. Buy in stages and look for dips to buy really rather than buying at one stage. I still like the market over the 2-year view. I think the Indian economy is poised to grow quite a bit. But just now valuations are not very comfortable, so look for some bad news before buying.
How much do you think markets could dip? Are we looking at just a 5% correction? Are we looking at much more? And therefore, if we are going to see a significant decline in the markets, does it make sense to move to cash?
I think we may not have a very sharp dip, so it may be more like a time correction along with some price correction. So even if you see, the last 18 months, in fact, the market had been more time correcting than price correcting. So I think it would be more like a 5-7% price correction with some time correction also. So that will make it cheaper. So, I think valuations I would like it to be maybe 8 to 10% lower than where we are today. So part of it will come from price correction, part from time correction.
Jyoti, I want to get your thoughts specifically on the financial space, particularly on NBFCs. I remember you telling us that you have incrementally started getting a little positive on financials. And what we're about to witness is a large-scale disruption with the entry of a behemoth like Reliance, right? We've also seen a very interesting rally on Bajaj Finance, and it came out with some very, very positive numbers for the first quarter. So when we're looking at larger NBFCs, I mean, what is your recommendation? How are you going about picking and choosing stocks in the space now?
Yeah, so we have been more positive on the banks than we were NBFCs so far. But I think cyclically now the time has come for NBFCs, and over the last 2-3 months we've been adding to them. One of the main reasons is the interest rates have more or less peaked in India. And so, the borrowing costs for these NBFCs are will from here progressively come down or remain flat, which will help them. The other is, I always look at NBFCs as more like a boom and bust model. They do well when the going is good, they do very badly when the going gets bad. And now that the economy is looking good, I think the NBFCs will start doing well. Amongst the NBFCs, we prefer playing people who are much cheaper relatively on a price to book than some of the high quality, which are very, very expensive. So that has generally been our theme in the banks also. We've done the same thing in the industry also. We prefer to do the same thing.
Okay, got that. Hi, thanks for joining us. What is your thought on all of these FMCG companies? We got a lot of the business updates for Q1 last week, and it's quite mixed, right? I mean, we're still seeing the rural part, which is under a lot of pressure. Of course, it's an expensive space as well. But anything within this space that catches your eye right now?
In general, Pavitra, I've been negative on the NBFCs more because of, the valuations. And the valuations still look like within the whole market, generally valuations are not cheap, but FMCG is still one of the more expensive spaces. Here, relatively they're doing quite okay because for a lot of them, the margin will improve a bit because the raw material cost pressure eased out. But given that, if we get a monsoon failure now, then again, we'll have some question marks on the future outlook. But the other thing, of course, remains this coupled with the fact that we already have valuations which are very, very expensive. That's been one of the reasons we've been avoiding this space, actually.
Okay. So, going forward incrementally from here, we spoke about, some areas like NBFCs. What else would you look at, buying in terms of new themes? Given the valuations, given the run-up in the market, what areas are you exploring now?
Yeah, so, amongst the spaces which have not done well. So, I guess there are two spaces which have not done well. One has been the pharma, the other has been the IT. We are looking at both of them closely, but for us, at the moment, pharma is the one space that we've been relatively more bullish on. We are, buying some of the pharma names because two things are happening there. They had a great bump up because of COVID. And after that, next year, just given the base, everything looked very bad. But things are starting to improve now. So I think some of the pharma companies will show a good growth over the next 12, 18 months. Also, what's happening is, pricing pressure in the US generic market is probably starting to plateau out. Mind you, the prices are not going up, but at least they're plateauing or the drop is very, very marginal. So you'll probably see some better numbers from the US generic companies, and that will help them. It's a space which largely has been ignored by everybody for the last 12, 18 months. So, pharma is one space that we are starting to build positions in.
What about manufacturing? That's a space which the street has lapped up with a lot of interest, even investors have. Are you comfortable owning manufacturing or buying it at current levels?
So, Reema, we own a lot of them because we were very early into this capital goods space and we still own a lot of them. But, a year ago, 18 months ago, it was a very easy trade because valuations were cheap. Now valuations are no longer cheap. So now, you can still get returns there because earnings will grow, but it's no longer such an easy trade as it was. So now, the onus is on companies to deliver these earnings. If earnings miss, then, we could see these stocks underperforming for some time. But having said all that, we still remain like we've not sold most of our capital good names. Still bullish on them.
One more space I want to talk to you about is the auto pack, because we have been seeing quite a run up there, right? Even in the past few days. Today, we have names like Tata Motors, M&M doing so well. Do you think it's too late to be getting into this pack? I mean, names like Tata Motors are up 60% for the year already. Or do you think there are names within this pack that you could still play?
Yeah, so the autos have done very well, so it's no longer easy trade now because we know these are cyclicals, right? So at some point they will start easing off. The one part in autos which we still continue to like, and so we generally not bought most of the auto majors, but we bought most of the auto ancillaries, and there's still some very interesting auto ancillary. There's trading much cheaper than the auto majors, and you probably have a lot of growth visibility. So I would say, again, the autos are no longer easy, but whenever there's comfort on growth for the next 2 years, there's still money to be made in the auto ancillary names.
Okay. Just one final question. Any thoughts on jewelry makers? Today, Titan is a bit subdued in trade. Morgan Stanley has downgraded the stock to an equal weight. They believe the risk reward is favorable at current, not favorable, but the news, the good and the bad news is priced in at current levels. Any thoughts on the jewelry makers in the consumption pack?
So, just very secularly as a business, I think these guys will do very well because, there'll be a shift from all the, home jewelers to the branded jewelers. But most of these people are priced to perfection. So to that extent, it's just the valuation, which is a concern. At these valuations, I think, big money can't be made there. The chances are you want to wait for some corrections in them before you want to buy these.
Okay, all right, Jyoti, we'll leave it on that note. Thank you very much for joining in and giving us your call on the market. Good talking to you. Well, we have to take a break on that note. When we come back, we will discuss technicals, get some trading ideas going with the Jay Thakkar of Sher Khan, and we'll also get you more views on the market.
Today, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader. David to Goliath. From the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers. Today's newsmakers and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes. On Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays.
Hey guys, welcome back. You're still tuned into Trading Hour. For the market, we're still holding up with a 44-point gain that we're seeing largely on account of what's happening with Reliance, or 4% gain there. A lot of the banking names, the Nifty Bank, by the way, has moved into the red, and a lot of the names such as Axis Bank at the low point of the day, you have HDFC Bank at the low point of the day, IndusInd as well is, seeing cuts of around 0.7%. So there's definitely some pressure creeping into the banking pack. Let's get Jay Thakkar in to, get a check on this market and how the technicals are really looking right now. Jay, thanks for joining us. So the gains we're seeing on the market largely on account of Reliance, right now. And also the banks, like I mentioned, have just moved into the red. Your call on both of these indices, the Nifty and Nifty Bank?
Hi, very good morning to you. Of course, had Reliance not moved so much, then Nifty would have been in negative territory like that of Bank Nifty. Nifty for this weekly expiry 19,500 is a very clear resistance, and it is unlikely to cross those levels is what we think. And Bank Nifty has a clear resistance at 45,500, 600 range, and that those levels are unlikely to take off. However, on the low side, 44,500 is a good support as well. So we don't even see those levels breaking because the overall PSU banking pack is looking positive. So this is some time for indices to take some pause. I would say after almost 7 to 8 days of positive closing, and Nifty might consolidate within the range of 19,200, 19,500, whereas Bank Nifty can consolidate within the range of 44,500 to 45,500. Stock-specific activity is what we think will continue from here on. So I have a buy recommendation on REC. It's trading around the levels of 167, 68 range. One can buy REC with a stop loss of 163, targeting 175 on the upside. I like Metropolis as well. It's trading around the levels of 1460. One can place a stop loss at 1430 and target 1500 to 1520. Both of these stocks have formed a very nice symmetrical triangle pattern. REC has already provided a breakout on the upside, and Metropolis is, I'm anticipating a breakout out there. So since these patterns are continuation patterns, I'm providing a buy recommendations out here.
Jay, thanks very much. We actually have to intervene. Apologies for that, because there's some important news that's come up on the screen. This is the much anticipated Z case, which is in SAT. This was all about whether Subhash Chandra and Puneet Goenka can hold key managerial positions in the company or not. Now, what has happened is that SAT has refused to grant any sort of an interim stay on the SEBI order. So that first part is a bit negative because there's no outright stay coming in. In fact, SAT has asked Puneet Goenka and Subhash Chandra to file a reply to SEBI in 2 weeks. The reason why the stock is perhaps reacting a little positively is that SAT has not outright upheld SEBI's order, but SAT has directed the duo, that is Puneet Goenka as well as Subhash Chandra, to file a reply to SEBI. So this is not over and done yet. And we have to now wait and see what transpires once Puneet Goenka files that reply to SEBI. So I guess the way the market's reading it is this is sort of, this is not conclusive. It's neither here nor there. And, it kind of goes on. I think we've got Mr. Arena joining in for a quick reaction. Mr. Arena, thank you for joining in, sir.
Good morning.
I'm reading out, good morning. I'm just reading out the statements as they're coming out from the court. So SAT has refused to grant an interim stay on SEBI's restraining order. It has also asked Puneet Goenka and Subhash Chandra to file a reply to SEBI in 2 weeks' time. So this seems like an interim order for the time being, right?
Well, it only means that there is no order at all. It only says that we want to hear what Puneet Goenka wants to say as far as SEBI's order is concerned, and only then we will consider. So really it's a status quo which has continued. There's no order whatsoever.
Yeah, but the fact is that SAT hasn't thrown out the SEBI order at all. SAT has not passed sort of any sort of a verdict or any adverse observation on the SEBI order. It merely is asking these two to go ahead and file a reply.
Yeah, because it will give its final order only after it considers the reply of Puneet Goenka. So therefore, nothing has happened. It's just a continuation of the stalemate. And they will not pass. They can't pass an order until they hear and read the reply of Puneet Goenka. So the final order will come only after that.
Mr. Ranina, when SEBI had first barred, both Mr. Goenka and Chandra sometime in July, in the middle of June, they were given 21 months. Both Mr. Chandra and Mr. Goenka were given 21 days to file their reply. So have they not filed their reply? Why is it that they've been given an extension?
Yeah, obviously they have not filed a reply, because if they had filed a reply, then the appellate authority would have considered it and passed some order. So there has been some difficulty in giving a reply, and that is why 2 more weeks have been given to them.
No, so Mr. Arena, the other thing is that today the Zee-Sony merger is coming up at the NCLT in a separate case. Now, the whole issue is that as of now, that scheme of arrangement involved Puneet Goenka becoming the managing director of the merged entity. Now, in this morning's SAT proceedings, we don't have a clear direction on that as yet. We don't have a verdict, so that will have to wait for another 2 weeks till a reply is being given, and then the view that SAT takes. So now, what is the likely sort of turn of events in the other matter which comes up at NCLT? I mean, what are the options that perhaps the NCLT could consider? Could it also defer its verdict? I don't want to sort of second guess the court here, but just trying to understand the legal turns that the second case can take in light of the first.
Well, there are 2 options. NCLT may just stay the matter until this SAT appeal is decided. Or second option, NCLT may say maybe you can continue with the process of amalgamation, but Puneet Goenka and Subhash Chandra cannot be the key management personnel until the SAT gives its order. So possibly they may allow them to continue with the process of merger, because that is time consuming, but on the condition that these 2 gentlemen will not be allowed to be in the managing seat so long as the appellate tribunal gives its order. That is the second option.
But that, Mr. Arena, would perhaps also involve the terms of the deal changing, because Puneet Goenka becoming MD of the merged entity was one of the key considerations, one of the key terms of that agreement. So then how does it play out?
But that is only, you're right, but that's only one of the conditions. The other conditions can continue. Yeah.
Right.
All right, Mr. Ranina, we'll leave it at that. Thank you very much for joining us and taking out the time to speak with us on this order. The stock, by the way, has slipped significantly, almost 5% of a cut on Zee Entertainment right now. Let's also get Karan Taurani in of Elara Capital. Karan, like we were discussing, the order that has come through, they've given 2 weeks time to the promoters to really reply and get back to the courts. But right now it seems like it's just a status quo. There's no real change. How do you read the initial comments that have come through from the courts?
Yeah, I think there's no initial change. So there could be, some potential delay for NCLT also to give their decision, because we believe that NCLT approval or clearance rather will not come, unless the issue is resolved first. So I think NCLT hearing is today. I think, after 2 weeks, what happens with this, and then post that NCLT will give a decision. And also, I mean, Mr. Puneet Goenka has also come many times. He's clearly made a mention that the merger is of utmost importance, and the merged entity is something which is irrespective of whether or not him being on board. So I don't see any issue with the merger not going through. I think, but definitely these are going to be uncertain things for the stock in terms of performance.
And the reason the stock is selling off, and right now Zee Entertainment is down 4.5% in trade, is because this development, this additional incremental 2 weeks that have been given, delays the NCLT approval for the Zee and Sony merger. That's the reason why the stock is selling off, because the merger gets pushed back till we have clarity on this case?
Yes, absolutely. I think it's a very small pushback. I think what we are expecting is that some sort of a stay order kind of a relief which would have come, for the Goenka family, and that has not come. And that is why the stock has reacted negatively. But nonetheless, this doesn't, kind of impact the merger in a big negative way. It is just a minor correction because the stock has also seen an up move for 15% over the last 2 weeks. So as I say, as long as the probability of the merger going through remains with or without the Goenka family, I think there should again be a bounce back.
Got that, Karan. No, absolutely, you're right. I mean, Zee tends to have these, from time to time, these mystery rallies. And Friday was one such rally, at least for me. I couldn't make head or tail of why the stock was up 7-8% ahead of pretty important court days, which can't really be second guessed. But anyway, I think some of that is coming off the table right now. Thanks very much, Karan, for joining in with that quick take. Yash, of course, has been following all of this action in court. His day is not over because the NCLT hearing is in the second half. Now, Yash, just remind us this. I remember you putting out, apart from the proceedings earlier in the earlier days, where I think Puneet Goenka's counsel had argued that the merger should go on, whether with or without Puneet Goenka, the merger should go on. That was a very grandiose statement that was made by the side. So in light of that, how should we read this? Because there's no clarity from SAT as of now for the next 2 weeks. And now we have the NCLT hearing coming up.
That's correct, Surbhi. So, of course, prima facie, there is, clear disappointment coming for Puneet Goenka and Subhash Chandra from Securities Appellate Tribunal, where Securities Appellate Tribunal has refused to grant stay to both these parties against SEBI's restraining order. What was that order? Essentially barring Puneet Goenka and Subhash Chandra from taking any directorship position in any of the listed entities. Now, this just does not pertain to Zee Entertainment, but also, as you mentioned, the merged entity, which is in the process. There also, Puneet Goenka is scheduled to become the managing director of that merged entity. So, of course, this order has its repercussion on that particular merger also. But you pointed out one very important argument which came from Puneet Goenka's counsel. That was before NCLT, which is hearing the merger arguments, which was that Puneet Goenka, as MD or not as MD, the merger process should happen because that is in the benefit of shareholders. That is a very important statement. What has come from SAT today is that we are not granting a stay on SEBI order, but both these parties will have to file a reply to market regulator SEBI. That will have to happen within the next 2 weeks. They will have to convince SEBI through that reply that the allegations which have been put by the regulator, there is no merit in those allegations and those are genuine business transactions. And then it depends on SEBI whether they want to vacate the order which they've passed against the two entities. Interestingly, NCLT also hears the merger matter today at about 2:30 p.m. And it will be very interesting to note how NCLT takes acknowledgement of today's SAT's order. Does it give weightage to that statement which came from Puneet Goenka's counsel that he being the MD or not has no weightage on the merger proceedings, or does it give weightage to the SAT's order where there is one more process from SEBI's end which will now be pending, and the merger hearing will also get pushed by a couple of weeks at least till we have a final word from market regulator SEBI. So that's an interesting update which we'll await from NCLT at about 2:30 p.m.
Okay, Yash, thank you very much for that. The stock is recovering a bit, was down 4.5%, now down close to about 2%. Today's NCLT hearing on the Zee Sony merger will be crucial. Get into a break, we'll come back with more on the markets.
Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Hello and welcome to On the Record with me, Shireen Bhan. We're here at the Mahindra headquarters in Mumbai to talk about what the story looks like for the group going forward. Since he took over, Anish Shah has been very, very clear about the fact that he wanted to consolidate operations, but he also wanted to focus on accelerating the core business as well as identifying what he calls our growth gems. To talk to us about what the road ahead looks like is Dr. Anish Shah. Always a pleasure. Many thanks for joining us here on CNBC-TV18. Many milestones that have been marked by the group and under your tenure, 10,000 crores as far as profitability is concerned, and a big rise in market cap. Of course, the markets have also moved higher from 2.41 lakh crore rupees in 2021 to almost 3.81 lakh crore rupees today. You know, in our last conversations, you spoke about the need to focus on return ratios. You spoke about the need to repair the balance sheet. You spoke about the need to re-energize the core business as well as look for new areas and engines of growth. Where do you believe you find yourself in that journey today?
So Shireen, first, good morning. Pleasure to be here with you. And we feel very good about where we are. I think our teams have done a fantastic job. We've had a very strong heritage. And many may not know this, but we were the best performing stock in the Nifty from 2002, almost at the inception of Nifty, till August 2017. And then we sort of had some challenges that we worked through. And what gives us a lot of pride is that we are once again the best performing stock in the Nifty for the last 21 years. Now, this is something that one may not expect of what we would call a diversified federation of companies. But Mahindra is really the India story. We operate in 70% of industries that make up India's growth over the next decade. And what we are seeing is all our businesses are starting to really fire on all the cylinders. We started with discipline and capital allocation. As soon as we had a good handle on that, we pivoted to growth. And what we are seeing is mega growth across many of our industries. We've ratcheted the bar for growth as well. So as we look at our core businesses, auto, farm, Tech Mahindra and Mahindra Finance, we see tremendous growth on the auto side. Farm is in a very good shape. Mahindra Finance has gone through a year of turnaround. We still have another year to go, but it's on a very good track. And Tech Mahindra has had some good wins and really getting poised for a greater turnaround under Mohit Joshi coming in as a new leader. So we've got 4 core businesses in excellent shape. Growth gems were started with a target of getting to $1 billion of market cap in 3 to 5 years. We saw that many are getting close to that target, so we took the bar up a notch higher, and we said that's not enough. Now we need to grow 5x in the next 5 to 7 years to remain a growth gem. And many of our growth gems have taken up that challenge. 2 of them have got external funding, and external investors have accepted the plans that the business has as well. So today I would just say that our teams have done a fantastic job, very proud of what they've done so far.
Well, you know, that's a very comprehensive overview of where things currently stand for the group. But let me pick up, since you spoke about funding, let me address a clarification. There is a lot of speculation and rumor around the fact that you're out there in the market looking for more funding as far as the EV business is concerned. I know you've just put out a disclosure to the exchange saying that there is nothing imminent or on the anvil at this point in time. But what should we understand that to mean? Are you actively looking at raising more money for the EV business at this point in time, or the 10,000 crore rupee capex plan that you have, is that already in place?
I'm glad you asked that, Shireen, because there continues to be lots of rumors.
Practically every week.
Right? And, you know, 3 weeks ago or so, there was an article saying that we are not looking for funding, etc. So we have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group. And they were very interested in EV. And we said that we have enough capital, we are generating enough funds in our auto business, so we really don't need it right now. But at the same time, as they felt it was important and we felt that they could help us grow the business well, we said let's develop something. We didn't have a business plan at that point either, and they kindly offered to develop the business plan jointly, which we did, and we went ahead with that funding round. We have not appointed bankers at that time, nor now. So we have not been actively looking for investment. We have had a number of investors reach out to us, and with a select set of marquee investors, we continue discussions. And if someone is very keen and we find the right mix and we feel that they can add value to us, then we will go ahead with it. So that's where we are right now. We are not keen to dilute a lot.
So how much do you believe that you would like to dilute, since you said that you are in conversation with several marquee investors at this point in time, though nothing close to closure? Or is that me putting words in your mouth?
Let me just say at this point that BII has come in with a 2.5% to 3% stake, and we may look at another 2.5% to 3% stake at some point in time. Now, whether that happens in the next month, whether that happens in the next year, is something I don't know at this point in time.
The probability of it happening in the next month versus the next year, what are the odds on that?
Well, I think different people may put different probabilities on it. So I just leave it.
Since you're the team lead.
So I'll leave it at that at this point in time, because these are always uncertain things. So I think a lot depends on both the investors and us seeing the right match.
But the BII coming on board in the second round, or are you likely to bring in more along with BII?
I think BII has already put in their investment, and that investment is in tranches. So we will see that investment coming in tranches. So there may have been some confusion in the market saying that the tranches may mean they're putting in more funding, but that's been announced, that's public already. So the discussions we have right now are a set of marquee investors in addition to BII.
Okay, in addition to BII, and no timeline yet on when those conversations are likely to close.
That's correct.
Okay, so let me move away from the EV and the auto business, because that is the business that the market understands, and that really has been the core business as far as the group is concerned. Let's address the other two businesses that you spoke of and gave us a quick snapshot on, and I'll start by talking to you about Tech Mahindra. I know that this is a business you're very bullish about. You believe that there is significant headroom for growth, but there's also significant headroom or a distance between where Tech Mahindra finds itself and where the peers versus Tech Mahindra are, both in terms of growth as well as margins. How do you change that?
So first, I'm glad you're looking at things beyond the group, because we've often been looked at as an auto company. But as we look at our 10,000 crores of profit last year, 20% came from auto, 30% from farm, and 50% from services. So I go back to what I said earlier, which is we're really the India story. We play in a number of industries where India is very well positioned today. And coming to Tech Mahindra specifically, we are below on margins, and therein lies the opportunity. Similarly, Mahindra Finance had not performed as well as its peers had. And this is something that we had to first acknowledge. We had to find why that was the case and address it. And I think the team there has done a very nice job now addressing that. And we see a much stronger performance over the last year. And with the changes that are being put in place, we will see Mahindra Finance really lead the market. Similarly, in Tech Mahindra, we feel that there have been a lot of good wins in expanding beyond telecom, in having new accounts, large accounts come in. There needs to be a lot more work done on margins. And Mohit Joshi, as he comes in as a new CEO, working closely with CP as the outgoing CEO, will work together to address that. And we feel that we know today what needs to be done. It will take time. It's not going to be overnight. But I would give it a 2 to 3 year horizon for that to happen. Similarly, in terms of what we've done with Mahindra Finance.
Okay, so 2 to 3 year horizon, that's what you're factoring in as far as the turnaround plan is concerned for Tech Mahindra. You said you know what needs to be done. If you could break that up for me into key priorities, what do you believe needs to be addressed at this point in time, specifically for Tech Mahindra? Because the challenge is also going to be at this point in time, you want margins to go up, but also the question is, are you willing to invest in the business at this point in time, and what could that mean?
So first, Tech Mahindra is a cash-rich business and continues to generate a fair amount of cash. So investments may not be required. If we do make investments in terms of acquisitions, we would do so very, very carefully, because that's one lesson we've learned, both at the Mahindra Group as well as at Tech Mahindra in particular. What we need at this point is to, one, maintain the customer centricity we've had. Tech Mahindra is one of the most customer-centric companies in this industry. Second, continue to diversify beyond telecom. We've had some good wins in financial services, in insurance, in healthcare. Continue that as we go forward. Continue the large account wins as well. And have a very strong delivery setup that allows for increasing margins and narrowing the gap between where we are versus competitors. So these are the three sets of things that are required. It's not rocket science in that sense. The team has already been focused on it for some time. The first two, I think, have been achieved to some extent. And the delivery part and increasing margins is a third that needs to be
So what has been your message to Mohit Joshi? You've articulated very clearly what you would like to see being changed at Tech Mahindra. But what's the mandate to Mohit?
The mandate to Mohit is establish market leadership for Tech Mahindra. Is essentially addressing the questions you started with, which is we are today lower in margins versus our competitors, and we have opportunities to be able to increase that. So with that, established leadership. Beyond that, an important element that Tech Mahindra is really focused now is staying at the cutting edge of technology. And this is an area where we're seeing a much stronger synergy with the Mahindra Group on a number of things. There are a number of projects on generative AI we are running across the businesses. We've had metaverse put in place in 4 of our industries. And these are things that help Tech Mahindra stay ahead. Work with the Mahindra Group to create pilots. We have a 5G pilot going on at Chakan, as well as a few other things that are linked to it. And take them to other customers around the world, having shown proof of concept in specific industries. Now, this is something that we feel will position Tech Mahindra very well again versus its peers, and position it as a leader in its space.
Let's talk about the other business that you spoke of, where you had acknowledged to me when we last spoke that there was need for correction, and you've been on that path, of course, correction. I'm talking about Mahindra Finance. You've also got leadership change on the anvil there. Raul Rebello will take over when Mr. Iyer retires in April of 24. How satisfied do you feel in terms of where the ratios stand today? And what's the aspiration now in terms of growing that business in terms of disbursals?
So very satisfied today in terms of where Mahindra Finance is. We had acknowledged that it had performed poorly versus its peers over the last few years. And we had outlined the set of actions required. All of those actions have been taken. And Mahindra Finance is on a very strong trajectory right now, as seen from its results. Raul came in as a Chief Operating Officer. We've elevated him to the CEO, so he's been a big part of this turnaround already. And therefore, it's not someone new coming in to be able to set it up. He's a fantastic leader. We had a very extensive search, and the board felt that Raul was best positioned despite a lot of very strong candidates across the industry, many from banking. And we've got a very strong team in place now. There's a huge focus on technology and data. There's a tremendous focus on asset quality and ensuring that we maintain a very strong asset quality. And the results today bear that. We've had GNPAs in the 8 to 9% range in the past, went up to 16%. Today they're in the 4 to 5% range. And it's not just where they are today, it's the actions taken to ensure they don't go high again in the future at any point when there's an economic shock. So these are things that are really enabling Mahindra Finance to start showing the strength it has, because the rural and semi-urban franchise that Mahindra Finance has is better than anyone else that we've seen around. And that's something that has been, in a sense, hidden by some of the challenges in asset quality we've seen in the past. More the volatility, not the losses, because the losses never came. It was just volatile in terms of provisions. But having taken that volatility out, I think it will help Mahindra Finance really be able to show the strength of its franchise.
You know, one of the aspects linked to the volatility that you spoke of and the fact that you've been able to do away with that is the digitization process. Where are you at this point in time in terms of digitization as far as Mahindra Finance is concerned?
I'd say halfway in our journey. It is a very significant, almost a complete revamp of the business. All the core systems are being changed. The processes are being changed. We've got a separate team focused on the consumer focus and making it as easy for the consumer as we can. So all of those things, and beyond technology, data is a big part of it as well. So we're looking at analytics playing a huge role in terms of how we source, in terms of how we collect, and essentially making it a much stronger business.
Speaking of strength as far as the business is concerned and future opportunities as well, what role do you see in partnership or collaboration with fintechs, if any, at this point in time for Mahindra Finance?
We have been working with technologies. We also have been working with some of the established banks. And we've got with Bank of Baroda, we've got a co-lending agreement as well. We're working on the same with SBI. And that's something that will help Mahindra Finance be stronger. So it's working with the large banks, it's working with the fintechs, it's bringing in technology, it's bringing in talent that will really transform the business. And a lot of these actions have been taken already.
You know, the NBFC space is also a fairly competitive space at this point in time, and there have been regulatory changes that have been brought in by the regulator there as well. How do you evaluate the landscape at this point in time, given the competition, and where do you believe you will need to do more to be able to take on the competitors?
So I think we are very well positioned because of the model Mahindra Finance has. That strength, as I mentioned earlier, we haven't seen anywhere else. Regulations are welcome for us because we are a very well-governed company. And for us, it's important to ensure that the consumer is protected. Now, RBI basically is very focused on consumer protection. That's what we want as well. So from that standpoint, that doesn't faze us. In fact, it's better. It improves the industry overall, and in many ways, it plays to our strengths.
The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems. In the middle of the trade, the promoter entity, which is Barings Private Equity, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen. decode their impact on stock prices and help you stay ahead of the markets. CNBC-TV18. Follow the leader. From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Stocks gain powered by select heavyweights, even as mid-cap slip, metals and autos lead gains, while utilities and realty drag.
Reliance Industries powers the market higher after it announces a move to acquire third-party stake in Reliance Retail at a hefty 1362 rupees per share, and also sets July 20th as the record date for allotting shares of its financial services arm.
Vedanta Group does a U-turn on its earlier plan to keep its semiconductor and display businesses out of the listed company Vedanta Limited by transferring ownership to it at face value. This even as it eyes money from Hindustan Zinc as dividend.
ICICI Pru Life, Keystone Realtors and Sula Vineyards gain following their quarterly updates, while a drug nod boosts Gland Pharma.
The Securities and Appellate Tribunal refuses to stay SEBI's order against Z promoter Subhash Chandra and Puneet Goenka. The tribunal gives them 2 weeks to file a reply with SEBI. Hello and welcome to Halftime Report. I'm Sonia Shenoy and with me are Ekta Batra and Mangalam Malu. Well, it is not a bad market, you'd have to say. After that fall we saw on Friday, once again things resumed. They picked up. But now the volatility is kicking in a little bit. You'll see that in the Nifty chart, which has fallen from the day's highs. You'll see that in the mid-cap chart, which is down almost 180 points. So the market is a bit tentative at these record highs. It's metals and IT that are dragging in trade today. IT ahead of their numbers. Z also drags after the SAT order, so that stock is also a bit under pressure. We'll talk more about all the buzzing stocks in the next 1 hour. But as of now, not too bad, just about catching its breath after the big moves last week.
It's catching its breath, yes, and just the way you caught your breath the last couple of weeks as well. Sonia, I hope you had a good holiday. The markets, you missed that record run, but maybe it'll give you another opportunity to see one more record run given the underlying strength. However, currently there is some weakness in the Nifty bank that's a lot more pronounced. The only reason why the Nifty is still holding up mildly in the green is because of Reliance. Reliance is up around 3.5%. And had it not been for Reliance, we would have seen a near 50-60 point decline on the frontline index itself. The Nifty bank has fallen about 350 points from the highs, and the mid-cap index is a tad bit of an underperformer today. So let's see where we go from here, at what point support levels kick in. There were a lot of overbought positions over the last few trading sessions. So maybe some time to normalize before we resume the uptrend.
Okay, yes, absolutely. And we have the June mutual fund data, which is out. The net equity inflow has risen quite considerably to around 8,245 crores versus 2,906 crores. Maybe we can get a trend up to give you a sense in terms of where exactly it stands versus previous months. That's the net equity inflow that I'm talking about. We had the hybrid fund inflow, which came in at around 4,611 crores. It's dipped a little bit as compared to the previous month. So it's come in at around 4,600 odd crores compared to a little over 6,000 odd crores on a month-on-month basis. Liquid fund outflow has been to the tune of around 28,500 odd crores. So those are a couple of statistics which are lining up for you as we talk. But net ETF inflow has come in at around 3,402 crores. That too has dipped a little bit as compared to the previous month, where it stood at around 4,500 odd crores. So those are all of the key parameters which are coming in. We'll get you more details with regards to the SIPs as well. But as of now, the net equity inflow has been quite robust in the previous month. It's coming at around 8,245 crores, which compares to around 2,906 crores. We'll get an expert on board to talk a little more about this as well. But those are a couple of statistics which are lining up. Total debt scheme outflow has been to the tune of around 14,136 crores. This compares to an inflow in the previous month.
Okay, well, that's the mutual fund data. More on that later, but let's get straight to the big story of the day, which is Reliance Industries. In case you missed out, it's the top Nifty gainer as it has approved a buyback of the non-promoter shareholding, Reliance Retail, at a price of 1362 rupees per share. So let me just put all the data into context for you. First, the news flow, as we've been telling you, the board of Reliance Retail has approved a reduction in the equity share capital of Reliance Retail, and the consideration, the approval has come in at 1362 rupees a share, which is much higher than the 900 to 1000 rupees that brokerages had penciled in. So that's a positive. The second news flow has come in on the record date for the demerger of Jio Financial Services, which has been set at July 20. This is a precursor to, of course, a larger succession plan as well as the eventual listing of Jio Financial Services. Let me talk about the implications of both very quickly. Reliance Retail's decision to reduce its non-promoter shareholding is a big positive, not just because the price is much higher than what brokerages had estimated, but also it's a precursor to the Reliance Retail IPO and part of a larger succession plan over there. If you look at it, most brokerages, whether it's JP Morgan, HDFC Securities, JM Financial, all of them had penciled in anywhere between 900 to 1000 rupees. So this 1362 is much higher than estimated. In fact, JP Morgan has an overweight on Reliance Industries. They have a price target of 2960. They talk about how the valuations are not only higher than estimated, but also sharply higher than the implied equity value. The last time when the stake was sold in 2020, stake sale of RRVL. Also, what this does is, just to talk a little bit about the other news piece, which is the demerger of Reliance Jio. Now, the expectation is that Jio Financial Services will be listed very shortly. And, they've also put in place a very strong management. So, as we know, Hitesh Sethia, who was earlier with the likes of ICICI Bank, he has a 20-year track record in the financial space. He has been appointed as the MD and CEO of JFS. Now, JFS, if you just compare it with some of its peers like Bajaj Finance, which is the largest player currently, JFS will be initially infused with 6% of Reliance Industries treasury shares, which implies a valuation, a net worth of $13 billion. Now, this compares to Bajaj Finance's net worth at $7 billion. So straight away, GFS will become the largest NBFC in the Indian financial space. And hence, the prospects are looking pretty good. And I guess that's what the street is factoring in as well. In fact, we spoke to two big bulls in the, of Reliance, Devin Choksi and Gurmeet Chadda, to get in their first reactions on the announcements that came in. Listen into what they had to say.
Geo Financial Services assumes, I think, the capital of around somewhere around 1,50,000 crores, out of which I think about 1,10,000 crore would be the shares of Reliance Industry which they hold, and balance would be in form of their cash net worth that they have been having in the books. So typically, when you look at, I think, this kind of proposition, I think when you compare with the other largest peers in the industry, they are probably, I think, if not more, 2.5 times, 3 times more, I think, or more than 3 times rather, in my point, I think, from Bajaj Finance. But even if I had to take the haircut of the shares, it is around 3 times. So from that perspective, I think you're likely to see the sharp jump into the business going forward because of the network that they have.
Huge vendor ecosystem RIL has across various businesses. And the best part would be that they will get a AAA rating, courtesy the AAA rating of RIL. So the cost of borrowing would be in lines with some amongst the best. In fact, would be lower even than Bajaj Finance, etc. So if you have a cost of borrowing lower and you have a huge network client base, good data analytics other than your traditional credit-based, bureau underwriting. So I think a lot of future value unlocking is in store. What you're just seeing right now is probably a beginning.
All right, so that's about Reliance. Just a couple of things on the June mutual fund data that have come by, and before we move on to the stocks that are moving, 3 things that really stand out. One, large cap indices, or rather large cap stocks or large cap funds, have seen an outflow, and that outflow continues for the second month in a row. So it's increased from 1362 crores in the previous month to an outflow of 2050 odd crores. The second thing that stands out is the record inflows that we're seeing in mid and small caps. So mid cap inflow this time around has been 1750 crores. This compares with around 1200 crores month on month. So the inflow in the mid cap index has, or rather the mid cap funds, has increased over last month. And now just take a look at the small cap fund inflow. Small cap fund inflow, which was high at 3,283 crores in the previous month, has spiked all the way up to near 5,500 crores in this month itself. And this ties in with the way these indices have been moving as well. The mid cap index as well as the small cap indices have been at a record high. In fact, in FY23, the funds that came into the mid cap index were close to around, or mid cap related funds were close to around 22,000 odd crores. And this year itself, we've seen an increase in the capital allocated to small cap and mid cap funds at the cost of large cap funds, which are seeing an outflow for 2 consecutive months. So that's an interesting trend that the mutual fund data is reporting. But let's talk about some of these mid and small cap stocks itself. Gland Pharma is the one which is spiking in a rather wobbly market, and that's because of a US FDA nod, Ekta?
Yes, absolutely. So they have received a nod for a drug called Fomepizole. And this drug is used to treat ethylene glycol and methanol poisoning. Now remember that ethylene glycol has been in focus because of all of the cough syrup incidents where there has been contamination. So that probably resonates better in terms of what this drug does. So it helps in terms of treating ethylene glycol poisoning. Now, separately, besides this particular approval, remember that things have been on an uptrend for Gland Pharma. For example, in the month of June, at the end of June, their one particular facility in Hyderabad was inspected by the US FDA. They were only issued one observation. And remember that they've had a very strong record when it comes to the US FDA regulations. So that probably adds to the sentiment. And remember, in terms of valuations also, the stock is still over 50% away from its 52-week high, but it's rallied close to 30% from its 52-week low of around 861 odd rupees. So maybe things seem to be going a little positively for Gland Pharma, which has recovered over 1,000 odd rupees. Remember, its 52-week low was at around 861. So since then, it's recovered. It's made a move on the upside. There's an approval which has come through, plus one of their inspections has gone through successfully as well. So that seems to be boding well on an overall basis for Gland.
Okay, well, thanks a lot for that. That's on Gland Pharma. It's been one of the worst performing stocks. Last 12 months is down almost 50%. But, Ekta talking about why it's sort of making an attempt to recover. But ICICI Prudential is the next stock on our radar this afternoon. The stock is surging on the back of a good June business update. Surbi Sutaria is here with all the details. Surbi, over to you.
Thanks for that. So ICICI Pru has released its June monthly numbers as well as the Q1 FY24 premium numbers. For June, their individual APE has seen a growth of 12% on a year-on-year basis. The total APE has also seen a similar level of growth, up 11%. The ICICI Bank channel APE was down 14%, but this is still lower than what it was in the first 2 months of the quarter. The other channel APE is up 17% on a year-on-year basis. For Q1 FY24, the total APE and individual APE both were down 4% on a year-on-year basis, but the new business sum assured was up 9% on a year-on-year basis. Now that indicates that the overall protection business could have done well, but we will still have to wait for the Life Insurance Council to put out the numbers to see how the retail protection business has done. But for now, the APE numbers for the month of June look pretty strong.
All right, Surabhi, thanks a lot for that. So that's about ICICI Pru, the stock up around 2% But we were talking about the mutual fund data coming in for the month of June. We have Anthony Heredia, who's the Managing Director and Chief Executive Officer at Mahindra Manulife Mutual Fund, joining in to detail these numbers, or rather give us some more insight into these numbers. Thanks a lot for joining in. You know, the one thing that really stands out is the consecutive outflows that we've seen in the large cap funds for 2 months. Small cap fund inflow at close to 5,500 crores increased substantially over the previous month, and the mid cap fund inflow as well, increasing over 60% as compared to the previous month. So is there a trend that will continue given the outperformance that we've seen of the mid cap and the small cap funds, or do you think at some point the large caps will also make a comeback?
So in my view, I think this trend is got some legs. The momentum which started with a commentary on valuations being in favor of small caps and mid caps has meant that the liquidity in the last 3-4 months in this space has been unprecedented. I don't see any significant change. And in fact, the earlier thought on large caps was perhaps underperformance relative to benchmark. But as we speak, large caps have actually outperformed benchmark to the highest proportion I've seen, at least in the last 6 to 9 months. So my guess is that for the next 3 to 6 months, we will see continuation of this trend. Small and mid caps, and to some degree, multi-cap funds will see a bulk of the gross flows. And large caps, I think, will continue to see, tepid flows for sure.
Okay, well, we have Suresh Soni, Chief Executive Officer at Baroda PNB Paribas Mutual Fund, joining into this discussion as well. Suresh, hi. Do you echo that view that, we are going to see that alpha come through for most retail investors by investing in mid caps as well as small caps and probably holding back their investments in large caps?
Indeed, the equity flows have been decent, driven by both the market performance over the last year as well as more recent. In the last 3 months, if you notice, the markets are up about 14% on Nifty and a little more in mid and small cap indices. So it's an all-round equity flows that we are witnessing, a slight more accentuation in favor of mid and small cap. That is also driven by a little bit outperformance that we have seen in that area.
No, I think Ekta's question was more about what do you see as the way forward? There has been, of course, a big outperformance in the small and mid-cap space, but that's only just beginning, right? For an investor who's perhaps watching you right now, do you recommend continued investments into small and mid-caps through the mutual fund route? And do you think this is just the start of what could be perhaps a multi-year upcycle?
So mid and small caps by nature tend to be a little more volatile than the large cap. And therefore, both on the downside and upside, their beta tends to be a little higher. Lately, we have seen the outperformance. But this is also a category which over a period of time generates better return than large cap investments. And therefore, for investors who are looking at, let's say, 5 to 10 year time horizon, they should have no worry putting money into mid and small cap fund. But somebody who's looking to time it and wants a repeat performance of the last 3 months in the next 3 or 6 months, that's going to be difficult. So I would say medium long-term investors stay invested. If you have some short-term trading mentality, it may not necessarily be the right time.
Right. What are your thoughts on, what do you say, active funds versus passive funds itself? Do you think it makes sense for more money to go into active funds from here, or passive funds also offer some opportunity?
So this is an ongoing debate that continues all the time. My belief is there's a space for both the product. It's not active or passive, but it's active and passive. The markets like India continue to offer good opportunities for investment outperformance by active managers, and therefore active managers will continue to have play. However, for some people who are either institutions or people who don't want to take a call on manager outperformance, the passive fund offer a reasonable alternative. So it's both the segments will grow. I personally invest more money, and I personally encourage people to consider well-managed active funds.
Okay. Anthony, we've been discussing how there is more interest in the small and mid caps versus the large caps. But do you think overall there could be some amount of caution which could just seep into investors as an overall strategy of investing into equities? We could probably look at more investing in multi-asset funds simply because of the kind of run-up that we've seen. And are people probably getting a little cautious and taking some money off the table, booking some profits now?
So people are definitely cautious because what we're seeing is obviously much higher gross flows in small and mid cap. Now, historically, these are not the largest asset classes in terms of funds, and which is why the redemptions are lower and you see the net flows looking like what they do. But we are actually, and I know a lot of distribution partners that we have are recommending to clients that probably look at multi-asset funds, look at multi-cap funds, look at flexi-cap funds, rather than a one-dimensional approach which kind of looks at the last 3 or 6 months of outperformance in a particular cap and then believes that that will be the trend that will be true for the next 2-3 years. So I would say there is a bit of caution, and it's seen in the redemption numbers as well, right? Just as you have, I would believe, the highest gross flows in the month of June for probably the last 3 to 6 months, you also see the highest number of redemptions as well. So there's enough of money being taken off the table as well. And we believe that's in conjunction with the view that most people are taking, which is stick to multi-asset, multi-cap funds rather than only focusing on small and mid-cap. That's our view as well.
Sure. Just one quick question, Anthony, on what the update is or what the expectation is on debt funds now. Because about, 6-8 months ago, that was the big buzzword before the market sort of resumed its uptrend. How have the flows been into debt funds, and what's the expectation? What's the prognosis?
So the prognosis, I don't think, is very great. Honestly, I think we have to be realistic, right? Look at the alternatives. You have bank deposits or corporate fixed deposit rates, which are probably at their peak looking forward the next 3 to 5 years. It would be amiss of me to tell clients that, you should still look at only debt funds. I think that's a very good alternative. But Sonia, I made this point a couple of months back as well. I think multi-asset funds then come and play the role of the fixed income allocation. And I would actually believe that in the next 6 months to a year, that category will be a leading category in terms of flows. And I think the industry will probably get its share of fixed income flows through that rather than plain vanilla fixed income funds.
All right. And finally, Suresh, a question on hybrid fund. I mean, we've seen the inflow come in close to around 4,600 crores. This number last month was close to 6,100 crores. After the debt taxation, or rather, the taxation related issues, this became an attractive space for people to put their money in. But now, do you think that it's peaked out, and from here on, we'll only see reduction in this number? What are your thoughts on the future of hybrid funds?
Good flows in hybrid funds, and a large part of that flow is also driven by a category called arbitrage fund. Arbitrage funds are driven by both the spread in the market between equity, cash, and future, which tends to be high when the markets is buoyant. So in arbitrage fund, it's been a double whammy of positives. Spreads have been high. And also, as debt taxation becomes relatively less attractive, arbitrage funds appear pretty much more attractive in relation to that. So that category, to my mind, will continue to grow, continue to see flows. Overall, hybrid funds present a very good opportunity of balancing both equity and debt from exposure perspective, as well as giving a tax-efficient exposure to debt category also to investors. And therefore, my belief is this category should continue to grow. It also works very well for people from a risk management perspective.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and helping us analyze the June mutual fund data. Appreciate your thoughts, gentlemen. Let's slip into a short break. On the other side of the break, we'll connect with Mahesh Palawat, who's the Vice President of the Meteorology and Climate Change Department at SkyMet Weather, to find out about what's been happening with the monsoon mayhem in northern India and what the outlook is going ahead.
Kotak Mahindra Bank. The stock is down almost 2.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems. In the middle of the trade, the promoter entity, which is Bearings Private Equity, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC. For a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader. From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps.
Welcome back. Well, for the markets, we have the mid-caps, which are a tad under pressure, so down around 0.5%. It is underperforming as compared to the frontline indices at this point in time. We have the advanced decline ratio also, which is on the negative side. We have the Nifty Bank, which is the financials, which is also under pressure, so down around 0.3% currently for a couple of these banking stocks. To watch out for stocks such as Titan, for example, had a very good run on Friday, but now seeing profit booking, so that stock is one of the top losers on the Nifty. But let's get you some updates on the weather. Torrential rains have really wreaked havoc across North India over the weekend. We have with us Mahesh Palawat, who's the VP Meteorology and Climate Change at SkyMet Weather, joining in to give his sense in terms of what at least SkyMet is predicting when it comes to this rain fury that we're seeing in the north. Mahesh, if you could just detail to us what your charts are telling you when it comes to, you know, the kind of fury that we've seen in the north, and whether the worst is actually over.
Yes, we can say as for northern plains, worst is almost over, because now rain activities, the Chandigarh recorded more than 300 millimeter in the span of 24 hours, and Delhi recorded 153 millimeter, and then again 3-digit rainfall. And similar rain activities were over many parts of Uttar Pradesh and Rajasthan, East Rajasthan, Haryana, Punjab. And now the fury will continue over Uttarakhand for at least next 2 to 3 days. However, rain activities over Jammu Kashmir and Himachal Pradesh may continue with heavy intensity for another 24 hours. Thereafter, the weather system will shift over Uttarakhand, and it will continue to give moderate to heavy showers with isolated very heavy spells for another 2 to 3 days. And rain activities over Delhi and NCR will be moderate today, and parts of Punjab, Haryana will also witness moderate rain activities. And from tomorrow, rain activities over, particularly over Delhi and NCR, will start reducing. However, the rain will be moderate to heavy over many parts of Uttar Pradesh and Bihar, because these areas, particularly East Uttar Pradesh and Bihar, these areas were rain deficient. Now they will also get sufficient rainfall. Yeah.
Okay, so that's good to hear that perhaps the intense rainfall could settle in at least certain parts of India, of northern India. In terms of the agricultural situation, can you give us an update on how things are? What has the disruption been so far because of the intense monsoon across the parts that you spoke about?
See, during month of June, we have seen a lesser amount of rainfall and rain deficiency was very high until mid June. Thereafter, after say third week of June, rain activities commenced over many parts of North India, Central India, eastern parts of the country, Central India, and the sowing was in progress, and there was sufficient or enough sowing has taken place over most parts of the country, and now the decent rain has been over many parts, particularly over Central India, Gujarat, Rajasthan, Maharashtra, and eastern parts of the country, as well as Northwest India. So the sowing of crops is as per norms, and we can say the almost all over the places the crop has been sown. But now the rain activities will continue with moderate intensity over many parts of east, northwest, as well as central parts of the country for another 1 week or so. So there will be no deficiency of rainfall for upcoming crops, and only the area of concern will be now western parts of Rajasthan and Saurashtra and Kutch. And rain activity will start reducing over these areas, and moreover parts of South Telangana, Andhra Pradesh, interior Karnataka, and Tamil Nadu. These areas will also witness lesser amount of rain, or you can say weak monsoon condition for another 8 to 10 days. Yeah.
Right. That's an interesting perspective that you're giving here. And, the intensity of rains has actually reduced the deficiency. Mr. Palawat, I just wanted to know, anecdotally, what we've seen over the last few years is that the intensity of the monsoons has increased while the spread across the monsoon period has reduced. So you have longer periods of drier spells and shorter periods of intense monsoon. So as a result of which, the quantum of rains is normal, but because of the intensity change and the distribution change, it has had an adverse impact on agriculture. This is largely anecdotal. Would you have any data to, corroborate this or refute this? And how should one prepare for these things going forward from an agri and an economy standpoint?
See, the inclement weather condition, or you can say the rainy days have shrunk. And the rain amount, rain activities, or you can say rain, which used to take place in a span of 3 to 4 days, is happening in a span of 24 hours, 8 to 10 hours nowadays. So we can say the intensity of extreme weather events or frequency of extreme weather events has increased. I do not have exact data, but yes, the center part of the country, particularly the Madhya Pradesh, eastern parts of Rajasthan, parts of Gujarat, the west coast of the country, these areas are more vulnerable.
Okay, all right, Mahesh, I think we've lost that line. But nonetheless, there should probably be some settling in terms of the rains. Mahesh is back with us. Mahesh, if you could just complete your point.
Yeah, when any weather system which usually develops over Bay of Bengal, it has a tendency, since last 5 to 6 years, we have seen that the route of weather system has changed. And they are moving across central parts of the country, giving heavy rain over Odisha, Telangana, parts of Telangana, Vidarbha, Marathwada, South MP, then reaching up to Gujarat and South Rajasthan. And traditionally, the areas which usually used to get heavy downpour during month of July and August, particularly Indo-Gangetic Plain, right from Punjab, Haryana, Uttar Pradesh, Delhi, Bihar, and Jharkhand. These areas has been receiving lesser amount of rain. So we can say when extreme weather events, or you can say deluge or heavy downpour occurs in a span of 24 to 48 hours or 8 to 10 hours, then it leads to flash floods, and the water recharge capacity has been reduced, and we do not have enough reservoirs or the desilting of canals and the ponds. That's why the water cannot be stored, and it goes away, or you can flows away, and it reduces the fertility. The upper layer of soil is also eroded. So the amount of rainfall is almost same, which used to be there, but the rainy days has shrunk. They have reduced, and the uniformity of rainfall is also not there now.
Okay, Mahesh, just a quick, very brief answer with regards to the deficit that we're facing in certain subdivisions such as Jharkhand, which is to the tune of, I think, around 39%. Do you expect that to probably improve?
Yes, particularly Bihar and Jharkhand may improve. Eastern parts of Uttar Pradesh may improve. Particularly East UP and Bihar will see significant increase in rain activity. However, Jharkhand will be there may be some you can say reduction in deficiency, but deficiency will persist because patchy rains are predicted for Jharkhand and Gangetic West Bengal. However, eastern parts of Uttar Pradesh and Gangetic sub-Himalayan West Bengal and Bihar, these areas will get heavy to very heavy rain for another 3 to 4 days. So the deficiency of these areas will be reduced significantly.
Okay, well, thanks a lot for joining in and explaining to us what's been happening in northern India, all the mayhem that has been created there because of the monsoon situation. But thankfully, things are going to ease a little bit over the next couple of days. I'm sure people are waiting for that. Let's slip into a quick break. On the other side, Richard Jain of 5paisa.com will be joining in with some trading strategies. Do stay tuned in.
Corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. With the tech world normalizing, autonomous solutions and intelligent algorithms are transforming our society, one service at a time. As the computing era reaches a tipping point, find out what it takes to succeed in an AI world. CNBC TV18's Young Turks travel to Silicon Valley to bring you definitive insights from the most influential leaders and investors. Young Turks at 21. Voices from the Valley. Only on CNBC TV18 and CNBC-TV18.com. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBC-TV18.com.
Welcome back. We're seeing some amelioration from the lows. In fact, the index is moving higher from the lows, and that's largely on account of a couple of factors. One, the Reliance stock has once again moved to the high point of trade, sitting with a gain of almost 4.5%. As you can see, the Nifty closing in towards that 19,400 mark. Apart from Reliance, we're seeing some pickup come by in the IT pack as well. So while the IT index is still in the red and a large part of the IT stocks are still lower, we're seeing them move higher from lows. So there you have it, a mild uptick on the IT stocks. Just pull up the intraday chart of Infosys, pull up the intraday chart of Tech Mahindra and TCS as well. While Tech M and TCS are still in the red, they've recovered from the lows, and Infosys has moved to the high point of trade. So this is something that we'll monitor. The Nifty Bank 2 has recovered a tad from the lows, currently sitting with a cut of just about 80 points. So perfect to get you some active options, and the F&O data coming in at the midday. We have 19,400 put on the Nifty, extremely active. So that's telling you levels closer to 19,300 to 19,350 will see an important support, and that's where the low of today's trading session has been as well. On the way up, however, 19,500 upwards, we will see some resistance, and that's why the call writers at 19,600 have been extremely active as well. On the Nifty Bank, 45,000 is the fulcrum to watch out for. We've seen a fair amount of writing at the 45,000 put for a premium of 300 rupees, telling you that 44,700 is an important support to watch out for. And on the way up, levels upwards of 45,200 may continue to face some sort of congestion. Reliance is the interesting stock to watch out for, whether it sustains above that 2750 mark or not, because 2700 call on Reliance had the maximum open interest, and those call writers are now running for cover. At the same time, we're seeing heavy writing at the 2700 put. So that's something we'll watch out for on Reliance. And other stocks, a lot of long positions added on Apollo Tyres and ICICI Pru, whereas we're seeing a fair amount of long unwinding on stocks like Intellect Design and Titan. So we'll monitor these stocks as well.
Okay, in fact, you were mentioning Apollo Tyres, even CEAT is one of the biggest movers today. Of course, it's had a dream run in the last many days, but today the stock is up almost about 6%. In fact, let's pose these questions to Ruchit Jain of 5 Paisa, who joins us on the show now. Ruchit, hi, welcome to the show. I wanted to start by asking you about the biggest mover, Reliance Industries, right? Do you see a lot more upsides in the stock from these current levels, or do you think that the risk reward is not too favorable now? And in general, how are you feeling about the market as well?
Yes, hi, very good afternoon, Sonia. Very good afternoon, Mangalam. Starting with the Reliance first, I think the stock has seen a gradual up move recently where the high top, high bottom structure was in place. But now the volumes have started picking up significantly, and this has been one of the heavyweights which has not performed up to the mark compared to what the uptrend that we have seen from these lows of 16,800. So ideally, I think this rally should not stop over here. The kind of volumes that we are looking at in the stock, the momentum should continue on the higher side. The first level that we would be watching for would be the previous all-time high which we witnessed in May 2022, which were around 2,796. And ideally, if that gets crossed, then I think 3,150, which would be the 127% retracement of the previous correction, that should be seen. So if one has from a bit short to medium term perspective, then I think even at current levels, one can look for to buy the stock and add on any kind of dip towards 2,650. The stop loss would be 2,600 on long positions, and target should be somewhere around 3,150. Now, coming on to the markets, we have seen a decent run up in last 3 months without any corrective phase. So the momentum readings have entered overbought zone. But whenever we see such overbought setups, the overbought setups get cooled off either with some price-wise correction or with some time-wise correction. So considering a good amount of sector rotation or stock-specific rotations which is going on, we are not expecting any significant price-wise correction to come in the indices for now. 19,300 would be the very crucial support for the for Nifty index to watch out for. But I think in this week, we would see more of a time-wise correction where index would trade within this range of 19,300, 250 on the lower side, and 19,500, 550 on the high side, and stock-specific moves would continue to be on the positive side.
Okay, what are these stock-specific moves, Ruchit? Any more recommendations? And, we were just talking about the interest that we've seen in the broader markets in terms of flows coming through from the AMFI data. Is that corroborating with any technicals that you are looking at in the broader market stocks?
Yeah, so I'm looking at more of stocks from the large cap space itself where good price volume action is there. So couple of buy recommendations from my side. First is a buy call in Bharti Airtel, where we have witnessed a good high top, high bottom structure, and on any corrections, we are witnessing that the 20 days exponential moving average, which is a short-term average, has not been broken since a few weeks now. So till that is intact, we believe that the trend would continue to go higher. So one can go long at current levels in Bharti with stop loss below 855. We are projecting target somewhere around 920 as per technical analysis. And Biocon is my second pick, where within the pharma space, I think the stock has, if you compare with some of the other pharma names, some relative underperformance has been there. But off late, what we have seen that the price up moves have started witnessing good amount of volumes in the stock. Even recently, we witnessed a good volumes uptick. And whenever the small corrections are there, the volumes are quite less. So this is a very good structure for short to medium term, where up moves are supported by good volumes, corrections are backed by lower volumes. So I think the stock is we are witnessing a good risk reward ratio to enter the stock at current levels. So keeping a stop loss below 240, short-term traders can look to buy Biocon for possible targets around 285.
All right, thanks a lot for that. Well, let's slip into a quick break. On the other side, we'll put focus on the Cyient. On the Cyient DLM stock, it made a very strong debut today. In case you're wondering about it, more on that coming up in a bit. What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable.
It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively, you can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
Who? Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger queue for the rich.
Welcome back. As promised, we're going to tell you about Cyient DLM. It's an electronic manufacturing services and solutions provider. It's made a very strong debut, listed at over a 50% premium to its issue price. Surbhi is joining in to tell us more about the listing. Surbhi, over to you.
Hi, thanks for that. So as you rightly said, it's listed at a 52% premium. It was supposed to list at 66 times FY23 PE, but now with the 52% premium, it is at 95 times FY23 PE. So a lot of it is priced in now. It's an electronic manufacturing services company. Now it basically manufactures printed circuit board, cable harnesses and box builds. It caters to aerospace, defense and medtech industries, and the customer profile for this company is Honeywell Automation, Thales Global Services, ABB India and Bharat Electronics. Now around 20% of their revenues comes from the aerospace space. The defense contributes nearly 38%, 16% comes from the medtech, and industrials contributes around 25%. They have an order book of 2,400 odd crores, which has doubled from FY22 levels, and the management also said that the current contract value is 2 times the current order book. So there is order book potential of nearly 2 times from the current levels. For FY23, they have done a revenue of 800 crores with a EBITDA margin of 11% and a PAT margin of nearly 4%. The management did say to us earlier that they can do an EBITDA margin of 12 to 13% in the next 12 to 24 months. Now, when you compare the valuation with its peers like Keynes, Avalon and Syrma, which are again recently listed EMS players, it is still trading at a premium. For FY24 PE multiple, it is trading at around 90 times FY24 PE multiples, whereas Keynes, Syrma and Avalon are anywhere in the range of 30 to 60 times the PE multiple. So it's still trading at a significant premium to its peers.
Okay, all right. Talking about good listings, Idea Forge is seeing some amount of red in today's trading session after what was an extremely strong debut last week with an over 90% listing gain. But some news coming in on SpiceJet, where Sun Group has indicated that they hope SpiceJet complies with the Supreme Court order and pays them the interest amount of around 386 crores. They have denied the same and state there is no question of an amicable settlement with SpiceJet in view of the matter having reached finality by virtue of the order dated July 7, 2023 by the Supreme Court of India. So those are some updates which are coming in. But Surbhi, it is still with you. You're watching Sula Vineyards. That stock is in focus on account of its Q1 update.
That's right. So Sula Vineyards has reported a very strong Q1 update. Their net revenues were up 17% on a year-on-year basis. Their own brands revenue, that was up 24% at 104 crores. And Elite and the premium segment, that has contributed largely to the own brands revenue. That saw a growth of 30%. The wine tourism revenue was also pretty strong, was up 11%, came in at 11.4 crores. And the company said that they have seen a 70% jump in the visitor numbers in their winery, which is just outside Bangalore. So strong sales update, and also wine tourism business is pretty strong.
No surprises there, right? The wine tourism business very strong. Every time the management comes on board, they tell us about how good it has been for them and how things are picking up. But yeah.
It's not just wine, you know. I was looking at some spirits as well. United Spirits and United Breweries. United Breweries is sitting with a cut of almost 1.5%, maybe because the weather is supporting spirits more than just beer right now. United Spirits has recovered a goodish bit from the lows and currently moved to the high point of trade. And the other one is Radico Khaitan, which too has recovered from the lows and has seen a stellar run. They recently launched a gin product, which apparently is pretty good. I don't
Popular,
know.
yeah.
You can clearly say that, you know, people continue to be high on the equity markets as well, considering the SIP inflow data for the month of June continues to be robust. It's at over 14,700 odd crores, which is just about flat on a month-on-month basis. So that interest continues into our markets.
But you know, people have perhaps made so much money in the equity markets, they have to spend it somewhere, right? So
it works both ways, right? Those who lost will drink in sorrow, the ones who've made will drink in celebration.
Absolutely. Well, let's do one thing. Let's slip into a quick break. On the other side, Sonal will take us through expectations from the oil and gas sector in our special segment, Quarter Se Quarter Tak. Stay tuned.
Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
With the tech world normalizing, autonomous solutions and intelligent algorithms are transforming our society, one service at a time. As the computing era reaches a tipping point, find out what it takes to succeed in an AI world. CNBC-TV18's Young Turks travel to Silicon Valley to bring you definitive insights from the most influential leaders and investors. Young Turks at 21. Voices from the Valley. Only on CNBC-TV18 and CNBC-TV18.com. A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts.
Welcome back. Well, let's focus now on to our special segment, Quarter Se Quarter Tak. Sonal is here today to take us through the expectations from the oil and gas sector in Q1 of FY24.
Well, oil and gas stocks, they have been very excited ahead of numbers, and it is expected to be a decent quarter, at least for some of the segments here as well. First, the macros. Brent crude prices continue to be lower, 31% down on a YY basis, 3% on a sequential basis. This is at $78 a barrel. Even Singapore GRMs, they were lower. Big decline here, down 51% on a sequential basis. This is due to decline in cracks across most of the products. And that's why we'll see a decline in refining EBITDA for Reliance Industries, and that will impact numbers this time. Overall, Reliance's EBITDA is expected to decline 2% on a sequential basis and 1% on a YOY basis. However, the weakness in refining will be offset by strength in Jio and retail. For upstream companies now, like ONGC and Oil India, EBITDA will decline on a quarter-on-quarter basis by 8% on a sequential basis. It is on an average driven by lower gas prices because government had capped domestic gas prices at $6.50 per barrel versus 8.7 earlier. And also, as I said earlier, lower crude oil realizations will impact earnings. But star performers this quarter will be the oil marketing companies. Strength will be driven by their marketing segment, where over-recoveries will be reported by all these companies. Weakness in refining segment will be seen, but that will be offset by marketing, where petrol and diesel margins are anywhere between 8 to 9 rupees per litre. GRMs are expected between $7 to $9.9 per barrel, which is a sequential decline overall. However, EBITDA and PAT is expected to improve for all OMCs, both on a YOY and on a quarter-on-quarter basis. Now, for CGDs as well, like IGL, MGL, it will be a good quarter due to lower domestic gas costs, and for Gujarat Gas due to lower spot LNG prices. Margins and volumes are expected to recover, and 19% EBITDA and 25% profit jump is expected here. On to gas utilities, because they will also see good quarter on a quarter-on-quarter basis. For GAIL, quarter 4 was very weak due to one-offs, and hence quarter-on-quarter EBITDA is expected to go up by 10 times. For Petronet LNG, high Dahej utilization and high Kochi tariffs will also aid earnings, and lower spot LNG prices will improve earnings for the gas utility space, which includes GSPL as well. Now on to valuations. Reliance trades at 23.6 times and the PSUs continue to trade at lower valuations. ONGC at 5 times. You have IOC, BPCL and HPCL anywhere between 3 to 4 times. City gas companies between 12 to 22 times, where MGL is the cheapest in the space.
Okay, well, thanks a lot for that, Sonal. Appreciate it. So that's what you can expect from the oil and gas space. But let's tell you what's lined up today on our special offering on YouTube. Who moved the market? Surbi tells us what's on our radar. Surbi.
Well, guys, we all know the stock that's moving the market today is Reliance Industries, and the excitement is quite palpable. That's because of the expectations of value unlocking from two of Reliance's businesses. We're talking about Jio Financial Services, where things have moved a step forward. Now we have a record date as well. So we'll talk about that side of it. And then there is Reliance Retail, where interestingly, just towards the end of last week, Reliance decided to offer a buyback for some of the unlisted shares that are trading in the market. So how do these developments tie in with that value unlocking potential? What are the expectations on the street and some of the numbers doing the rounds? We'll get into all of the details. We are live at 2 p.m. Who Moved the Market, our digital offering on YouTube as well as on Twitter.
Smart money at these times.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. at these times, only on CNBC-TV18 and CNBC-TV18.com. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective. The commodity markets are in a bull run of sorts.
The market levels of volatility have been sustained at a heightened level that we've never seen before.
Where crude, sugar and metals are surging.
Commodities have traditionally been seen as a hedge against inflation. So we're seeing investors looking to put their money in commodities as an asset class.
Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Commodities react to demand and supply, production and government policies. We decode commodities for you on the impact from inflation and geopolitical tensions.
Get the complete lowdown on commodities from across the world. Commodity champions at these times.
Kotak Mahindra Bank. The stock is...
Welcome back. Well, there are a lot of cues which are lined up in the next couple of days. For example, HCL Tech will be releasing its numbers on the 12th of July as well. And separately, do watch out for the CPI data, which is going to be due from the US as well as India on the 12th of July. So the June CPI data from the US will determine how exactly the Fed would probably act in their next meeting, which would be at the end of July. Overall, for the markets, it's consolidating, you'd have to say, for the Nifty with a little bit of a positive bias. For the mid-caps, it's a little bit of profit booking, which is taking place. So under pressure currently for the mid-cap index. Bank Nifty also down around 0.2%. Well, with that, it's a wrap on Halftime Report. Business Lunch up next. Stay tuned.
.5%, and there is a big indication that maybe a large block is going to come very soon. CMS Infosystems, in the middle of the trade, the promoter entity, which is Barings Private Equity, they are the likely seller in today's block, and some marquee domestic funds are expected to be buyers. HDFC AMC, for a very long time, there is this anticipation of a large block deal coming soon.
Tune in to NSE Closing Bell as we spot deals before they happen, decode their impact on stock prices, and help you stay ahead of the markets. CNBC-TV18. Follow the leader. From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets.
Stocks gain powered by select heavyweights even as mid-cap slip today. Metals as well as autos lead gains while utilities and realty drag.
Reliance Industries powers the market higher after it announces a move to acquire third-party stake in Reliance Retail at a hefty 1362 rupees per share and sets July 20th as the record date for allotting shares of its financial services arm.
Vedanta Group does a U-turn on its earlier plan to keep its semiconductor and display businesses out of the listed company. Vedanta Limited by transferring the ownership to it at face value. Now this even as it eyes money from Hindustan Zinc as dividend.
The Securities and Appellate Tribunal refuses to stay SEBI's order against the promoters Subhash Chandra and Puneet Goenka. The tribunal gives them 2 weeks to file a reply with SEBI.
And mutual fund data for the month of June shows an equity inflow of around 8,200 crore rupees. 2,000 crore rupees are pulled out of large caps as a record 5,470 crore rupees rushes into the hot small cap space. SIP contribution holds rock steady at around 14,700 crore rupees. Hello and welcome to Business Lunch. I'm Nisha Podar and with me is Pavitra Parekh. Pavitra, welcome back after a break. And look at the markets. Yes, at the moment, Nifty 50 is showing signs of green. 0.25% up. But if you really take a look at the contribution chart, the big news announcements coming in from the heavyweight Reliance Industries, which is up over 4%, is really adding 90 points to a Nifty 50, which is gaining by about 50 odd points. So sans Reliance Industries, big move today. Nifty 50 in weakish territory it would have been. So take a look at that. While we look at the other pockets of the market, well, Bank Nifty is also in the red zone, 0.25% down in trade at the moment, and mid-caps are also seeing profit booking from the kind of rise in euphoria that we had seen earlier. So even though Nifty 50 opened above 19,400 levels, at the moment finding it difficult to keep up with that. Apart from Reliance, well, Tata Steel, HDFC Life, Bajaj Auto, Bharti Airtel are some of the percentage gainers on my screen, an advanced decline ratio in favor of the declines. Pavitra.
Oh, absolutely. Like you said, Reliance really doing a bulk of the heavy lifting, right, for the market today. But one other space that, stands out is the entire auto packs. You have a lot of the larger names doing very well in trade. Bajaj, Tamo, all of these are some of the top gainers. But even outside of the index, you have a lot of the ancillary companies which are doing very well. So names like Electra, Talbros are all doing very well. You have all of the tire makers which are up and about in trade. So do watch for those. Insurance is another green pocket today. So names like ICICI Pru, HDFC Life, these ones are seeing some good gains come through. So you have around 3% on ICICI Pru, so looking quite good there. Tech definitely is the one which is under pressure today. All of the tech earnings start this week, so ahead of that you are seeing some cuts in that space. That is what we're tracking in terms of market-specific action. But let's now talk about some individual news stories that came through. We just got the news on Z as well around an hour ago. And the SAT has refused to grant an interim stay on SEBI's order against Puneet Goenka and Subhash Chandra, which barred them from holding directorship or key managerial positions at the listed entities. So essentially, they've been given 2 weeks in which they have to reply. Yash is standing by with all of the details on this one. Yash.
Well, disappointment coming for both Puneet Goenka and Subhash Chandra from Securities Appellate Tribunal. The tribunal in its order today has refused to grant stay to both these parties against market regulator SEBI's order, which restrained both Puneet Goenka and Subhash Chandra from holding any position of directorship or KMP in any of the listed entities. Now that order from SEBI just did not concern Zee Entertainment, where Puneet Goenka is the managing director and CEO, but it also concerned the merged entity between Zee Entertainment and Sony, where Puneet Goenka is to assume the position of managing director. Market regulator SEBI's allegations for around siphoning of funds and diversion of funds of about 200 crore rupees. According to SEBI, a sum of 200 crore rupees was lent to about 7 entities which are in question. This money was supposed to be repaid back to Zee Entertainment, but instead of that, what happened is Zee Entertainment, through multiple layers of transactions, paid various vendors. These vendors in another layer of transaction paid that money ultimately back to these 7 entities in question, which then repaid it back to Zee Entertainment. Net, according to SEBI, this was fund diversion. There were bogus entries to support these transactions, and net, no money was repaid back to Zee Entertainment. The Securities Appellate Tribunal acknowledged this argument, refused to grant stay to both the entities against SEBI order, also asked both Puneet Goenka and Subhash Chandra to file their reply before market regulator SEBI within the next 2 weeks, and then SEBI decides whether to vacate its order or not. Interestingly, in the last hearing of the merger matter at NCLT, Puneet Goenka's counsel had said that Puneet Goenka, as the MD or not in the position of MD, the merger process should continue. Now, it is really interesting whether in today's hearing at NCLT in the merger matter, the tribunal takes acknowledgement of that argument from Puneet Goenka's counsel, or it gives more weightage to SAT's order today and postpones hearing by, let's say, a couple of weeks.
All right, Yash, a very important story and 2-3 important takeaways. NCLT matter being heard today, and it was supposed to be the final hearing. The councils have tried to distance the matter of SAT with the merger approval. Whether that goes down well at NCLT needs to be watched very closely. But Zee Entertainment holding above 200 rupees per share despite a setback with the SAT order. Let's move on to another stock of the day, and in fact the top Nifty gainer of today, Reliance Industries, as it approves a buyback of the non-promoter shareholding Reliance Retail at a price of 1,362 rupees per share. Now also announces the record date for all allotting those shares of its financial services arm. That's a big development today, and look at the stock price. Sonia is here with all the details of this big move. Sonia.
Well, Reliance Industries is undoubtedly the biggest gainer today and is very close to its all-time high of 2,755 rupees. First, let me start with the news. The board of Reliance Retail has approved a reduction in the equity share capital of Reliance Retail with a consideration of 1,362 rupees per share. Now, the other piece of news is that July 20th has been fixed as the record date for the demerger of Jio Financial Services. Let's try and understand the implications of both these pieces of news. Now, Reliance Retail's decision to reduce their non-promoter shareholding is a big positive for Reliance. Remember, brokerages had ascribed a value of 900 to 1,000 rupees a share in their SOTP, while the actual consideration is much higher at 1,362 rupees a share. Also, Reliance Retail's buyback is expected to be a precursor to the IPO, the eventual listing of the consumer business, and a part of a larger succession plan. As per Bloomberg's data, Reliance Retail's SOTP expectations ranged anywhere between 850 to 1,000 rupees a share, and this is a big positive. So, these are the brokerages that are up for you on your screen. There's JP Morgan, HDFC Securities, Daulat Capital, etc. Now, brokerages continue to be bullish on the stock. So, since we were talking about JP Morgan, let's get their view on board. They have an overweight with a price target of 2,960. They say that the valuations of Reliance Retail at $90 billion are sharply higher than the implied equity value at which the stakes were sold in RRVL way back in 2020. Let's talk about the other piece of news, which is the Jio Financial demerger. The Jio Finance demerger record date has been announced as July 20th, post which the company is likely to list. Now, the strength of Jio Financial Services also lies in the credibility of the people they have hired. Hitesh Sethia, as we know, has been appointed as the MD and CEO of Jio Financial Services. Sethia has a great track record. He has over 2 decades of experience in the financial services space, largely with ICICI Bank, which was where he served his last tenure before joining Jio Financial Services. Let's take a look at some numbers. JFS will be infused with 6% of Reliance Industries' treasury shares. This implies that Jio Financial Services will start with a net worth of $13 billion versus Bajaj Finance at $7 billion. Once Jio Financial Services is infused with the 6% Reliance treasury shares, it will be the largest NBFC in India in terms of net worth. Back to you.
right, so all right, that is the complete, a piece on Reliance right now, how things are moving, and the stock, like we mentioned, top gainer on the Nifty right now. But with that, let's also move on to a CNBC-TV18 exclusive and bring you some very interesting opinion. M&M has not appointed a banker to commence fundraising for its EV unit. Mahindra Group MD and CEO Anisha told Shireen Bhan just a short while ago. He says that the automaker is not keen on diluting a lot of stake in the EV business. Here are some interesting snippets from that conversation.
We have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group. And they were very interested in EV. And we said that we have enough capital. We are generating enough funds in our auto business. So we really don't need it right now. BII has come in with a 2.5% to 3% stake. And we may look at another 2.5% to 3% stake at some point in time. Coming to Tech Mahindra specifically, we are below on margins, and therein lies the opportunity. Similarly, in Tech Mahindra, we feel that there have been a lot of good wins in expanding beyond telecom, in having new accounts, large accounts come in. There needs to be a lot more work done on margins. And Mohit Joshi, as he comes in as a new CEO, working closely with CP as the outgoing CEO, will work together to address that. And we feel that we know today what needs to be done. It will take time. It's not going to be overnight. But I would give it a 2 to 3 year horizon.
All right, that is the word from the M&M management. Remember, you can catch that full conversation on our special show On the Record later this evening at 5:30 p.m. only on CNBC TV18. But with that, let's move on and talk about another exclusive now. Homegrown ice cream brand Vadilal gets a buyout interest from a bulge bracket private equity firm. Nisha, you've been tracking this and you have all of the details on this. So take us through what we know.
You know, not just summers, even in monsoons, we love our ice creams, and looks like Bain Capital is exactly like that. Because what I've heard from sources with direct knowledge, and a few sources have independently confirmed to us, CNBC TV18, that Bain Capital has had talks with the Vadilal Group promoters to buy a controlling stake in the ice cream maker. Now remember that there are 3 different entities which combine together to make the full business of Vadilal Group. There are 2 listed entities, Vadilal Industries, which looks after the production, the manufacturing of frozen food and ice cream. Then there is Vadilal Enterprises, which sells and markets these products. And there is Vadilal, the brand, which really creates that magic for this group. That is held with the promoters, for which Vadilal Industries had taken shareholder approval to buy out that brand. All these 3 entities merged together have the combined business of Vadilal Ice Cream, and that's what Bain Capital is interested in buying a controlling stake in. Now, this is not the first time that the promoters have really looked into and explored a sale talk. Upward, their private equity firm and the vertical had also spent a lot of time, and Upward had, as per our sources, given an offer to Vadilal Group to buy out the company. Well, those talks got delayed as per our sources because of the promoter disputes going on, and that's one of the reasons which has been the risk factor for this deal. But now I gather that Bain Capital has offered a much larger valuation. It is over 3,000 crore rupees is what we gather. These are the initial talks that we are hearing about, and Bain Capital will be interested